by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I...
Okay, funny story. I thought I had started the broadcast about 3 or 4 minutes ago, and I was yammering on about this and that, and realized after I had started the video that I had not started the broadcast. So good morning from wherever you are. Good morning, good evening, good afternoon, konnichiwa, whatever. We are here now broadcasting live, apparently. If you can hear me, go ahead and give me a thumbs up. I can see there are many people out there already. And I want to say hello to everyone that joined us for today's live presentation, our 8-hour spectacular extravaganza summit. And I know you guys are going to love this. We have a myriad speakers today. I'm Greg Lewis. I'll be here in the control room. I'm the marketing director here at Metastock. Today's host will be one Jeff Gibby, our very own Jeff Gibby. And the speakers will be, Rahul Mohindar, Jeff Gibby, Oscar Carboni, Hima Reddy, Vince Vora, Peter Dalal, Guy Cohen, and Kurt Christensen. So it's quite the lineup today, and I know you guys are going to love it. Hey, if you could give me a big thumbs up so I know you guys can hear me, that would be awesome. Okay, so the main presentation starts in about 4 minutes. Normally, so we're simulcasting right now on YouTube and go to webinar, and normally I edit out this part in the beginning, this first 10 minutes, but for some reason with YouTube, when you record for 8 hours, they won't let you lop off the beginning. So if you're watching this later in the recording, don't hesitate to just fast forward to when that little counter shows 0, and you can see the start of the main presentation. So we've got about 3 minutes to go. I think Jeff is good to go over there. I was going to play video, but I think that runs too long for it to start, so I don't think I'll do that. If you haven't heard of Metastock, we are purveyors of charting software and market data, premium market data for active traders just like yourselves. And if you have any questions today at all, don't hesitate to chat them in here on YouTube into the box, because Jeff monitors that, and if the speaker's not necessarily monitoring the YouTube chat, he'll pass that information along, or he'll chat in the answer to your question himself, or I will, or whatever. But just be very non-hesitant to chat on in anything, thoughts, comments, questions, positive or negative. Just try to be nice to the other players. And we'll be starting, like I say, in about 2 minutes and 40 seconds. Let's see if there's something else I can think of. Oh, here's another thing. If you haven't registered for this, so you can watch this and get to a webinar or YouTube. Basically the same experience. But if you haven't registered, go ahead and go to metastock.com/traders-summit, or just go to metastock.com, and on the top right now there's a header for the banner for this summit, and go ahead and register there. And the reason you want to do that is because then you get to take advantage of all of the free stuff that the presenters are offering today. And you'll hear them discuss that throughout the presentation. Anytime you want to take advantage of that, just go to metastock.com and hit the summit on the top. I see Rahul's joining us already. Hooray. And that's that'll get you all set up. Also, while I'm on the issue, please go ahead and like and subscribe. We have in excess of 60,000 subscribers to our YouTube channel right now, and we love having you guys come along, and it really makes it a great experience for us. And go ahead and make sure you like if you liked it. If you didn't like it, don't like. But go ahead and hit that bell so that you'll be notified of all presentations coming up in the future. And we have usually about 2 live presentations a week. So, got about 1 minute left. I'm going to go ahead and make sure that they're good to go over there, and I'll start the presentation here in about a minute.
or a second. Anyway, hello, everybody. Jeff Gibby over at Metastock. I hope you're doing well. Good morning, good afternoon, good evening, whatever it happens to be for you. I hope you're having a good day. It's very rainy here in Salt Lake City today, and I know you didn't come for the weather. Let's read a legal disclaimer, what you did show up for. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, techniques presented today should only be used by investors who are aware of risk inherent in trading. Metastock shall have no liability for any investment decision based on the use of the software, any trading strategies, or any information provided in connection with the company. Anyway, I hope you're doing well today. Thank you for coming. I do want to say real quickly before we start today, I want to say thank you to Stocks and Commodities for sponsoring today's event. They've actually been supporting these trader summits that we've been doing, if you can believe it now, 9 years in a row. They've been supporting us ever since the beginning. They're a great partner. If you're listening to us on YouTube right now and you want to get a free issue of Stocks and Commodities, go register at metastock.com/trader summit and you can kind of get a free magazine. Also want to thank a new sponsor of ours, the CMT Association. The CMT Association is actually one of kind of the most renowned associations in the world for the chartered. It's called Chartered Market Technician. They do basically risk management, systems development, portfolio management, and applied behavioral finance. So we really appreciate them for sponsoring us, the event, helping us get people here, and it's a great organization. You should check it out. Our first guest today, as you can see, is a good friend of mine, Rahul Mohindar. Rahul actually has been a partner of Metastock for longer than I've been an employee of Metastock, which in March will be 25 years for me, and I think it's 27 years or so for Rahul. I have to do the math on myself anymore. It's been so long with Metastock, but Rahul is a good friend of mine. One of the, and I tell everybody this, one of the very first methodologies I ever started trading with, real money, was the Rahul Mohindar oscillator. And so I owe a lot to Rahul. To give you a little bit of background on him real quick, he actually runs a company called Vora Tech India with his brother and his dad. He is on CNBC quite a bit. He's one of our best dealers in the world, and he teaches people how to trade in India, and he does a fantastic job. So that's the introduction you get this morning, Rahul. I hope you're doing well. How are you this morning? What time is it? Where, are you in Dubai or India right now?
Well, Dubai, and it's 6 p.m. here, so pretty good.
All right, cool. That's not too bad.
Missing all the rain for sure.
Yeah, for sure. All right. Well, we're glad to get it. It's been very dry here. I just put the presentation over to you.
Yeah.
I can see it. I'm going to get out of the way right now. Your turn.
Thank you so much, Jeff. So thanks for that kind introduction. And I think all I'll add to that is, above all, one is talking to you from the shoes of a trader to a trader, investor to an investor. I pretty much put my own money on the markets, and that's what I enjoy doing the most. But I think today what I'm here to show you in this short period of time of just about under 1 hour now is how I would, in a very crisp way, recommend you use the RMO and my add-on, the RMO ATM 3. We've done a lot of updates recently on the add-on as well, which have really been well received. But above all, how do you use the inbuilt RMO, which is inside of Metastock, and how do you, make the most of the RMO ATM and give you some subtle, quick ideas as to what's the right way to go step by step. So, I'd call it literally today's session as an express course, kind of running over the key highlights and things you must use. So when I'm talking to you about these rules today, I think these are probably tools I use the most, recommend the most, and I'm sure you'd make a lot out of today's session, be it someone using the program for an end of day trading profile or even a real-time profile. So what matters is, how are we doing in terms of deciding what the trend is? And this is where things get really simple for us with the RMO. The RMO is an inbuilt template inside of Metastock. Any version of Metastock higher than version 10, I reckon, would have the RMO inbuilt. So what I'm talking about right now is the RMO trade model. And to simplify it, the RMO trade model would help you understand if the market's got a primary trend up or down. Conventionally, we use various indicators. This chart that you see over here has indicators like the MACD and the RSI, and nothing against any indicator. But what happens is it becomes a bit of a mix and match process. And where I think a lot of us tend to get lost is we believe the indicator that we really desire to. It's not something where you're necessarily doing a perfect coordination each time. So let's say if you are tilted to the buy side and you have 2 indicators on the buy side and 3 not on the buy side, our mind and our hearts would lean towards taking the view of the buy side. So, it becomes a bit of a subjective process when you're manually mixing and matching. And I think for us to be successful in trading, we've got to take out the subjectivity. You've always heard the bit about, can we take out emotion? Can we look at the markets from a holistic view? We keep hearing, elements like that. But really what I'm trying to say is on this same chart where the market's probably going higher and higher and higher up, you are seeing an RSI which is diverging. You're seeing a MACD which is giving you maybe 5 or 6 downward crossovers. Now, the point is the market only went up despite having downward crossovers on the MACD or negative divergences on the RSI. So, we need to automate this so that A, detecting the direction should be very easy, and B, we shouldn't get confused between what different indicators are saying. So when we're looking at the RMO, that's the green histogram that you see on this chart. This is an extract of an end-of-day chart of Apple. You can see the RMO, the green histogram, is above the value of 0 ever since the last couple of years. And you notice that the only thing that we need to be doing is buying the stock. In other words, wherever we get a buy signal, wherever you get blue bars, buy arrows, these are all coming automatically when you apply the RMO template. You are really focusing on where to buy. You're not looking at where to sell, because where do you think of selling when the RMO is below 0, when the primary trend is below 0? So to simplify, if you see that green histogram above a value of 0, primary trend is up. If you see it below a value of 0, the primary trend is down. And if the primary trend is down, what do we mean? We mean that over the slightly longer term frame, not just the immediate 5 or 10 bars, a longer term frame, let's even further define that 60 bars or more, 60 bars or more. If you're looking at, a slightly larger profile, the bigger picture is positive if the RMO is above 0. And if the RMO is negative, in other words, got a minus value on the RMO, you're looking at a bearish trend. So if the RMO is above 0, you really want to be tilting towards following where have I got blue colored bars on the chart, where have I got arrows pointing up. Those are going to be signals and points for me to enter into an already strong trend. So when you see the RMO, it's very simple. We're not studying the size of the histogram. We're not trying to study the shape. And this is where a lot of us try and overinterpret things. We're looking at how that curvature looks, how's the slope looking. And I'd caution you from looking at the RMO as anything but a very objective histogram that tells you, look, hey, if it's above 0, I'm bullish, below 0, I'm bearish. Now, why do we give you that histogram? Sometimes when you see we kind of are starting to approach closer to that 0 level, you should get sensitized that, okay, in case there's a shift from a bullish zone to a bearish zone, you're able to take that trade. So you understand that shift, which is why we're putting it clearly in that histogram format for you, is to realize how close are you to 0, or how close are you to a potential point where maybe the trend could even change. So how do you apply it? It's the inbuilt RMO that I'm talking about. Mind you, this is not an add-on. This is inbuilt into Mentorship. You right-click, apply template. RMO trade model is what you're going to apply. And that's how you get all the 3 elements, the arrows, the bar colors, as well as the RMO histogram. Now, we say the RMO helps establish the primary trend or the longer term trend. And I think we all need to understand that trading in the direction of the primary trend will obviously give us several advantages. And the most important being that if you are trading in the direction of the primary trend, it increases our odds of winning. For example, if Tesla has an RMO above zero, or Apple has an RMO above zero for the last 1 or 2 years on a daily frame. The only thing which you and I should have focused on is where to buy those equities. And if you had done that, we all know that we would be doing fairly well. And that's really because the stronger force, the longer term trend direction, the bigger picture is what we focused on, right? So we're really looking at these advantages that, it's like saying the river's going upstream, try and go upstream as well. Don't try and go against the tide. It's going to be much harder for us to become successful. It's someone who's trying to top pick in a bull market. And we've seen what people have gone through over the last 1 or 2 years of this rally. People have really got caught on the wrong foot, attempting to short. Sometimes you may get lucky, get that sharp intraday dip. But on the whole, if you are really attempting to look at, making money, it's always going to be easier if you're in that primary long-term direction, and that's what we're trying to tell you to do. So when you look at the RMO template, you get a couple of elements there for you. Right on top is that green RMO, which is the histogram, which I'm talking about, being above zero, below zero. And then there are the internal indicators, which help calculate the bar colors and the arrows. So in other words, this study is really blending in short term, medium term, and long term. So what happens is a lot of people tend to change time frames when they trade. I keep getting the question that, look, should I look at the 5 minute? Should I look at the 15? Should I look at the 30-minute? There's no end to it. My point is, look at any one time frame that you feel most comfortable with, which you can be in tune with, rather than looking at different time frames. Focus on one time frame. Let your indicator template handle the short-term and the long-term elements on that one time frame. It's the law of focus. If you want to look at the 15-minute and trade the 15-minute, I'm absolutely fine with it. But the point is, let's be loyal to that 15-minute. Let's give it a good chance. Let's follow the same rules 20 times in a row and then say that, okay, I'm 14 out of 20 correct, or whatever that number has to be. So that's really where I'm coming from. To get the consistency, same rules, same stock, same time frame. Don't switch the time frames or the stocks too much. That's another very important element to be successful with any system, because what tends to happen is you started by looking at a 15-minute chart, and when you start going wrong, we start switching the time frame. And I keep telling users, most of us, including myself, in my heydays, I always realized, and I thought back, why am I changing the time frame? Why am I suddenly from a 15-minute going to a daily and a weekly? Why am I ready to go that far suddenly? It's because I feel threatened, because maybe I'm coming close to my stop. And that's where the problem starts. We usually switch our time frame not to confirm, but to kind of console ourselves sometimes when we're approaching a loss. So bear in mind that we need to use the RMO in such a way that you give it a fair chance. You not just give the RMO a fair chance, you give yourself a fair chance. Because most of the times when you go back in history, I keep seeing, 7 out of 10, 6 out of 10, 8 out of 10. Yes, we're kind of getting those numbers. But, was I able to do it? Was I able to handle it? No, because in the past, everything looks good, but, forward, it doesn't work out for me. And the only reason that happens is probably it's us, it's our own elements mostly, where we are not consistent with the same system, the same rules, the same stock. So look at this chart here. Let's talk about the three elements again. The arrows are what are indicating the short-term trend. So these arrows that you see on the chart are all the blue arrows that you see are all indicating that the short-term trend is flipped up. The medium-term trend is identified by that pink histogram. These are the swing trade 2 and 3 indicators which are put in. You don't need to be focusing on the swing trade indicators because the experts are automatically interpreting it for you. So the good bit about Metastock is it's doing the interpretation for you. These bar colors, the arrows are coming out automatically for you. I'm just trying to explain to you from where it's being generated. So those swing trade indicators are generating that. So the bar color that you see, the blue colored bar or the red colored bar, indicates a medium term trend. So typically over here in the beginning, you got the arrow, and then subsequently you got the bar color moving from a red to a blue bar. And that indicates both short and medium term have aligned. And finally, what you could also check is the RMO also above zero. You can also look down at the x-axis ribbon. Just look at that strip at the bottom. That also tells you RMO bullish or bearish. So for those of you who are new to it, what we're looking for is a synchronization of short term, medium term, and long term coming in agreement. The short term is the arrow, the bar color indicates the medium term profile of the market, and the longer term primary trend direction is denoted by that green histogram, which is the RMO. So it's quite complete as a system. And, mind you, I built the system really for my own trading to start with. And as I started sharing it with users, I got some amazing feedback. And, that's how things moved. And finally, Scott Brown jumped in and said, hey, we need to give this to users. And that's how it was all born. So the whole idea is to give you a system that's fairly complete, handling this whole multiple time frame, multiple profile horizon for you, rather than you're having to toggle between different time frames. So I belong to the school of thought is focus on a few stocks, focus on the same rules, focus on the same quantity, same rules. Let your indicators be strong enough and solid enough to handle short, medium term, and long. So how do you accelerate even better? Do you go about like an absolute machine saying every time I get a blue arrow and the RMO is up, I'm going to buy? No, I would like you to kind of make this a little better for yourselves by saying, wherever I get a first breakout, and let me define what's a first breakout. A first breakout is wherever you are at the point where the RMO turns from bearish to bullish the very first time, or vice versa, from bullish to bearish the very first time. That is exactly the point where you and I want to take the trade. So it's that first turn, the first signal. The rest of the signals that you see, wherever you see the little vertical line, the horizontal lines, they're all pointing to, add-on signals. So the arrow over here, the arrow in the middle of the chart, you got three of them over here. These are all pointing to add-on signals. Why are they add-on? It's really not coming after a big drop or something. It's not. It's already in a bullish zone, the RMO, and you're just getting an add-on into it. So at times you'll see that the red bars start coming. You got the red arrow, but this is not good enough for you to go short. For you to go short, you also want to see the RMO dip below zero and go into a negative zone. So let's keep it very simple. You can really crisp the rules up as to when am I buying. When I get a blue colored bar, which indicates the medium term strength is up, when I get an arrow confirming the short term signal, and the RMO is above zero. Ideally, we want to buy on the first breakout and not the add-on breakouts. Now, you may say that, what if I was not part of that first breakout? Well, obviously, then you can come in on the add-on. But remember, the most meaty, the most potential, the most probably, I'd say from a risk reward perspective as well, will be a lot better if you try to work with a first breakout. Whenever you take a trade on the add-on or the first, try and use a stop of the immediate swing low. So what I've marked out over here, these little horizontals which I've marked, is after I see a buy arrow, I look back 4 or 5 bars and see where's the immediate turn point, where's the immediate swing low. So you could use something like a 5-bar low point as your stop to rotate from whenever you buy. So to recap, these are the 3 things which I talked about. A buy arrow, which is the short term, blue colored bars, which indicates the medium term, and the RMO, the green histogram, being above zero indicates strength. Finally, we decided that we want to work with the first breakout. In this case, you see 2 vertical lines. You want to look for the first breakout, which is this point, the first vertical, because that's the point where the RMO turned from bearish to bullish for the very first time. How do I know that? I don't even have the indicator open, but if I look down at my x-axis, you're able to see that bearish has gone into a bullish. So that's what is very relevant to me, that you are looking at that change, and that's exactly what you're going to be understanding, that is a first breakout, and that's what I want to do. Can I look for these automatically? Can I scan for these? Yes, you've got a lovely explorer inside of Metastock, which can find out either you got new blue bars, or you've got a new arrow on it, or let's say if you're using the ATM, we even have a scan which is called the integrated 3D buy setup. So in other words, everything that I just talked about, you're trying to look for the first breakout. You're trying to look for a point where it's just moved from RMO bearish to bullish. This is all possible in our new integrated scanners. So you really have scanners which will give you stocks which meet all these criteria, and you are ready to trade on them. Mind you, I may be rushing through today. It's a bit of an express course. There's a lot I want to cover within these 60 minutes, but I will try and set aside the last 5 or 10 minutes for Q&A, and of course give you some links to resources that you can also access. So jumping ahead, the sell side. Whenever you're going short on the market, you want to make sure the RMO is in a negative zone or below zero. So if the RMO is below zero, you're really looking for now downward arrows or red arrows, and you're looking for red colored bars. So if you have red colored bars, that's an indication that the medium term trend is negative, and therefore that's the point you're going to be trying to short the market. Now, whenever you get a buy signal, you want to always use a trigger, buy or sell. So in other words, the reason I brought this up for you is at this point where you have the dotted vertical, notice you have a blue colored bar. The arrow came in a lot earlier. But why have I marked this particular point? Because this is the point where you can see the histogram went from a negative region to a positive region. So look down at that x-axis and you can see that. But does it go above the high of that bar? It doesn't. So usually, as I always say, is whenever you get these rules, the easiest confirmation is buy above the high of that signal bar. If it doesn't clip the high out, it doesn't really trigger. So you must qualify your entry. Don't just spot the entry point. You must qualify it. Look at it going past that high. Maybe if the previous bar is a little higher, use that. But make sure it's qualified. Make sure that high is taken out before you really call it an entry. So don't get over mechanical about it. The way you can make this work so much better is when you try and focus on first breakout, when you put in that rule of trigger that, look, I'm only going to buy if the high of my signal bar gets broken out. That's the point where I want to buy. If I'm going short, I'm going to sell below the low. So let's say if I'm looking at this arrow over here, why this low? I probably use this previous bar's low and say, okay, whenever it breaks that, why am I selling? It's a red colored bar. I got the arrow. And if I look down, my RMO is negative. So you can clearly look at, going long and short in a very mechanical process. But I think where you come in very handy is the fact that you can filter them out by using a little trigger to qualify, like buy above the high, sell below the low. That's a very simple trigger, very simple confirmation that you can put in. And finally, and looking at the element that is this a first breakout or not, I think that's what makes a very meaningful difference. So often you would see that, you have a big fall in the market, but the RMO didn't give you a sell. Now, this, for example, is a chart where Microsoft had a big collapse down, and you did not see a sell signal because the longer term trend, the primary trend, continued to be solid. So the idea is the RMO really an oscillator which is trying to give you every minuscule high and low? No, it's no stochastic at all. It's no short-term profile that we're looking at. As I told you, we're trying to look at where the long term is established and trading in the direction of that long-term trend. And thankfully, we didn't sell at those levels, because even if you got the signal, we did not break the low. And I think this is where we all realize that this is so important for us as traders. We need to be using that low point. We need to be using that as a trigger point, to fire in those trades. Now, the point is, if you feel that, no, that's too big a move to miss, why should I use the RMO? Well, there's a whole suite of indicators we have on offer within the ATM, which doesn't make you wait that long, which is not necessarily just longer term focused. Maybe you want to even use a lower term, a shorter time frame rather than a daily chart, if you're looking at getting much faster signals. So again, I'm going to recap for you. The little rectangular box that you see over here is the first time we saw the arrow and the blue bar come in, which means you could sense that the short term and the medium term has switched up. But why would I not buy above the high? Because the RMO was still bearish. You waited up again a little bit and you said, look, this is a point where now the RMO is bullish. Can I now attempt this trade? Well, you could attempt this trade, but where would you like to buy? Ideally, I would say, look, try and buy wherever you got the blue bar, the arrow, and the RMO. Look at the highest of the three. Which bar's high is the highest? This one. So whenever it clips that out, which doesn't happen again. Again, over here, why is this the bull point? Why is this a signal that works? Because it's the first time you got the blue bar, the arrow, and the RMO bullish, and this time the high is clipped out. So just using this simple rule of wait for the high to get clipped out. So I want to even clarify again, which high? So let's say the arrow comes on a particular bar, the blue bar comes on a second bar or a third bar, and then the RMO goes up a little later. Try and use the highest point of these three bars as your entry point. Usually it's not so difficult. It usually sinks in very quickly. Like you can see over here, you got the bar and 2 days or 3 days later, it just flips out. But in case there's a wait period, well, you've got to wait for that highest point to be taken out. So subsequently, whilst the market has been bullish, every arrow that you've seen, if you observe April, May, June, and July, why have I put those, frownies over there? It's really because these add-on signals, had I used them as add-on buy trades, you may not have necessarily been very satiated or happy. It's not like it didn't go up, but it didn't really give you as much as the first breakout. And this is where I'm coming from. You're buying much higher, it's riskier, and obviously the market's already run a good distance. So the add-ons are really add-ons, and you've got to keep that in mind. I think you and I should come to a point where we say, look, I'm going to focus on first breakouts rather than add-ons. So let's kind of recap the inbuilt RMO. First or add-on? Prefer the first always. Trigger with a filter. Buy above the high or sell below a low. Stay disciplined with the rules. As I told you, it's very important that you stick to the same stock, the same time frame. Do it 10 times in a row before you conclude. Is it 6 out of 10 for you or 7 out of 10 or whatever that number is? The other tools you can definitely use is, look, any signal, if it's confirmed by volume, is always an added confirmation. And finally, Fibonacci. For those of you who use Fibonacci, you may want to use those support and resistance levels as a guide as well. Do you have to use it? No. The RMO was not designed around Fibonacci, but I'm trying to tell you is that you can use more price and volume confirmation tools to it if you're trying to better it. So here's the fun part. When you have the ATM, you don't need to run an Explorer. You can see exactly over here an entire column which is going to shade the background as green or red. If it's green, it means the RMO is bullish. If it's red, the background shows the RMO is bearish. So within this list of, say, 25 odd symbols which I have, and mind you, this is running on a 5-minute, this shows you, and this is not live, I've just taken a screenshot from a past episode, but it just shows you that the bulk of the market, 70% of the signals or 70% of the symbols that I have on my list here are on the bullish side. And you can see these building blocks turning because it would segregate for you. Anything where you have a new 3D buy would come right on top, where you just, so here these are stocks where you just have the arrow or the new bar color, but a 3D buy is what you're looking for. In fact, if you have a 3D buy with an arrow next to it, that's even more solid. So look, think of it as this. Here, if you look at these signals, a 3D buy or a 3D sell, look at the ones with the arrow. The arrow indicate that these are stocks which are first breakouts, right? Just a 3D buy is an add-on. But the good part is it's synchronizing it for you. It's trying to kind of help you, not just finding you the synchronized symbol, but the arrows also point out to you where exactly these buys and sells are. So just to recap, the ATM Power Screener is a desktop application which is usable for all of you who subscribe to the ATM add-on, and you can run it on both end-of-day data as well as online data. It syncs seamlessly for online data. For those of you on end-of-day data, you just need to download your data once and configure as to which folder you're in. So it's a one-time 10-minute process of configuring where you download your data, and it would automatically do this calculation. And this is just the RMO. We've got a whole suite of ATM indicators. It would scan it for you. In fact, it can even scan based on MACDs, candlestick patterns, moving averages, RSIs. uh, it's beautiful. It's a scanner that runs hands-free, effortless. You don't need to even run an explorer. So that whole bit of, will I miss the signal? You cannot miss it. It even fires an email alert to you. It even gives you a voice alert where it actually talks to you and says, buy on CAT or RMO 3D buy. So it would actually voice it out to you. So it gives you a voice alert, it gives you an email alert, and it even comes right on top of your list, courtesy the auto sorting feature. And mind you, you can set it on any symbol list of your choice on any number of time frames you want. So you may say, I want to scan only these 50 stocks. I want to scan them on a 30-minute, or I want to scan it on a daily, and it would just work to your custom list and time frame. So the beauty is it can do everything in sync. So remember, the ones to look for are where you have the arrow, because the arrow helps you understand that those are first breakout points. So why do I call this intelligent block sorting? There's sorting which gives you the top 2 or 3 which have actually some text written on it, so that you can go in and read that text and see if it's relevant to you at this point or not. But really what you're looking for in terms of text is that RMO 3D buy with the arrow, or just even the RMO 3D if you're looking for an add-on. But the block sorting tells you the condition of this market. And mind you, again, this is not live data, but on this past data, it shows you that again 60 to 70% of the market is in a green background, which means the RMO is bullish, and there's just 25 to 30% which is in that red background. It tells you the condition of the market on that interval. So it's beautiful when you start looking at it continuously. You kind of get tuned to it, and you'll probably be able to gauge that, okay, this is what I saw a couple of hours ago, and now the tilt is more towards the red, and that's where you understand the market shifting, right? So you can really get used to looking at this and train your eye and find the best signals right on top, rather than manually scanning, manually opening the chart, trying to figure it out. So there's no cribbing really, that how will I find the signal. There's no toil and labor. It's all about, you get the hottest symbols, the hottest signals right on top. All you need to do is go and open those charts and put the numbers in, right? And qualify them. Maybe you want to qualify it with volume, or other tools and indicators you like using. Now, if you do like running Explorer, and I totally appreciate the Explorer is a very powerful tool, you can definitely run the Explorers too. We've provided that. Feel free to go ahead and use them. There are Explorer notes available to you. Again, mind you, ATM is only available if you have the ATM studies. You'd notice there's last one over there is called Super Filter. The Super Filter is a further refinement on the RMO. So the RMO would really need to be tweaked up based on the behavior of a stock, and that's where the super filter comes in, where it doesn't work to a static value, it works on a dynamic value. So when you look at theory, you see a perfect trend where you can draw a trend line, and I wish if it was that easy. We would always love drawing the trend line like that, peak and trough, peak and trough. But when you start looking at the real market, it's always a jagged movement, and you say, when I'm trying to draw that line, I don't know which one to even connect. So there's a lot of twisting and turning that you need to do. And this is what I say, you need an indicator which adapts to the volatility of the equity that you're looking at, the volatility of the symbol you're looking at. And that is exactly what the super filter does. Now, what is a super filter? It's a super filter, meaning it further filters out the already very successful RMO system. So in other words, the little few times where the RMO goes flip and flop above zero, below zero, it can further iron out those signals. Can you see the bar colors this time are in 4 colors? You have an orange, a red, a light blue, and a dark blue. The orange is bearish, the red is very bearish or a more confirmed signal. Likewise, a dark blue is very strong, and a light blue. So you can see this transition. Turn light blue, from light blue moved into a red zone, and then it trickled out from a red zone to an orange, and then finally into blue. So you'd be able to get the pulse. And I think, why do I call it super filter? Coming to that, you are able to see over here, despite the RMO going bullish, you can see the bar colors are still orange over here, which means don't attempt to even follow the RMO, because the super filter means that I have really tuned it to the volatility of this equity based on how much the bars are moving versus how much they were moving earlier. So it's kind of, think of it as a tailor-made suit versus something you just bought off the rack. I'm not saying stuff you get off the rack can't work. It definitely works. A lot of us like that. But I think when you have it tailor-made, there is no shortcut to it. It's really trying to tweak it to the best ability for that stock. So I think that's where the big difference comes in, is the super filter tunes in always much better than the inbuilt RMO as well. So the inbuilt RMO was a great system, but it took us years and years and years to develop that super filter. Mind you, over a decade, I reckon, is what it took to kind of refine an already very refined system. And trust me, we don't do upgrades just for the heck of it. I'm someone who believes that if I'm doing an upgrade, even if I've given you from a build 20 to a build 21, which happened very recently, I had to make sure that there was something extremely meaningful which adds value. Only then I do the update. I'm under no pressure to give you an update every year or every 6 months. It's only when something is very solid, very good, that's when I release an update. We've tested it. We can see that value to your trading results. That's when it comes to you. I'm not someone just going to do a cosmetic update and give it to you. So the reason I'm saying that to you is because I talk to you from a trader to a trader. I'm not a stockbroker. Yes, I do commentary on CNBC and Bloomberg in India. But again, at the end of the day, I'm not here to sell you advice. I'm trying to teach you how to become independent, self-sufficient, and show you some of the tools that I use so that you yourself can understand exactly what's going on. Look at this situation on this same chart over here. You've got the blue bars, you've got the arrow, the RMO flipped up. Now this is the inbuilt RMO. The minute I put the super filter on, just mentally, if you take a picture of this, look at the moment I put the super filter on, you see it gets all orange out, and this little buy that comes in. So it filters out the existing RMO as well. So it's not like you couldn't save yourself there. Maybe you looked at the volume, maybe you saw it didn't cross the high. But the point is, look, if you got the super filter, which is a tailor-made custom fit for the equity, why not use that? And that's what solidifies everything for me. Is the super filter is definitely a very progressive step. And as I was suggesting, the 4 colors that you see help you understand the transition and also smoothen out the RMO. So if you see over here, the blue rectangle that I've drawn, the entire phase has blue or light blue bars, which helps you focus on the buy side. The little noise that you saw in the RMO over here in the beginning part of the rectangle was all ironed out, even though the RMO went negative to positive a few times. Likewise, on the right side, the red rectangle that you saw, you can see the red comes in before even the RMO comes in. So right here is the red, which is much ahead of time than the existing inbuilt RMO that's there. So you may wonder that, is this a faster indicator or is it a better indicator? The answer is the latter. It's a better indicator. It can give you the sell quicker, and it can also slow down over here. Notice when I say slow down, it slowed down and didn't give you a sell over here despite the RMO getting into a sell. So it can slow down and speed up based on the volatility of the market. And that's the beauty of it. And there are a lot of systems out there which change past signals. And unfortunately, they exist. I've seen that. And mind you, after some time, they change where the arrow was. But the beauty about any study of the ATM is, if it gives you a red bar or an arrow, it's never going to change. So that RMO that you're seeing, the bar color that you're seeing, the arrow that you're seeing is fixed. Even though I use the word optimized, it's never shifting, right? So buy with confidence, use with confidence that this is something which is well respected. And I think one of the best selling add-ons for even Metastock. And I would go out to say that when you use something so solid, you probably would say that, how do I use this one thing so well? Because it's not just handling short-term, medium-term, and long-term, but also giving me the ability to become hands-free, giving me the ability to, look at all the short, medium-term signals together. Now, let's look at another element, which is, again, a lot of times, as I told you, the whipsaw that you're seeing, again, these are just comparisons between the older RMO and the newer one. The blue saves me from getting into the short side of things. When the market fell back early in February in 2020, and I recall talking about the sell signal a lot when we had the live events was probably back in India, we had 4 locations, and then in Australia, and I talked about how bearish I was on the markets just because the RMO was the first breakout, and you can see how it handled that so beautifully. Mind you, the red bar comes in much ahead of time, and I would call this the COVID crash. And of course, what followed after that was, let's call it the COVID rally, right? So we had the ability to even go short on this, which is also what's amazing. And the reason I didn't want to just show you stocks which are just simply moving up, those are much easier to deal with, but you're able to see. So here's again a slide of the super filter. The super filter would now shade light blue, orange, and red for you, and even tells you where you have a new upshift or downshift. And if you're trying to make sense as to what is an upshift, it's when light blue goes to dark blue. What's a downshift? When orange goes to red. What's a down break? It's the first time that something from a bullish zone had a breakdown, right? Now, where can I find details of this? There's a lovely manual we've written up for you. If you go into your My Downloads on the Metastock website and you are subscribed to the ATM, click into the manual. There's a 46-page manual I've written where all these terms are explained to you with illustrations. These are further backed by videos. And of course, we can support you on that if you have any questions. But what's beautiful is you're not spending so much of time exploring these manually or running scans manually. You have a ready list of stocks that you need to focus on rather than trying to go one by one and try and decipher which are the ones to even look at. So out of 100, you may just have to look at 4 or 5. So I think that's where the whole beauty of the system is. Again, block sorting. Just look at this picture. Isn't it worth 1,000 words? You've got a picture which tells you the colors: red, orange, light blue, dark blue. Those blocks tell you again that 60% of this market is either light blue or dark blue. The rest are orange and red, which tells you where the tilt is. Now imagine if the next day you see that no, there's more orange and red, you can understand that there's a shift happening. So block sorting is an amazing feature. Now, any indicators that you use should also be blocked by proper trade management systems. And I'm going to talk to you about the Trend Decider suite briefly. I don't have much time to get into every detail of it, but you will definitely find a lot of details through the earlier videos that we've done, and you will understand what these levels mean. But in essence, I'm going to give you a level for the day and for the week, for the 15-day period and for the month. And you'd be able to see that if I'm just trading intraday, I want to see if I'm above or below that Trend Decider daily level. If I'm someone who's, say, a shorter term profile, I trade a couple of days, look at that Trend Decider weekly level. So this is how it looks. This is a red line, which is the Trend Decider weekly level. If the price is above this, it's bullish. If the price is below this, it's bearish for the week. It updates every Monday morning for you, right? So the beauty of the Trend Decider level is it updates every Monday morning. If you're looking at the Trend Decider daily level, which is the green one over here, the green line or the Trend Decider daily updates every morning for you. And you all need to just look at, is it above this level or below this level? So let's kind of make this a little rule for myself. What if the price is trading below the daily and the weekly level? So look at all the vertical lines that I've plotted. These are points where the price has closed above the daily and the weekly, or below the daily and below the weekly, which are perfect points for me to buy and sell. Whenever I'm selling, I'm also making sure that the green line is lower than the red line. If I'm going short, if I'm buying, I want to make sure that the green line is higher than the red line. So Trend Decider daily is greater than the weekly. And if you just look down at the x-axis again, this whole interpretation that I just explained to you is automated. You can see clearly it's marked as bearish and bullish. It's already checked for you that have I closed above both the levels. It's already checked for you. Is the green line higher than the red if I'm buying, or the green line lower than the red line if I'm selling? And it's beautiful how you can see it works, because this is an amazing trailing system which you can use not just to reconfirm your entries, but also to trail positions. And why do I use it? It's one of those first few momentum tools. Look at this chart of Tesla. For those of you who are looking at a daily versus a weekly, The last buy that we saw, mind you, this is an intraday interval. We're not even looking at a daily interval. You're probably looking at how the stock has given you a buy all the way back in August, and it's running through.
Muted.
Not one point where the price of Tesla came below the green and the red, and the green came below the red. There was this one point. Why have I marked as a dotted level? Because the low of that bar has not broken, which means you really couldn't go short or exit. So you're able to see how this momentum-based study keeps updating every day and every week to help you run your trades. As I keep saying, it's a lot of us are just trying to make small bucks every day, and I say, look, the whole idea is to run your winners. And how do you run your winners? When you have a momentum-based system. So look at it. There are three things which I'm trying to talk to you about today. Number one, if you're using the RMO and the super filter, that's a price-driven study. That's something which will really help you enter after doing a complete short-term, medium-term, and long-term profile check. So that's a trending price-based study. Then there's the trend decider, which I'm showing you right now, which is a momentum-based study, which is updating every day and every week for you, which is going to help you trail your stop as well as confirm the trades that you're taking. So it's about trade management through the trend decider levels, confirming those signals as well as working as a wonderful, trailing stop for you, as well as a new entry and exit point. Look at Walmart. You can see the sell side and the buy side on this chart. Again, look at each time I've drawn that red line, the red vertical, it's because price is lower than both the daily and the weekly. Where I've drawn a blue vertical line, it's because the price is higher than the daily and the weekly. And at the same time, the green line has gone above the red line. And all this interpretation, folks, is done for you on that x-axis. So if it's heavy for you right now because it's the first time you're looking at it, don't worry. There's an expert advisor which does the commentary for you. And above all, when you look down at that x-axis, it clearly marks it as bullish and bearish. Now, the beauty is, even if you're longer term, you may say daily and weekly is too little for me. I'm someone who likes to latch onto a position for several weeks, maybe. So here's a trend decider weekly versus a monthly on the E-minis. And, I've just put up 1 year's data on this. And you can see for 1 year, this has always maintained a bullish phase, clearly because the green, you can see at the bottom, the green bullish phase continued. There was no point at which we had a system where, we had a bar that closed below both the levels. So where I've drawn the red, that's the first time where you can see a closing is below both the levels, and then you had the weekly dipping below the monthly. That's the point where you say, okay, and that's where you got that 200 point odd drop on the E-minis recently. But in the main, you can see how lovely it is. You can see how amazing the system has been working and trailing it for you. It's about riding the winners, trade management, and the trend decider does a lovely job at just confirming your signals as well as giving you the trade management. And no system can we complete without having these scanners. Because when you are looking for where's the first time where that intersection happens, where I drew that line, which is the first time where the price went above both the levels, it's going to give you a bullish or a bearish with an asterisk sign. So when you're looking for that first breakout, that's also ready on a list for you. So everything's there for us on a platter, and it's also sorted for us. So bullish and bearish means it's already signaled bullish and bearish some time back. But bullish with an asterisk sign over here indicates that this is the first time it's closed above both the levels. This is the first time the green line has gone above the red. So that's really what you want to focus on. So everything is backed by a solid scanner. To complete the system, and when I say complete the system, I'm cherry picking 3 elements. Number one, let's go back to the ATM RMO, which is trying to give you that whole price-driven equation, the whole trend equation. Then you've got the trade management and the trailing equation coming in from the trend decider, the ATM trend decider. And now I'm bringing in the SWI, which is a tool which exclusively uses volume. So here's a tool which is just based off volume. So in other words, I'm studying everything. I'm looking in multiple time frame trend-based analysis through my ATM RMO system. I'm looking at trailing models and running those winners through my trend decider. And I'm looking at the volume breakouts through my strength weakness index. And this is the easiest indicator you'd find. you'd see a line that's plotted across your chart. It dissects your chart literally. And you can see if the price is trading below that red line, it means the volume flow is negative. Now, what do I mean by volume flow is negative? Let's understand. So we keep talking about volume as, price going up with volume is a strong confirmation. In other words, if price goes up and the volume is also inclining, that's a strong trend. Similarly, if the price goes down and the volume also is elevated, it confirms the downtrend. So you need to check, where is the equation disbalanced. At some point you can see over here the bars are running up, but it's still negative. Why is it still negative? Why is the SWI not crossed? Maybe it's not run up with volume that's good enough to break it out. So it's balancing that volume for you. It's looking at that equation, is price going up with volume or not going up with volume? Is marrying that classical thought process into an indicator which solves the whole volume problem for you. So it's beautiful when you confirm it again. Think of it as, I've got something to confirm price with, I've got something to trail my winners with, and I've also got a tool here which is going to confirm the volume setup. And it's so easy because it tells you clearly, if I'm above the SWI level, I'm bullish; below the SWI level, I'm bearish. Again, commentary is inbuilt. Please don't worry if this looks a little difficult to you at this point, but trust me, within 4 or 5 days of using the program, you will be addicted to it. You'd love it because of its performance. You'd love it because of the commentary. It's done with absolute care to kind of explain to you at each stage what exactly these indicators are meaning. So interpretation is backed with expert advisors and with the signals coming on that x-axis ribbon as well. Each study that I've shown you is coming out of a pre-built template. You don't need to manually enter any values even. So trend analysis, we're using the RMO, momentum and trailing, trade management, that trend decider suite, very helpful. And finally, we unraveling that volume curve with our SWI, which is automatically interpreting the volume for me and helping me gauge where the market's going to go. The idea is you finally want to come to a point where you look at your power screener, it identifies all the trades for you. Our job really gets into the other two circles, which is weighting, in other words, deciding which is a more confirmed setup. So you might have 4 signals and you want to look at which one do I put more weight on, which one has more confirmations on it. And finally, management, because how do you let those winners run? How do you confirm those trades and let them run? So that trade management is what you're looking at. And all this coupled together helps you trade to a plan. The point is, why do we have power screeners today? So that you don't manually interpret and manually search. And the reason I say we don't manually interpret, because people have made technical analysis, unfortunately, a piece of art. They use the indicators that suits them, where their mind kind of agrees to them. It's a bit like if you sit in front of the television and watch 8 commentators through the day, you probably agree with the 1 or 2 guys who are kind of agreeing with your thought process, because we always think that we are the right ones. And which is why I always say you need to insulate yourself in this market. You need to take a holistic and an individual approach to trading. You need to do it your way, which is why I've explained to you why it's so relevant to use the various tools that I just talked about in terms of a price-driven tool, a trend-driven tool, and finally a volume-driven tool. So that's what I really wanted to kind of come across to you with today. And mind you, when you recap most of the other studies, now there's several other studies. For example, the RMO 2 is there, which will help you do options trading. The counter trend indicators there. I'm not talking about these, but these are the 3 very important building blocks which you must use. It's all rule-based. It's very effective. And the reason I say it's rule-based and effective is because you are not twisting and turning the line. You're not manually drawing any trend lines or support levels or putting in any values. It's self-adjusting. It's adaptive. It focuses on being optimized and adaptive to the particular symbol that you are looking at. So it doesn't matter which asset class or time frame you trade. It is really tuning up to that symbol. So that's what's so different in this add-on compared to anything else out there, is the fact that it's a tailor-made fit virtually for most of your equities. So I would encourage you to use it. I would encourage you to make the most out of it. It's something which is very, very unique, and I think above all very simple. The problem is it becomes very complicated with several indicators, but this one's a very simplistic approach which looks at all the various elements of multiple time frames, volumes, as well as price analysis. Of course, as I told you, manuals, videos, training, there's a whole lot we've got with it. And I'm sure if someone starts using the program in a week or two, you are pretty much so comfortable with it, which is why we call it ATM, or automated trend modules, because it's largely an automated process of delivering you those various scanners and indicators and experts. So when you get the add-on, you get all the various indicators. Of course, I haven't listed every single one out there, but broadly speaking, counter trend indicator, trend decider suite, the breakout catchers, the RMO tools for the option folks, the SWI for the volume interpretation, and of course, the very popular super filter. Every explorer, every expert, they're all interlinked. So in other words, for every setup that I've taught you, there is an explorer to it, there is an expert advisor to it, as well as a power screener to it, which is this application, or what I call my go-to screen. This is the place where you're going to come to, and you can look at all the various columns running in real time, tick by tick if you use real-time data, offline or end of day if you use end of day data. But you're never going to miss an opportunity. You will get alerts automatically, even if you're end of day, because it has the capability of just opening the platform, and it does it for you. You just have to set up your page one time. In other words, you need to input the symbols that you want to track, and it would do everything for you. So no manual scanning, no going into chart by chart and seeing, oh, where's a new 3D buy, where's the first breakout. It does the job so beautifully for you. So in my opinion, we did our best, and I don't think it gets any better. And probably that's all I have time for today. I don't want to get you late into all the other lovely sessions lined up. But over to you, Jeff, and I'm happy to take any questions at this point.
All right. Thank you, Rahul. That was really good. We haven't gotten a lot of questions specifically for you, but we do have a lot of questions about, I want to go look this later or review this later. I want to kind of, is this recorded? Can I come watch it later? And so I have been putting the YouTube link up for those of you that are in GoToWebinar. And as long as you're registered, we will send you that link automatically about an hour after the event today. So other than that, I don't see a lot of questions. I think it's just because everything was super clear.
Well, thank you, Jeff. That was great.
Okay, cool. I'm going to talk a little bit about the package we've got. Rahul, I want to say thanks for coming. Great job. And
thank you again.
Nitin, maybe we can do this real quick. Nitin just kind of commented in with a question. How did the SWI work during the pandemic crash?
Okay, that was a very, very beautiful time. When I say beautiful time, well, for me, I really spotted those short signals. And as I was telling you, we had some of the live Metastock events also on that time, and which is where we got all the three signals coming in, the first breakout. And we even saw the SWI shift, which means the price really broke below that SWI level, which is why the markets probably had a confirmed sell. So back in end January is when that shift happened, in January, early February 2020. And we all know what happened after that. It was one of the worst months for the market. In fact, it's been such an amazing market. Within the last 1 year itself, we've probably seen one of the biggest falls and the biggest rallies in history, I think, globally on equities. So it was super well handled. And, I would say the data is evidence to it as to how well the SWI or any of these tools worked, clearly because it's tailor-made to the stocks you're looking at.
All right. One more from Paul. Paul wants to know, is the RMO on Metastock, the one that we include for free, the same algorithm that you use in the add-on?
So the super filter is a different algorithm, really, because of the fact that we're moving into an optimized phase. So whilst largely that's the base, we've optimized it to the volatility of that stock. So, yes, as a base, it is true. We're kind of building off it, but again, it becomes a totally different delivery, a totally different output the minute it gets refined and customized to the equity you're looking at.
All right. Nitin says thanks for the explanation. And Paul and Nitin, thanks for the question. All right, Rahul. I'm going to go through pricing real quick. Thank you again for joining us.
Thank you again.
It was good to
Thanks
have
for
you.
joining.
Good to have you. All right. Okay, so let's kind of move a little bit here. I'm just going to go ahead and I have to dismiss Rahul just for purpose of making sure everything kind of runs stably. Let me go ahead and kind of turn the screen sharing on real quick to me. And you should be able to see, let me make sure I'm showing the correct screen. You should be able to see the RMO ATM 3. Rahul does do a really good job of kind of explaining how this works and how it puts together. And I just, I love kind of, I've had the privilege over the years of traveling, even doing some events with him in India and all over Asia. But he does a really good job of kind of showing things and throwing together. So the Power Screener app, the unique indicators and things that he showed as part of the ATM are available as an add-on for Metastock. And the cost for that is normally like $149 per month. But one of the things I would say about Rahul is I think he's one of the best trainers that we've worked with. You can tell it's something that he's been doing for a very, very long time in India. And it just comes through. You know, there's a little bit of, when he says something, I understand what he's trying to say. You know what I mean? So we did do, in addition to the ATM, we did sit down and we record some paid sessions where he went and talked about trade detection and entry management, trade management, and even in a masterclass on RMO where it talks about the ATM strategies and how to use them, how to find entry and exits and stops. And this is a class that we did that cost roughly around $597, if I remember correctly. What we're going to do today is instead of $894, you can actually, as a part of the webinar today, get all 3 of those classes, as well as your ATM for the first month, and this actually for 3 months. And then you'll also get a copy of Metastock Real Time if you need it. Normally, all that would cost $894. Here at the webinar, we're going to actually do $496 as a special offer for that. So you can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. Now, so for $496, what you're going to get is you're going to get all 3 of those classes that we talked about, 3 months. It actually is incorrect right here. 3 months of RMO ATM. I better start looking at my slides and make sure I got them right. And then if you needed a free trial to Metastock Real Time. So normally that would be $894. Here at the session today, it's going to be $496. Okay, so the phone number to do that is 800-882-3040, or you can visit us online at metastock.com/saleschat. We do have a lot of really good guests today, and we've actually put together like a Sabbath action pack, which actually includes even a better deal on the ATM, the training course. We've got a great product called Vora's Victory, the Magic Trader Elite, the Guy Cohen's OVI Traders class that we're going to be doing live coming up in just about a month or so with Oscar Carboni, 3 months of learnmetastock.com, Unleash the Power of Metastock. It's a huge package. 2 years of stocks and commodities. Normally, like it's a $5,000 buy them separately type of a package, but as a bonus today, what I want to do is actually give you a really good price on everything. We've negotiated everything with all of the presenters today. We've been able to bring the cost of this down to $1,990. So $1,990. You can get that at metastock.com/summit deal, or you can call us at 800-882-3040, or you can visit us at metastock.com/saleschat. So all of these guys are going to be talking a little bit. We'll be going through kind of the victory and the magic trader, and you kind of understand everything. But that's the package we're doing today, just basically a $3,000 discount on a $5,000 package. So Ian says, good morning. Well explained. I liked it. Yeah, Rahul does a really good job. So don't see if you guys have questions. We're kind of coming up to the part where I'm going to talk. So I'm going to go ahead and take off the headphones just because I'm a little bit more comfortable that way. And I don't need to be listening for a minute because I'll be doing the one that's talking. Before we get to kind of where I'm talking, I do want to talk a little bit about Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a magazine I've gotten since I started here 25 years ago. They've been sending me a copy of it They've actually got about 17,000 different articles. They've got about 1.3 million subscribers, 1.226. You can get a free copy. If you're watching us on YouTube and you didn't register for this event, you can scoot over to metastock.com/trader summit. Not only can you sign up for a free magazine today, you can also get a free CMT course guide. And all of the presenters, or well, almost all of the presenters, have offered like a freebie or a bonus, either ebook or video or course. So go check that out, metastock.com/trader summit. So Paul Raskin wants to know, is there a one-time available price for RMO ATM, or it's only available on a monthly price? So normally it's only a monthly price. Normally it's $149. If you sign up for the event today, you'll get a lifetime lock-in price of $99. You'll also get all that training that's included, and you'll get 3 months of it. But your price going on, instead of being $149, it'd be $99 a month. Paul, thank you for the question. All right, cool. Okay. Also want to say thank you to CMT Association at cmtassociation.org. Brand new sponsor. They've been sponsoring a couple of events now. They're really easy to work with. A very well reputed organization. CMT stands for Chartered Market Technicians Association. They do risk management, quantitative systems development, portfolio management, and applied behavioral finance. One of the most respected organizations out there. They do a lot of professional. What is the word I'm looking for? Accreditation of traders. So cmtassociation.org. There we go. All right, so it's my turn. I want to say thank you for coming. I hope you're enjoying the event. I usually don't go this early in the day, so let's go ahead and kind of just read a disclaimer again. Today's demonstration is designed to instruct you on Metastock and the accompanying plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So hope you enjoyed that. If you guys have, and gals, have any stocks you want to look at today, we're going to kind of be doing a bit of a dive into Metastock, into kind of systems and methods and kind of technical analysis and how they work with. I usually don't come with a bunch of like historical examples. I like to get into the software, I like to play with it. So any symbols that if you're interested in kind of even seeing how something's trading today, type in that symbol. We'll probably have a chance to look at them, at least the first 3 or 4. So my name is Jeff Gibby. As of March 31st next year, it will be my 25th year at Metastock. I've been here for quite some time. I started personally in inside sales, and after I worked in inside sales for about 10 years, I moved into business development, where I met a lot of friends like Rahul, and well, actually I knew Rahul before, but like a lot of the people that we have presenting today, and I've learned a lot there. For the last 3 or 4 years, I've actually been in charge of our sales team. And I absolutely love working for Metastock in terms of the culture here, the product, the fact that we have actually more people that are here to help you ask your questions about the software after you buy them, before we buy. And what I mean by that, to be really specific, is we have more people in support than we have in sales and marketing put together. And just kind of, it's a great company to work for. It's a good product to represent. As you can see, just kind of looking at the bullets here, we've been in business since the 80s. I started in, 25 years ago, 92, I think. No. It would have been more like 97. When I started, we were owned by Reuters, who then became Thomson Reuters, who became Refinitiv. We have real-time feeds that are kind of on par with literally the same type of data and feeds that you'd get if you were subscribing as a bank or a hedge fund. We develop here in Utah our Metastock platform. We've done hundreds of thousand units over the years. We actually bought ourselves back from Refinitiv, which was Thomson Reuters at the time, back in 2013, but we have a really good relationship with them, which has been beneficial because we've been able to, why it's beneficial is if you're here and you're watching this event, whether it's recorded or live, let's say you're watching from London and maybe you're interested in the London Metal or the London Stock Exchange. We have that data. If you're watching from India, we have the National Stock Exchange of India. If you're watching from Australia, we have the ASX data. In fact, like we have hundreds of thousands of securities that are available, supported by one of the most reputable news and services out there. I mean, literally, if you have the real-time package, you're going to have the same access to information that hedge funds and banks actually subscribe to. So serious tools. That particular product, they've spent $1 billion on just to kind of get it out the door. So in terms of us, one of the things I do like to talk about is the fact that Metastock's been rated #1 in its price category, and that's like 28 years in a row by the readers of Stocks and Commodities. So that's about what I'm going to talk about in terms of like Metastock and kind of our history. I think it gives you an idea. The real thing is we've been here for a while. We've been doing this for a while. It's been a software we've been working on. We're not just getting started, as some may like to brag. So today, what I'd like to talk to you about is trading plans. We're going to talk about how I think it's important that you have a trading plan. I think it's important that you know why you're buying and selling a stock. I'm going to actually talk to you a little bit about MACD, and then we'll talk about testing, and of course there'll be a special offer and that kind of stuff. So if you have questions, hello Zaid, thanks for saying hi. Hello October. If you have questions as we go ahead and just type them in. And again, give me some symbols to look at. I can show you some of the ones I'm looking at if you don't, but I am waiting for you guys to type in some symbols. And I'm going to need them here in just a second. So what are you guys interested in looking at today? Let me know in the chat. Okay. All right, cool. If you're not familiar with this guy, his name is Richard Dennis, as it says right there on the side. He is a famous futures trader in the 70s and 80s. Richard Dennis traded a lot of futures, and he was very, very prolific. He had a bit of a disagreement with a guy by the name, let's see, Richard Dennis and Bill Eckhart, about whether or not you could teach people how to trade. DVN, you got it, Metastock. I actually have that one up right now, so that's a good one. So the turtle traders, they basically, Richard Dennis, Bill Eckhart, they disagreed on whether or not, I lost that train of thought there, you can teach people how to trade. And so what they ended up doing is over the course of a couple weeks, they basically recruited people. They ran ads in newspapers, and they got a bunch of people in and interviewed them and decided on people that they could teach to trade. After they kind of got through that process, they trained them for a couple of weeks and they funded them anywhere between, like, I think it was $250 million to $2 million, depending on who it was. And they had some, mostly men, but a few women. If you want to read the full story, it's actually quite interesting. And you can go up to Wikipedia and just search for Richard Dennis and it'll come up. But the end result is probably what was the most famous, let's say, gentleman's bet in history, or trading experiment, or whatever you want to call it. The turtle traders over their first several years were not successful. They were insanely successful. They got world famous in terms of the success that they were having. And they had a very, very specific strategy that you could quantify as like a breakout strategy. They looked for a stock to break a high, and when they broke or actually they were doing mostly futures, but when it broke the high, they would buy that future and they would hope that it would go up. A lot of times it didn't, and a lot of times it did. They actually, one of the things that Richard Dennis said is this quote: "I would always say you could publish the rules in a newspaper, nobody would follow them. The key is consistency. The key in trading is consistency and discipline." We travel, or in the before times, we used to travel all over the country and would ask people, what is the most important, what profession is the best for trading? Like what previous profession? And a lot of times we'll just ask people to guess. We'll be like, okay, we'll get a lot of people that guess psychologist, which I think is a good guess. You know, a couple of Dr. Elder, Jake Bernstein, a couple of those people were both psychologists, and they actually are very, very good traders. Another guess that we'll get is like school teacher or doctor or nurse, but the actual answer that we're looking for is an airline pilot. And I believe that is because of discipline. So I think discipline is important. I think it's important as part of that discipline to have a trading plan. If you understand why you're buying a stock and what your risk is going to be and what your drawdowns look like and where your stop loss is going to be, the better formed out that plan is, the better that you're going to be as an individual trader. So today what we're going to talk about is how you can look at trading plans. You can look at different entries to get into a stock and why they may or may not be worthwhile for you. Dan will look at that. So sure, no problem. Hello, Sean. Thank you. Okay. Lachoma asks, are there one-time payment for Metastock 17 RT? Yeah, we'll do a special offer on you. Typically what we're going to talk about today is mostly the lease, but we do have special offers for people that went to the summit today. So you can get in touch with us. I appreciate that question. We'll go over pricing in just a minute. So there you go. Nitin, I'd be happy to do some testing on the symbols if you know what the actual symbols are. So Tata Motors and Bank Nifty, just the fact that I'm not in NSE, I'm not sure what the symbols are. If you know, type them in, we'll try and find them. Okay? All right, cool. This guy is Gerald Appel. Gerald Appel may be somebody that you've heard of before. He is the creator or the inventor, however you want to call it, of the MACD indicator. And I promise that we talk a lot about MACD and how it works and how it functions and that kind of stuff. The MACD is something that you could consider a trend and a momentum indicator, and it helps you identify whether both of those things. So what I'm going to do here is I'm going to basically kind of talk a lot about the MACD, and what we're going to do is we're going to go in here to Metastock. I've got it open over here. I've just got a clean chart of Devon, and what I'm going to do is we're going to actually just kind of show you how Metastock works and kind of how you can use it to kind of identify different patterns. Earlier, I think somebody in the comments said October said that he prefers candlesticks. I actually do too. One of the things that I'd like to talk about when I start to talk about Metastock is how easy it is to use things. So what we've tried to do as we've defined out software is to make it as easy as possible to use. But we've also tried to, and I think we've done a good job of it, but we've tried to make it function the way you would expect. So we've used a lot of the office type of techniques of drag and drop, of click and pick, and that kind of stuff. So if I want to change anything on that already exists in the chart, right now I just have just the bar chart, but if I want to change that, maybe I want to look at candlesticks or point and figure or something along those lines. The easiest way to do that is I can actually double click on it, or I can right click on it and go to properties. Okay, so you see right here where it says Devon Energy Properties. I'm going to go ahead and click on that, and we're going to go ahead and change it into candlesticks. Okay, you'll notice that there's also a candle volume, equivolume, line, CAGI, point figure. There's about 8 or 9 different charting styles we can use. I'll just do candlesticks real quick right now. And that was as easy as it was. I can go in and define what color I want it to be for an up candle or a down candle. That was still all on that property style page. The next thing I want to do is we're going to talk about MACD. Okay, so right here in Metastock, what we've got is, this is called our indicator quick list. There's about 200 plus indicators in here, and they're all alphabetical. One of the things that we've added in one of the more recent versions is what we call the most recently used indicators. So you can see I've used MACD recently because it's right here at the top of the list. I'm going to go ahead and grab that. And what I'm going to do is I'm just going to drag it and drop it on the chart. And I can drop it anywhere I want. So if I drop it here, it's going to go here. I'm going to drop it at the top, so it goes at the top. And I prefer my MACD in a different window. So what I'm going to do here is I'm going to make the signal line red. I'm going to make it, and then I'm going to set it just a little bit thicker so you can kind of see what the actual MACD is doing, and I'm going to make that blue. Okay, and we'll go ahead and drop that on here. Okay, you'll see, and that is the MACD line. What I want to do also is I'm just going to make it a little bit thicker. I understand a lot of you might be watching on phones or something like that, so I'll make everything a little bit thicker than I normally would have it, just so you can see it a little bit better. Okay, the next thing I want to do is actually talk a little bit about how the MACD is calculated. I know a lot of people that use the MACD, but they don't understand exactly the math that goes into it, and it's actually fairly simple. When Gerald Appel wrote the MACD, he basically, the MACD stands for Moving Average Convergence Divergence. And this blue line is basically a calculation of a subtraction of two moving averages. So what I'm going to do is I'm going to put those moving averages on the chart. The closest whole numbers, now, when he designed it, he used a 0.075 and a 0.15 exponential moving average. And I looked up what that meant, and I can't explain it, or do I really understand it? But he didn't use whole numbers in his calculation. But the closest to whole numbers that he had was a 12 exponential moving average and a 26 exponential moving average. So for the purpose of simplicity and for me to be able to explain things that I understand, we're basically just going to subtract a 12 period from a 26 period exponential. And that should get us a pretty close estimation of what the MACD is calculated. So let me go ahead and drop that moving average on here. I'm going to go over here and I'm going to make a 12 period exponential moving average based on the close. I'm going to make it red and I'm going to make it, again, thick so you can see it. Okay, we'll go ahead and merge that scale on the right, and that easily we're able to put that on there. Let's go ahead and do the same thing. I'll make this one blue, and but it's going to be 26, but I'm also going to make it extra heavy. So 12, 20, and 26. Okay, now to calculate the MACD, all I'm going to do is I'm going to subtract this shorter term, the red moving average, from the longer term moving average. So if I was to take the value of this 12 period and subtract it from 26, the value I'm going to get is this blue histogram line that I put up on the chart. That's it. We're just looking at the difference between the red line and the blue line, a shorter moving average and a longer term moving average. Okay, it's that simple. That's all we're looking at. Now, we can use that to gauge trend and momentum. Okay, if Devon Energy is trending up, then we're basically our shorter term moving average is naturally going to be above our longer term moving average. Okay, and you can see that because when we subtract the two values, we get a positive value, a value that's above zero. Okay, so if we're in an uptrend, we have a value that's kind of upward drifting on the MACD. If we're going to downtrend, basically our shorter term moving average is going to be below our longer term moving average, and we're going to have a value that's down below MACD. Okay, if it also has a measurement of momentum. So if, for example, Devon moves up real quickly like it has just recently, what we're going to see is we're going to see a much bigger spike in MACD. Okay, that's all we're looking at. We're looking at trend and momentum, and to measure that, we're looking at the difference between this moving average and this moving average. This should be very simple. If you do have questions, let me know. Okay. Mr. Doyad, I'm not going to try the first name there. Is this webinar uploaded to YouTube later? Yes, and we will send you a link automatically as long as you're registered to the YouTube channel. So yes, we are recording all day today. Thank you for that question. Okay, no questions over here. Okay, all right. Now that just covers the blue line. This red line on the chart is basically what Gerald calls a signal line. Okay, and to calculate the signal line, what we do is we take a 9-period exponential moving average of the blue line. That's all. So basically, this line is the subtraction of this. The red line is basically what he calls a signal line, and it's basically just a 9-period exponential moving average of the line. Okay, so that's it. He does use it as, and he does call it a signal line. Okay, and the way that we can look at MACD and determine if Devon Energy is bullish or if it's bearish is if it's trading above its signal line. So for example, right here you're down below the moving average. From about right here to about right here, you're below the moving average. Grab my horizontal tool right here. Okay, if I can find it. Okay, and right here, right in this area is where it crosses up above its signal line. Okay, and I'm going to say that it's right about there. Okay, when it's trading up above its signal line, so from here onwards, for the most part, it looks like it did dip down right here. But for the most part, as long as it's trading above its signal line, you're going to say that Devon is in a bullish phase, okay? Or that the MACD is bullish, okay? And then when it goes back down below its signal line, you can see that happens like right here maybe. Then it's going to be back in, the MACD is back in a bearish phase, okay? We do have, in Metastock, we do have a number of what we call expert advisors. So it's going to help me kind of illustrate what's going on here. And so let me go ahead and open up the expert advisor. And there's about 40 or so different expert advisors that we include with the program for free that are going to allow you to kind of help understand concepts like this. Okay, so if I come down to Equus MACD or Metastock, MACD by Metastock is what it's going to show up as on this list. MACD by Metastock, I'll attach this to the chart. I'll go ahead and click on close. And you'll see, because I'm going to point it out, every time that goes up above its signal line, it's going to go into a bullish phase. Here it's in a bearish phase. Here it's in a bullish phase. Here it's et cetera, et cetera, et cetera. You see that there's a ribbon at the bottom of that chart that is showing bullish or bearish. Okay. When that happens, when it goes from bullish to bearish, like it does right here, you're going to get a buy signal on the chart. And that's just going to be drawn automatically for you. So as long as you're in a bearish phase, according to MACD, you can buy, okay? And right here where you got this bullish phase, okay? Here it went down below signal line and missed that by a couple of days. This would be a valid entry signal and a valid exit signal, okay? There's a lot of chop on this chart, more than I actually expected looking at the chart, because here you had a buy, here you had a sell, here you had a buy, here you had a sell. It was a little bit choppy leading up to this move up. Absolutely, okay? So that's one way you can look at MACD. One of the things I love about technical analysis, though, is I can sit here, can explain to you how MACD works, and you should be able to understand kind of like what we're talking about. You should understand why we're getting the buy signal and sell signal. We're not talking about things that are subjective, but rather objective. So I'm not trying to guess what's happening with, the federal funding for coronavirus and how that's going to affect Devon, or, those type of things. That's how, name your emergency event that's happening. What we're doing is we're looking at the stock and the trend and the momentum of the stock to make decisions. We're letting the chart tell us what to do. Okay. Now so the first way we look at MACD is has it crossed above its signal line. The second thing that we can use, and remember I said it was a momentum indicator. The second thing we can look at MACD is as a way to measure momentum, overbought or oversold. So what that means is, like, if you kind of have a huge move up in a stock, this was a fairly big move up in a stock, there's a tendency for certain markets to become overbought or oversold. And what I want you to notice, I'm going to zoom in just a little bit right here. See this red area? This red area is Metastock warning us that based on the MACD that this market might be starting to be a little bit stretched. Okay. And what I have in here as part of the expert advisor is we have a feature called the commentary that kind of help explain that to you. So what I'm going to do here is I'm going to go to the view expert commentary. As soon as I do that, you'll see right here that this arrow appears on the chart. This basically means that this commentary right here refers to this day right here. I'm going to move this back a little bit just to one of the red bars. Okay, so it's when I do this, it's ignoring all this data in the past, or in the future, I should say, and just paying up attention to the bar at this point. Okay, so everything that's, I think you get the idea. Okay, so if we're looking at the thing right there, it's going to talk about the crossover. Currently, the MACD is bullish since it traded above its signal line. The MACD crossed above its signal line 9 periods ago. Hold on just a second. Playing a video over here. Since the MACD crossed its moving average, Devon has increased 31.67 has ranged from a high of 40.24 to a low of 29.1. Okay. Right here is saying MACD is in an overbought range, okay? Prices may continue to move higher for some time. Wait until prices move lower before considering any short positions. And I think that's really probably a really good piece of advice. You look at any market, especially recently, even though something's overbought or oversold, doesn't mean that that trend isn't just going to continue into the sunset. Here it's saying you might want to be a little bit careful. You might want to start kind of looking at maybe inching up that stop. We're seeing that this is overbought or oversold, but until it gives us a sign that the buyers are getting out of here, we don't want to do anything with it. Okay. And then the last thing it's going to look at, and we won't spend a lot of time on divergence, although I think it's important. In fact, Dr. Alexander Elder, who's a person that I have a great amount of respect for. He wrote Come Into My Trading Room. I'd recommend you read it. But he calls MACD divergence one of the most powerful signals in all of technical analysis. Okay, and this will, if it sees any divergences between MACD and price, it'll tell you about them. Okay. Gioma says, how do you filter the false signals on MACD by Metastock? MACD by Metastock gives a lot of false signals. How do we filter the good signals that will play out? And that's a really good question, because and we will get a little bit into that in terms of like, is MACD, I know I spent 20 minutes talking about MACD so far, but is MACD even a good indicator for Devon? We'll get into that. One thing I want to show you first, though, is this is just one of the expert advisors that's in Metastock. So if I come back into the expert advisor here, there's going to be tons of them that are available as part of the platform that I can just apply. One of the ones I'd like to show off, because I think it's so cool, is the candlesticks. So I'm going to go ahead and attach that to the chart real quick. Again, this is included. It's part of the package. You don't have to pay extra for it. What this actually does is it actually identifies single-day candle patterns. So right here, you had an engulfing bull, you had a rising window, you have a rising window, you have an engulfing bull, you have a rising window. It identifies up to 30 different patterns for you. And as part of the commentary, it'll tell you what they mean. So if I click on this engulfing bull, it's going to break that down for you. So one of the things I absolutely love about Metastock, we've been doing this for a long time, right? I love Metastock because it's a tool that's you're not going to outgrow. It's going to grow with you. It's going to help you learn. These commentaries are really, really good at understanding different indicator concepts and how they work. All of the indicators, like if I come into MACD and I go to the help file, it's going to tell me specifically what the MACD is, how it's interpreted, how you can use it in your chart. Everything's very, very well documented. The manual that we used to print with this is about 600 pages long. We don't print it anymore, but it's still all there. It still explains all the indicators for you. I just love the fact, you know, I see demos where people talk about, hey, we're going to give you this free indicator. Like we have all these systems in Metastock that you can test, you can put into the program, and they're very, very valuable for you. Okay. Now, if you remember just from a minute ago, we had a question about, I started in Inside Sales, and you know, we're showing you a lot of stuff. There's 200 indicators, 40 different systems. I'm not sure where you're coming at with Metastock, but one of the things that that I would make a mistake or do wrong in Inside Sales when I started in Inside Sales is I would have a tendency to kind of go in there and just talk about all these really cool tools. If you're new to Metastock, though, what I don't want you to do is worry that you need to know all about all 200 indicators or all 40 of the experts. You know, let me go back to the MACD by Metastock. But because these are all built in to the Metastock program, because they're all, actually it's not important, because they're all objective and not subjective, very, very easy for us to go in to your question, John, and say, is MACD one I should be using for Devon? Is it the best system? Why do I care about the MACD if Bollinger Bands work better, or like a fractal trading system or something along those lines? So as a trader, before I actually invest the time in learning about what MACD is, you don't have to now, I taught it to you, but before I learn about these different indicators, is there a way for me to determine which ones work best on Devon or Tata Motors or Tesla or UNG or, you know, any of these symbols that you're giving me? And because everything's objective, we've built what I think is objectively one of the most powerful system testers available. So, and what that'll allow you to do is go back in time and test and see how well something works or how if it doesn't. And so that way, we can focus on what works and what doesn't work. So let's kind of get into it. What I'm going to do is I'm going to open up the Power Console here. Okay, and this is basically where you kind of start everything in Metastock. We can do charts here. Quote Scanner is cool. It allows you to kind of keep real-time lists. Here's the scanner. Scanner's really cool. We'll get back to that. System Tester is what we're going to kind of talk about now. Okay, here's the Forecaster. We won't really talk much about the Forecaster just because it's an hour-long session. I got to kind of pick and choose, but it's a patented method of statistically doing a lot of statistical analysis to determine where a stock might go. And you've got our option scope, which is a really good, capable options viewer. Okay. What I'm going to do now, though, is I'm going to go in and do a system test. Okay. And what I've done is I've gone through Metastock and I've included in part of a list that's called your favorites list, all of the systems that I know that are included in Metastock that don't use optimization. So in total, there's 52 included systems that are free that you can go in and test right out of the box to see how well they work against Devon or Tesla or UNG or Tata Motors or Big Nifty. And the thing I like about our system testers is I've seen a lot of packages out there that allow you to do system testing, but a lot of times it's like maybe you can test one trading idea against a bunch of stocks, or a bunch of trading ideas against one stock. But with Metastock, I can go in and I can test as many ideas as I want against as many stocks as I want. And we're not going to test all the 5,200 optionable stocks today just because of time, but I do have the ability to go in and do that. Okay, and that's one of the things that kind of sets the Metastock system tester apart. The other, oops, I hit escape on my keyboard. The other thing I really like about the system tester is the built-in systems. So as part of the package, it's not just like a free indicator or something. There's 52 built-in indicator or methods in here that I can test right out of the box. And those don't include the ones that have no optimization on them. So let's go ahead and I'm going to select all these 52 from the list that I picked. And what I'm going to do is I'm going to just type in DVN, which is the stock we're looking at here. We'll do Tesla. Tesla had a crazy move yesterday. And I believe it's TSLA. Let me look. And if you're not sure about the symbol that you want to use, you can look them up right here. And that's what I'm going to do just to make sure it's Tesla.o, which is what it is. Okay, so we'll go ahead and put that in there. I had the wrong extension on there. Okay, and we will do UNG as well. Okay. And what I'm going to do is also try and find Tata Motors for Uniton. I didn't see a symbol come through, but I should be able to find it. We're going to do a search by TT. There we go, Tata.ns. So there you go. I'll go ahead and include that. And so we're going to do 1, 2, 4 systems. We're going to test those four stocks. We're going to test them against 52 methodologies, and we're going to see how well they work. Now, under trade options, real quickly, what I'm going to do is we're going to look at an account size. What I'm going to do is I'm going to start with an initial equity of 10,000 US dollars. Or actually, if we're testing an Indian stock, it'll be rupees too. So it's whatever currency your instrument's reported in. With that 10,000 currency units, I'll trade based on either a number of units. So that would, if it's 70 units, I'll buy 70 shares, and then I'll sell 70 shares. Every time it gets a buy signal, whether it can afford it or not. Okay. The next option down is based on a transaction cost. So this would be 700 currency units. Disregard what's going on over here. So whether it could buy $700 worth of stock every time it could buy in or out. Okay. What I'm going to do is percent of available equity. So I'm going to do that. I'm going to set it at 70% for the hypothetical backtest. And what that means is 70% of whatever money it has. So starting with 10,000 currency units, your first trade would be 7,000 currency units. And if you grow that up to $20,000 or whatever, it'll be 70% of what's ever in there. So it does allow you to test based on growing your account size. For broker, I'm going to not put any transaction costs because there aren't any for how I trade. You could put interest rates. If you're going to do margin, you can enter it in here, and it'll test that for you. One thing I'm going to set here, and I'm actually surprised that it's not set, is realistic market prices. And all that means, just real simply, is if it gets a MACD signal today, let's say before lunch, and then the price goes the other way, maybe that MACD signal didn't happen. So to be as realistic as possible, it waits until the bar closes. Since the bar, you can't buy a closed bar, buys at the open of the next trading day. So that's how that works. So let's go ahead and run the test. Okay. Again, let me go ahead and click OK here. I'll go ahead and start the system test. It's going to run 604 tests. So I explained to you what it's doing. Again, I could run all of these 52 ideas, or I could create my own ideas. But I could run all the trading ideas I want to against all of the optional stocks. It's a test I run all the time. And it would tell me exactly how well I worked on average. We could drill into it. For the purpose of the demo today, though, I only do like a handful of stocks just so that it'll run a little bit faster. Okay. And what it's, I did keep an optimization in there on accident, but what it's running through is it's actually going back and starting about 1,250 days ago. So you see 1,250 here. So it's going about 250, about 5 years. If you say there's about 250 trading bars in a year, which is a little bit more than I actually wanted to do. But I usually do just a year. 4 or 5 years will work fine, but it's going to take every buy signal and every sell signal in that time period. Okay, and you see that it's done. If we would have done a year, it would have been done a little bit earlier. If we did have done back to 1980, which is how far you can go back on most U.S. instruments, you can go back to 1980 and test ideas all the way back then if you want to with the Refinitiv data that we offer. It's a very, very capable back tester. Okay, so now remember, just to kind of sum up what we did, we tested 20 these 52 methodologies against those 4 or 5 stocks. And so what we're going to have here is, on average, how well those systems performed. Okay, and what I'm going to do here is I'm going to actually just sort them based on the average net profit. So you'll see quite a few of them worked really well. Okay, some of them not so well. Some of them didn't work at all. Okay, and so now I know, based on those 4 stocks in our universe, that out of those 4 systems, the fractal trading system 1, the fractal system trading 2, the projection oscillator, these are going to be our best performing systems. Out of pure curiosity, I'm just looking for MACD on this list. MACD expert system did well. It made about 32%, which isn't anything to cry about, but because we're looking back at, we're trying to figure out what works best, there's all of these systems above MACD, like the fractal trading system 1 and 2, the projection oscillator, all of those were more effective in trading. So the idea is like, okay, if I'm looking to trade, I don't think you should use this as a tool, as a way to bypass your education. But if I'm looking at this and fractal trading system number 1 or fractal trading system number 2 are the best performing systems, those are the ones that I'm going to want to learn about. You can forget MACD. It's maybe 15 down on the list of 50, right? Like, let's not worry about that as much. Let's focus on what works. And I think that's a strategy that you could take with you as just a philosophical, let's do what's working here. Let's do more of that. But in addition, on the trading, what I want to be able to do is focus on those methods that work and the stocks that they work with. So in that case, if I look at fractal trading system number 1, it made 276% on average over the last 5 years, 270 for the next one. Now, one of the things that kind of illustrates a pretty good point too is we want to find the right system for us. Okay, one of that is, how often is this trading? So over the last 5 years, this trade on average 81 times. So I'm going to say that that's like 20 times a year. Actually, less than that. My math is a little bit off, but that's quite frequent compared to 35. I'd say 35 on average would be 7 times a year per stock that you're looking at. So generally, the fact that we have the average net gain, the average percent gain, the best profit, the worst profit, all listed here for us, we can kind of see how well things work, how often they're trading, what our average trade profit versus our average trade loss looks like, what our average profit versus our average loss looks like, that kind of stuff. There's all kinds of reports. I'm just giving you the time. We're probably not going to drill too far into these reports, but we'll take a look at them real quickly. And again, as I was kind of talking about before, okay, so we'll go ahead and take a view here, okay? Now these are the stocks that we were looking at, okay? So on those, if I just sort them by percent gain, Tesla was kind of clearly a clear winner with this fractal trading system number 2. Over the last 5 years, it would have traded 32 times. It would have made 907%. What we're enabling you to do by being able to do all these tests against all these instruments is find out what works well overall, but then really focus in and see what stocks that they work well on. Okay, if I drill a little bit closer into this, I can kind of take a look. It's going to tell us our profit, our annualized performance, our buy and hold efficiency, how many winning trades we had, how many losing trades we had. Our average profit was about $6,000 on Tesla towards the end, or on average, I should say, not towards the end. Our average loss was about $522. Okay, we can see that here. We can see what our buy hold index is. We actually underperformed buy and hold with Tesla, but our profit loss was 91%. Our risk reward index was 98%. Both of those numbers go from plus 100 to minus 100. So 91 and 98 are really, really good. We can also take a look here at the equity, and we will real quick. This equity line is going to kind of give us an idea of how this performed over time. Okay, so we have a lot of information before we even start to learn about this fractal trading system number 2, about whether or not it's going to be something that's useful or not for us. So to answer your question in terms of how do you find the best signals, or Mr. Mad, oh man, I'm just going to call you IM. What I would want to do is focus on what works best. Okay, and you're going to get bad signals no matter what. That's just part of the game. That kind of comes down to the discipline. Those turtle traders, they're trading breakout systems, so they would lose probably more often than they would win money. But because they had a good profit loss strategy in place, they made money over time. And I think it was like, well, look at the Investopedia article. I don't have it written down. I do not want to guess. The bottom line, though, is if I want to look at this on a chart, I'm going to go ahead and plot it on a chart, which will open up the Tesla chart for me. I can see every time we got an entry signal and how that worked, every time we got an exit signal. If this is something I still like, oh, don't tell me we just crashed. Okay, we didn't crash. Good. If this is something I still like looking at these longs and these shorts, I want to learn more about this. So I'm going to go back to that expert advisor tool. And what I'm going to do is I'm going to find that fractal trading system number 2. And I'll give you a hint. Those fractal systems come up all the time when we're running these tests. Go ahead and attach this to the chart. Go ahead and click on close. Again, we're going to go right here. I'm going to move it to the last trading signal bar that we had, which was right here. Okay, I'm going to make this bigger so I can read exactly what it is. If we had run a scan and exploration on this day, Tesla would have come up. If it was in our scan universe, we could have opened this up. It would have said enter long today with a market on close order, or the market price on tomorrow's open. Now it's going to tell us a little bit what MACD is, or fractal trading system number 2 is. And while there are many definitions for a fractal in securities trading, the definition used in these systems is put together by Bill Williams and his chaos-based trading methods. According to Bill Williams, an up fractal is defined as a middle bar with 2 lower highs on side of it. So if you look at a middle bar, basically he's describing what some people may call a pivot, a high surrounded by 2 lower highs. That's what he calls a fractal. A down fractal would be the exact opposite of low, surrounded by 2 higher lows. So this system is based on a small fraction of Bill Williams' complete trading system. It enters above a long position when a price crosses above the most recent up fractal. The position would be exited upon crossing the low of the second most fractal pack. Okay? So if I'm looking at this methodology now, kind of understand how it works. It's buying when it goes above one of those up fractals, selling when it goes down below a down fractal. I understand that. If I wanted to learn more about it, I could look up Bill Williams on the internet. You could go to his website, profittunity.com, and really kind of get as much of an education that we want. But because we were able to test before we invested money, we know that this has worked at least historically. Does that guarantee it's going to work next year? No. Is it going to help us increase our odds? Yeah, absolutely. So that's kind of what I want to be able to do, is figure out what works, focus on what works, and find the opportunities for those methods that work. And the system tester is very, very helpful at doing that. Okay. One last thing before we kind of go into the pricing. What I'm going to do here is just show you a tool that I use every market day. Okay. That's our scanner. I absolutely love our scanner. What I'm going to do real quick is just show you how it works. So if I really like this PS fractal trading system, okay, I'm going to come down here, and on my list, I'm going to find the PS fractal trading system. Okay. Again, I'm running the scans every day. Okay. If I want to scan the fractal trading system because I don't have a long opportunity on Tesla today, okay, but if I want to find something that has an opportunity for me to buy today, again, I want to be able to focus on, I don't want to look at all the 4,500 optionable stocks, right? I just want to focus on what works. So I can easily come in here, and what I'm going to do, there are a lot of instruments here, but they didn't make it easy to find. I'm just going to drill into index constituents right here. And just for the purpose, I run the S&P 500 every day. We'll go ahead and run it. I'm going to basically have it go through all those S&P 500 stocks. And you can see how fast it's going, even though I'm broadcasting my audio, my video. Greg is behind me using a whole bunch of bandwidth as well. But you'll see that it's almost done. What we're doing and what it's done so far is it's looked at 250 of the S&P 500 and rejected 100% of them. Now you can see that because the rejected number went to 99.7, that does have something that I can look at that has a fractal trading system buying that S&P 500 today, right now, okay? But I didn't have to look at 500 stocks to tell you that. The two that actually have an opportunity based on that fact, and this isn't a recommendation to buy, cover that legally, SJM and PKJ. I just don't have to look at 498 stocks. If this is the method I want to trade, those are the two stocks that I can look at to see if I'm interested, and I can have some coffee. Well, I just look at those two instead of the other 498. I love MetaStock. I mean, I think that's, you know, for me, a lot of times, like, I'll run a really busy day. And people around here know that between the hours of 1:50 and 2 o'clock, I try not to do anything but look at my trades. And with MetaStock, I can look at any open positions that I want, see if I need to exit them. I don't spend a lot of time worrying about whether it's going to go up or down. I see if anything stopped out. And then after I'm done with that, I run a quick scan against the S&P 500 to see if there's anything I want to buy today. I'm not sitting here worried all day about what's happening. I understand exactly kind of like the method that I'm using, why I'm trading that way. And with MetaStock, it's a huge time saver because I can get all the trading that I want to get done in 10 minutes, and everything else is free for me in terms of, it frees me up to, again, I can ignore all this stuff that doesn't make sense. It doesn't have an opportunity to just focus on those things that do. It's such a time saver. So let me go ahead and just kind of go back to the summit slides here. We'll check for questions. I'm doing pretty good on time. All right, cool. Not a lot of questions. Hopefully that was helpful for your question I am earlier. Hope you enjoyed it. Again, such a good company, such a good product to represent. So many times we see, you know, competitors that are, hey, we have this indicator, it's free, it's included. Like, we have 52 systems that are free that are included. There's hundreds of indicators, but what we do a really good job is helping you understand which ones work and which ones work well for you, what the drawdowns look like, those type of things that you just can't do anywhere else. So we have two versions of MetaStock. We have what we call the real-time version of MetaStock with that premium news service. The institutional quality news service I was talking about a little bit earlier is going to cost you $250 per month, every month. You do have the ability to buy MetaStock, and this is going to go to your question from earlier about about the one-time payment offers for MetaStock real time. So $250 a month is what I'm recommending for anybody that's new to MetaStock. if you've been using MetaStock for a while now, you can get the MetaStock real time on a summit special offer right now. It's $11.95 for everybody else, and that will come with a money-back guarantee. For everybody else, if you're new to MetaStock, if you just stumbled across the YouTube, welcome. My name's Jeff. Good to meet you. But what I would recommend for you to try out MetaStock is what we call our MetaStock lease. And for $250 per month, you can get MetaStock. You can get everything we showed you here. You can get the news, the institutional quality news. It's only $250 per month. Okay. We also have an end-of-day data service. It's everything that we showed you today. It doesn't have the real-time news engine that I'm talking about, but it does all the testing, the scanning, everything that we showed you today. You can do in MetaStock DC. DC stands for end-of-day. RT stands for real-time. That's the only difference between those two versions. Okay. Our DC program's only $69 per month. What we're doing today as a trial is we're going to allow you to do a buy one, get two free. So if you pay $69 today or $250 per month today, the DC or the real time, you're going to pay for that first month, but you're going to get the second and the third month on us. So that means November, December, you'll be running until January 26, 2022 if you sign up today. Okay, that's going to give you more than enough time to go through all the tools that are in there, to test them, to evaluate them, to figure out if scanning is going to help, if being able to eliminate all the stocks that don't have an opportunity is going to help you. And for that, if it's not helpful, then you can just cancel your subscription. There's no commitment to it, but we do want it to work for you. And it's a heck of a trial. I mean, we're kind of getting into the period where a lot of people have some downtime between Christmas and New Year's, where you can kind of go in and do a lot of analysis of stocks to see if this works for you. So I'd say now is a great time to to kind of look at this. Also, usually if you're looking at kind of when the market moves in good trends, it's not the summer. So we're kind of getting into good trading periods as well. So I'd encourage you to try this. I wouldn't trade without it. And it can cost you as low as $69, which is about $20, $23 a month. So that'll include Metastock 17. We'll give you the data region of your choice. We'll do installation for you. We actually do what we call a service called white glove installation support. And all that means is we actually dedicate a one-on-one appointment to you for up to 2 hours, where they will make sure you've got everything installed. They'll help you with the installation if you want them to, and they'll walk you through all the tools, whether that's like the system tester or the forecaster or the expert advisor, whatever it might be, to kind of just make sure you understand how everything works. We started doing this a couple years ago. It was our support manager, Stephanie's idea at the time. Oh my gosh, people love it because, and I think that's one of the reasons we have such a loyal customer base. Again, we have more people in support that are helping you than we have in sales trying to sell this to you. And anytime you have questions or need something, you're welcome to reach out to them. There's no charge. There's not an expiration on the support. And you're talking to a person here in our office. There's times where we get 100% on our support ratings. It's just, I feel like we do such a good job of supporting it. So you do get unlimited support, but you also get that white glove appointment where you can sit down. In addition to that, we'll give you Unleash the Power of Metastock. It's a $99 value, and it's just a home study course that you can go through that's going to walk you through it. So you can sign up. If you just sign up for Metastock today, welcome. You should try it out. There is a reason that it's been rated 28 years in a row, #1. Give us a call, 800-882-3040, metastock.com/sales chat. I'm going to ask a question. Are you going to email the recording of the presentations today? Absolutely. So we are simulcasting this to YouTube. If you go to, and within about an hour after the end of the event, we'll send you the YouTube link. I'll also paste it in as soon as I get Oscar started here. So there you go. We will be recording the presentation today. We are also going to include, let's see, we do have a question coming in and I have a time for it. So let's kind of look at it. Mr. Dutt says, I will be appreciated if you can arrange to upload videos so that we can learn step by step the use of all the tools you have incorporated in the software. Yes, we do have that. That's part of this Unleash the Power of Metastock. All of the tools step by step in terms of how everything is put together is laid out there for you. So if you use a Metastock, just get in touch with us, Mr. Dutt, and we will send you that. Okay. We answered the question on the recordings. All right. So again, 800-882-3040, metastock.com/sales chat. Give it a go. You can also do that with the Summit Action Pack. We had Rahul in here talking about the ATM just a few minutes ago. We've got his course that's available. We recorded that. It was very popular a few years ago. We're going to have Vince Vora. He's going to talk about the victory methods that we created for him earlier this year. You've got Magic Trader, the elite service, where he kind of goes in, and it's a chat room that you can join. And there's a lot of stuff. We'll talk a little bit more about that that's included with that. The customers of that really, really like it. We also get the Magic Trader service itself. You'll get Guy Cohen's OVI traders, Oscar Carboni's class that we're going to do with him in just about a month or so. You get Learn Metastock subscription, and you'll also get Unleash Power Metastock. All of this stuff, 2 years of stocks and commodities as well. All this stuff would normally cost you $5,000 here at the event as part of the Summit special, $1,990. Okay, you can take advantage of that at metastock.com/summit deal. You can give us a call at 800-882-3040. We're going to go to metastock.com/sales chat. All right. Nitin, is there a lifetime price for the software? Yes, there is, Nitin. I didn't really kind of go into a lot of detail because my goal is to kind of get you to try it. I think Metastock will pay for itself. So, and I think the easiest way to do that is to just try it out. So if you try it out and you want to buy it as a one-time cost, there are some options for that. And if you're interested in doing that because you've been using Metastock for a while, we'll give you $200 off the real time if you want to get in touch with us today, Nitin. So, and Eamon, I'm sorry, I don't see your question, but I will I will look for it. If you want to restate it too, that's cool too. I don't see a question from you though, Amit, that I missed. Except for the only comment I see from you is, what about answering my question? So please retype your question in the chat. I didn't see it come through the first time. I don't see it in the logs. Type it in again and I'll answer it for you. I promise. Okay? You're welcome. All right, cool. Let's go ahead and kind of thank our sponsor, Stocks and Commodities Magazine. If you're watching us on YouTube, make sure to like and subscribe. When you're done with that, go sign up for a free copy of the Stocks and Commodities Magazine. They're a great sponsor of ours. You can do it. You just have to fill out a little form at metastock.com/tradersummit, and they will send you a free issue. There you go. In addition to that, while you're doing that, you can sign up for the CMT Association's guidebook. CMT is a really well-reputed organization out there. They've been a sponsor of the summit for a couple of times now, and they're certainly been great. I love those guys over there. So you can find more about that at cmtassociation.org. Okay, and let me put it back. Let me go ahead and pick up the stuff I knocked off over here, and get my headphones back on. Let me ask, are we going to, yes, okay, if that was your question, yeah, absolutely. We will send, Amit says, are you going to send a link to the recording of the presentation today? Yeah, 1 hour after we get done, I'm going to send you that link. So absolutely. You can also, I will send you, actually here, if we do this, it's right here. If you want to bookmark it now, you can have it. There's that's the link that you're going to get 1 hour afterwards. Okay, I hope you enjoyed that. Thank you for sitting around for that. Our next presenter is somebody that Greg, or our marketing guy, calls a force of nature in the market. I love Oscar. He's absolutely somebody I consider a good friend of mine. I love the animated style that he uses for his presentations. I love his training style. And I love it so much, in fact, that I invited him to do these special courses with us here in November. So we'll talk a little bit more about that when he gets done. Oscar Carboni runs a camp called OmniCamp in Vegas. He does it a few times a year, a very select group. And you can find out more about him at livewithoscar.com. Oscar, how are you doing today?
I'm doing well, sir. How are you doing today?
Good, good. Let me see here. I'm going to go ahead and make you the presenter. Go ahead and click on yes.
I think I should be able to share my camera. Let's see if I can get that done. All righty.
The screen's coming, and oh, wow. Wow. You just made, sometimes I take pictures with babies so I look better. And you just improve the quality of the looks on this. We can see you. Your presentation is coming through. Oscar, I'm going to get out of the way. Thank you for joining us today.
Thank you for having me, Jeff. Metastock, thank you so much. And for you presenters that have presented before me, the ones that are coming after me, if you're paying attention, there's a lot of good things you can learn here, a lot of great techniques. So pay attention to the whole crowd. I thank you all for showing up here today. Let me just move this crazy camera out of my way so I can see what's going on. All right, traders. So once again, welcome, welcome, and thank you. Welcome, traders from across the globe. You've seen some presentations already this morning, and those presentations are likely going to sell you software and some great things that you can plug in and help to trade with. But what I'm going to show you today will just be simple techniques that you can use going forward for the rest of this week. In fact, last night at about midnight, I decided I would sit down and build today's presentation. Kid you not, had nothing until midnight last night. And the idea behind this presentation is to see exactly what's going on right now, top day, find a few different charts, a few markets, and then show you what's going on those charts and how hopefully we can make some money going forward for the rest of the week. Now, we know that trading is risky and you should never trade without stops. Put your stops in first. In fact, today, and luckily I had to stop in, I gave back about $5,000 today on a gold trade. Not all the trades work, kids. The thing about techniques, the ones that I'm going to show you, is that if you do see something, let's call it a flag, let's call it any formation at all. If you happen to see a formation and you use that formation, the consistency behind formations is to use them every time. So if you see, let's say you're a gold trader and you see a bull flag in gold. If you trade every bull flag you see without question, 7 to 8 out of 10 of those are going to work. So, and that's with any formations or any technique in technical analysis. So the idea is to be very consistent when you do analysis and very consistent when you trade that analysis so that the consistency comes your way. We do things like double tops. We sell double tops. If you sell every double top you see, I am telling you 8 out of 10 of them are winning techniques. However, if you sell one and it loses, you back off on the next one and it makes you worried a little bit. So that's one of the things that you should stay away from. Just a few tips and tricks I'd like to tell you about. If you are going to trade and you have specific techniques that give you buy and sell signals, make sure that you never, ever shy away from them. And that's how you'll get your consistency. So let's take a look at some of the charts that I would like to go over today. If we find time at the end of this chart segment, you can ask questions. I'll be more than happy to answer them. If we run out of time, have no fear. I'm literally going to perform for 3 straight hours for Metastock in November. And I'm sure Jeff will tell you about those dates and how you can register. All right, so what's really active out there? Bitcoin, right? Who doesn't want to know about cryptocurrency? So let's go there. Is Bitcoin about to best a double top? Now, when we know one technique. When we see a double top, we sell a double top. Now, if you are a day trader, realize that when this double top hit, $8,000 of Bitcoin movement took place. $8,000 was shaved off the price of Bitcoin right after that double top was hit. So if you're looking at this chart with me, let me ask you a question. How many useful tricks can we spot on this chart right before my eyes? Let's see if we can come up with a few. Right off the bat, very simple, we have a double top. So one lesson on this chart that's simple to use. Anyone with a good pair of eyes and a daily chart can do it. You do not need to be a chart master here. We have a top. The market runs up, 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 up for a long time and puts a top in and then comes back down. When it finally gets back to that second top again, rest assured sellers will be waiting right here to sell that market. Why? Well, a lot of them literally got long and they bought over here at number 1. Well, once they bought at number 1 and held on through this entire storm, it gets back to number 1, which is now number 2. They want out. So you get a pullback, and it's almost a guaranteed lock, and that's the reasoning why. That's the mentality why those double tops work. What normally happens after a double top is a lot of times you get a pullback and a rally through that double top. And Bitcoin is one of the markets that I think will participate in that. So what we have on this chart so far is a double top. There's also a very smart moving average on this chart. Watch this. Let me just make it a little thicker for us. Look at how well Bitcoin plays off of this moving average. When you get below the average, you start to drop. Try to get above, no dice, we drop again, right? So try to get above here. Try to get above, no dice, we start dropping. Once it gets above, up, holds, up, holds, up, holds. Gets under, stays under. Gets above, big rally starts. So 2 techniques. We have the double top, and we just about bounced off of that average. Another technique on this chart, staring us right in the face, is look at this channel. Channel line, look at the channel coming in at the lows of that Bitcoin move and right at the trend line. Isn't that interesting? Right there. So you've got Bitcoin hitting a trend line where the average comes in, and that average almost always works. as you can see in the past. So we've got a double top on here. We've got a moving average. We've got a channel. There's something else on here too. Let me move this out of the way. Look at what's going on right here. If you've ever worked with me, you'll recognize that a head and shoulders is a big thing in technical analysis. However, there are large head and shoulders and smaller head and shoulders. A very large head and shoulders, let's say something that encompassed the whole top of this chart inside this rectangle, that would be considered a topping style head and shoulders. When you have a very small head and shoulders, like this one right here I just drew in, that's considered a continuation pattern. 90% of the time, that will just be a continuation pattern. So what do we have for Bitcoin? We held the average. We held the trend line or the channel. We have a continuation pattern, head and shoulders, about to break out from that double top. Simple techniques that we can easily use moving forward. So what I will tell you to do with Bitcoin is very simple. If it decides to rally up and get above that red line, which represents the double top, you can jump in. You can start buying it again, looking for new highs. If in fact we end up dropping below this channel and this average, you can start selling the rally. So the advice for this week in Bitcoin is let it tell you. For now, I see it holding. It looks fantastic. As long as it holds here and continues up, you are a buyer of dips. If you get through here, you can sell the rallies, and that is good information for the next few days trading Bitcoin. I hope that helps you. So we're going to go look at some other charts. Now, last night, I literally just went through a series of charts, and anything I found that I thought I would want to use moving forward this week, I drew it up, and we're going to go over it together. So let's go take a look at something else. Chart number 2, NASDAQ. The advice here, buy the dips. Now, I am doing analysis based on yesterday's close. I do not know where the markets are today. Today's daily bar is not here. This is the opinion I've gotten last night at midnight through 4 in the morning when I finished my analysis. When I finished this webinar about 4 in the morning, this is the analysis and the advice I would have given you at 4:30 this morning. And I'm going to continue, of course, using this advice for the next few days. I would be a buyer of dips in NASDAQ. Why? There are many reasons on this chart to buy NASDAQ. One, look at this average. Of all averages, this one is like the king of averages on the NASDAQ. Look at this perfect hold here and the next one here. You break under it, you can't get above. A fantastic hold here. So what do we have? You started with a flat top, which absolutely worked, an Oscarism known as the flat top. If you follow the arrow, you'll see after the flat top, we had our crack through the average. Down we go. In the fashion of a bearish channel, the red bear channel. Now we've gotten above the red channel, right? Look at that breakout right there. You got to love this. Finally, a breakout above the channel. And what's it do? It starts to begin to build a new channel, this green one, a bull channel. We like that. What else is in the bull channel? As soon as the bull channel started, you got above the average. All right, let's darken that circle. You got above that major average, and I kid you not, the street follows these averages. They use them like algorithms. I kid you not. It's as simple as that, some algorithms. They literally use gatherings around an average. So you got above the average, started to make this upward channel in green, and look what else is appearing. This is why I think NASDAQ today would be a fantastic buy based on the analysis from last night. So let's make this a little thicker and we'll see what it is we have here. So what's emerging right here in the channel, which I think is fantastic. So it's in the channel above the average. I've got a green omni and a bull flag. You know you got to buy NASDAQ today. So today we are buyers of NASDAQ if we can get filled. These are the reasons last night, plus my green omni, are the reasons why we would be buying NASDAQ and why we would continue buying NASDAQ likely tonight into tomorrow. I expect breakout of the flag, rally towards the top of the channel, and then move even higher, challenging the double top or what's now known as a flat top, which will be a double top when NASDAQ hits it. Now, will NASDAQ get above that double top? We're going to find out about that as we continue through this presentation. Let's go to another chart now. Chart number 3. This chart, once again, my opinion, last night, 4 a.m., buy the dips. Let's go over the reasoning why. I believe that the Dow Jones is helping the NASDAQ get above its double top, and it will help it get above the double top this week. Why? Well, we have a double top in the Dow, which is the market, right? The Dow is the big boomer. It is the stock market. We bested the double top. We are above the double top. NASDAQ isn't yet. If the Dow Jones, one of the leaders of U.S. indices, is above the double top, then NASDAQ is very likely going to get help and get above its double top. So I find it's very promising that you've got the Dow Jones pulling the rest of the stock market higher, and I think that will continue this week. Of course, there are fundamentals behind this as well. Fundamentals, well, Powell came out a couple of days ago and said he doesn't think this is a good time for taper. He doesn't think this is a good time to raise rates. We get right through a double top. In most cases, double tops, you sell them because they drop. But this was news coming out just as we got above the double top, and that's why that double top is going to be bested in NASDAQ as well. Technically, Dow Jones is dragging it through. Fundamentally, you know, Mr. Powell gave us a reason to not worry so much. The party will continue. The music will keep playing. So, all right, we'll take it. You know, I'm oddly enough, I look at charts and I can see trend lines on charts. And while we were looking at that Bitcoin chart, there was a trend line that was just jumping out before my eyes, which I never put on the chart. And I think I'm going to go back because it's bothering me and I don't like to have incomplete analysis. So while I'm speaking to you about Bitcoin, I'm sitting here analyzing the chart and I'm saying, wait a minute, doesn't this trend line go right up here? Now watch this. You can drop a trend line right from here. I'll bet you this goes right to the highs. Something like this. This tells me it's going to go right to the highs. I can just see the way it's shaping up. And it's been catching my attention, so I have to look. Oh, look at that. This is why we extend trend lines, kids. It was catching my attention the whole time. You see how I just connected this high to this high? And then I extended it out, and look what it does. It nails the high move of Bitcoin before it cracked at the double top. That trend line and the double top all came in at the same spot. More confirmation that the double top was going to work, which it absolutely did. So more techniques on that Bitcoin chart that could have and would have helped us if we were paying attention to them. So let's go back to 3. Sorry about that. I had to get that out of my mind. All right, so here we are. Buy the dips in the Dow Jones would be my opinion based on getting above the double top. However, we don't trade the Dow Jones. So I would be buying the NASDAQ because NASDAQ is getting help from Dow Jones today. Let's go see if there's any other pretty charts out there that can teach us a little something today. Ah, the E-mini S&P, another one that if you ask me, more help for the NASDAQ. ES is dragging NASDAQ through its double top and will go through its double top. Now, the double top here in the E-mini S&P has been bested. Let me clean this up for you. Look, we are above that double top. You see it? We're above the double top. That's a fantastic thing for the NASDAQ because that means Dow above the double top, S&P above the double top, NASDAQ takes out that double top. What else do we have on this E-mini S&P chart? Have you noticed that the algorithm style on the E-mini S&P that Wall Street uses happens to be a simple 50-bar moving average? They might want to call it an algorithm to trick you. It's a 50-bar moving average, and look at how well it's worked. Look, I've got it all counted out. Every time it bounced off that algo, if you will, we rallied back up, right? 1, 2, 3, 4, 5, 6, 7, 8. Then it breaks. Boom. We stop counting. Gets underneath. Tries to get above, right? Look at this. It breaks. Let's grab this little tool here. It breaks, tries to get back above, cannot. Tries it again, cannot. Third time it gets back above, we start counting again, back above that algo, and it explodes. Now we're above the double top. You buy the dips in E-mini S&P, you buy the dips in NASDAQ, because NASDAQ's being dragged up right now or catching up to this S&P chart you just seen, as well as the Dow chart. So I hope you're understanding these techniques. I am trying to keep this really simple for you so that there's no trickery and you don't have to download anything. You can just continue to use these techniques for the rest of the week and hopefully the rest of your trading careers. So if you do have questions about this, once again, make sure that you let those questions come out with Jeff, and I will see if I can get to you. All right, so yes, ES is more help for the NASDAQ. I think NASDAQ is the best buy on the board for trading today. I don't know where it is at the moment because I literally have no quotes up on purpose so that I'm not jaded by where markets are now and what my analysis told me last night. And I'm assuming most of these trades are going in the right direction because that's what good analysis does. So let's go look at another technique, or at least another chart that I found last night that I thought was interesting. So in here should be a chart 5. Am I correct? Yes, there we go. Google. Interesting what's going on here. I don't know if Google's up or down today, but here's what I will tell you about Google. The street has played off of 2 key algorithms for months, and for years practically on Google. I've got it all mapped out for you right here. It's really easy to see. Even if this looks complicated, it's not. So they started to key off the 52 algo right here at number 1 and just concentrate on the blue average. If you'll note, it worked extremely well at every single opportunity. Watch. Look at, let me make this a little smaller so I can just illustrate. Look at how well it works at every single number. Right? Boom. It just worked so well. Gets below, stays below, gets above, stays above. Keyed off of it 4 times in a row here. Then the explosion takes place. And then something starts to happen. We switch to another algorithm. Right about here at number 1, it switches to the 25. And you watch this orange line, and you'll note that immediately they just fell right into this orange algo. The blue one didn't seem to matter anymore. And it worked at every single number. Every time it hit, it worked once again. So I thought I would point these out to you because they're really simple to follow. And you will be able to tell when the street who uses this stuff is going to sell or buy Google. Now, don't know where Google is today or at this moment in time, but I will tell you as of last night, we were below both algos, below both. So it has a chance to maybe come off a little bit. I'm not saying that it's going to crash. It needs to get back above those algorithms. So my advice for Google would be you stay below those algorithms, you expect this market to start a downturn. You get back above them and you will break the contract high and make new highs. It's a sit and wait type of market, but you do not have a lot of time. 1 or 2 days, you will know what the deal is. If it cannot move higher with the strong NASDAQ buy signal that we have, that would tell you even more so that these algorithms are holding it back. So let the market tell you what to do and jump on board as soon as it makes its choice. Now, I'll make this one a little bit lighter so that you can see how it crosses, how it was working so well on the blue. And look right here when it just goes right to the 25. And boom, like magic, the street just picks up on it. So it's simple techniques like this that should help you figure out where markets are going to go next. Because I'll tell you right now, these charts are an absolute roadmap to future market movement. They're absolute if you can read them correctly, and you do not have to overcomplicate this. Simple is best. So we've seen Google, we've seen Bitcoin, NASDAQ, the Dow helping NASDAQ, ES helping NASDAQ, and Google, not quite sure where it wants to go yet, because the street is playing around these pretty decent algorithms. Let's go see what else we have. CMG. Here's a gift, kids. Let CMG tell us, boy, it's going to happen right away. So the 100 bar moving average is almost a giveaway on CMG. My advice, and you'll understand it in a moment, is wait and see. If it breaks, sell the rallies, which means if it breaks down. If it holds, as usual, buy the dips. What does that mean? If you are a CMG trader and you don't recognize the 100 bar moving average, you have not analyzed CMG well enough yet. It is the street's darling when it comes to CMG. CMG is Chipotle, by the way, if you don't know. When it breaks, it gets hammered. Boom, 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 boom. When it gets above, massive rally. But you'll note that the 100 bar is not in its way very often, right? It's a very smooth average that stays out of CMG's way. When it gets in its way, it becomes meaningful. Look where we are now. That should hold. Let CMG tell that to you, but that should hold, and you should be able to buy the dip at the 100 bar average or close to it. Now, if it breaks, this is why it's a wait and see. If it breaks, you can start selling rallies and expect to get down to the bottom of this channel. Why? Well, because this channel really came into play right here. It finally got above. You couldn't get above this channel for a long time. If you look here, couldn't get above, right? So we have a valid channel, couldn't get above, didn't even try, finally breaks out and stays above until here. Now you're riding back inside the channel, making it a little more bearish. Maybe we trade down to here. That 100 bar moving average is going to tell you if the market settles below, if CMG settles below the average, it's telling you it wants to drop to the bottom of this channel. If it holds this average, it's telling you it's going to go back to the top of the channel. And that's how I want you to use CMG for the rest of the week. I hope that advice helps. It will tell you, just be patient. Could be telling you today. I'm not looking at live quotes. Sip of my Disney tea before we go on. Oh, here's an interesting one I found last night. I think you guys are going to love this. Watch this. Where are you, number 7? Oh, right there. Check out Apple. I got to give this one a round of applause. What a chart. What a market. So, Apple algos algo traders seem to be keying off the 40-day algorithm like crazy. In my opinion, like crazy. Keying off the 40-bar algo. I've got that all mapped out for you. These are simple but powerful techniques. And this is, I call it an algo. This is literally the 40-bar moving average. Don't let them fool you. So, simple but powerful techniques that you could use as soon as tomorrow, today, whenever. What do we have in Apple? Not only have we gotten above the algo or average, whatever you want to call it, the street likes to call it an algo, so you get confused. The bull flag and the algo have met at the same time. We have a bull flag bouncing off the top of an algorithm breakout. In my opinion, we're going up in Apple. The bull flag should take us higher, and I would be a buyer of dips in Apple. The only way I would not is if we somehow settle below this average. Average comes in at, I guess, around 146.90. Settling below that, that would worry me. Staying above this average, I think the flag will project and we break out towards the upside. And that's what I see in Apple. And Apple's a big, big player out there. A lot of funds have stocks in Apple. A lot of you have stocks in Apple. This is an easy way to figure out what the street is going to do with Apple next. Watch the algorithm. And certainly right now, because we have a bull flag, keep an eye on that. Breaking out of the bull flag should give you a pretty nice trade in Apple. So I would be a buyer of dips based on this formation if I was buying Apple today and probably going forward for the next couple of days. Let's see what else is out there. Let's see what else we found. I think we're on number 8, aren't we? It's chart number 8. The leader of U.S. indices. Look at this leader just doing its job. 5,400 S&P target. Here we come. Look at this insanity. I'm so glad to see this happen, because while this was happening, while we were riding along inside of this channel, you must realize that the Dow Jones Transportation Average in many cases is our leader. And our leader was riding in a seriously ugly bear channel. And anytime it got to the top or near it, it would fall apart again. And if the leader is in a bear segment, you know it's going to be pulling down on the followers, right? Well, I am so glad to see that we broke out. Nice breakout. We broke out of that. There's also a very strong average here, which we broke out of as well. And it immediately went into a fantastic, very strong channel towards the upside, dragging the other markets with it. This is considered the leader because it's the transportation average. And it is absolutely helping NASDAQ and stocks go higher this week, hopefully more this week going forward. So far, what we've seen this week, everything's keying off of that leader exploding. Now, there will be this, just to keep your eyes on everything. This right here, where this line is, will be some kind of double top test when we get there. Are we there now? I wouldn't really know, because the real time is turned off, so I could do this webinar with you. But this red line I just put in represents the next double top challenge. You see that one here? It will come in over here. So we do have to pay attention to that. We've got to watch for that double top when it gets there. But the transportation average deemed the leader of U.S. indices, and that doesn't mean it leads every day, but an abstract view that you should have is that when the transportation average is taking off in a direction, it's trying to tell the rest of the market there's more activity taking place, more shipping. If a product has to be made at a factory, more raw materials have to be shipped to that factory. The factory has to then get it, create a product, ship it out to distribution centers. They have to be shipped to smaller retail stores, or entities have to get in some form of transportation to go get that product. That's why it's considered the leader. So if the transportation average is starting to telegraph, make sure you pay attention. It is telegraphing the upside for now, and I think NASDAQ is going to listen. So let's see what else we have that we can speak about here. Oh yeah, Zoom caught my attention last night. Check out Zoom. So there's a lot of good stuff happening on Zoom, but the street's darling on Zoom is the 55 bar moving average. They just love it. And I've got it mapped out so that you can see each instance. It's not just here, it goes back further. It's every time it gets to it. You see that? It's every time. So, okay, if that's what the street wants to use, I've got a pair of eyes. Nobody has to send me information and tell me, Oscar, this is what Goldman's using on Zoom. I can tell by looking at the graph, and so can you. I'm not saying it's Goldman exactly, but whoever. So 55 moving average, 55 bar simple, seems to be what they key off of, and guess what we are about to test right now. Just wait for the signal. That's my advice on Zoom. I want you to trade with the smart money. The smart money follow it. What are they doing? They're keying off of the 55 bar average, and so should you. Simple technique in Zoom that I hope you use for the rest of this weekend moving forward. Now, if Zoom rallied today, boom, you probably had a chance to test that average. Get above, explosion takes place. Failure to get above, you will have the market crack. So it's so close, as you can see right there. Another signal that is absolutely waiting for you to use. You just need to be patient, see where the market closes today, and see what you've gotten. So if you've closed above that average today, wonderful. You can become a buyer of dips in Zoom. If you fell at that average for 2 days in a row, then you start selling the rallies in Zoom. And that is the information I have derived from drawing this chart. At the same time, we've also been in a downward pattern, right? Look at this channel, downward, downward, downward. So it's not been bullish by any means. So thinking it might fail at the average kind of makes sense. We're not supposed to think, and our opinions are meaningless, and I do not use my personal opinion for trading. But we are in a downward channel, as you can see. So if you were going to take a guess at whether or not it fails at the average, you can start your guess with it should fail there. And then whatever happens past that happens. So just wait for the signal. That's my advice on Zoom. Is there anything else on here I would like to point out? Let's see. No, I think that's about it. I mean, there's lots of flags and great techniques we can go over, but I don't want to overburden you. I just want to show you a few simple things that you can use moving forward. So we started off looking at Bitcoin, which in my opinion is the absolute leader of US indices, the absolute leader of all the other crypto. If Bitcoin's having a day, the other crypto's having a day. If Bitcoin's having a bad day, you know, most times a lot of the other crypto, unless there's some sort of pump and dump stuff going on, they're going to have a bad day. So we've got Ethereum looking to make a decision, and I think that decision will be made by Bitcoin. Let's go look at the Ethereum chart. What number would that be? I think we could be as high as 10 already. Yes, we are. There's a double top here. The ETH double top should follow whatever Bitcoin does. Let's go back so that we do not overlook any of this. Remember, Bitcoin, this whole thing we worked on with this double top, the trend line, all this craziness. Let me take off a few techniques so it gets clean. Bitcoin absolutely, positively leads Ethereum on most occasions. Sometimes Ethereum goes off on its own, but you know, Bitcoin sort of leads crypto in general. So we've got this double top. We had the pullback from the double top, and now the market is deciding whether or not it wants to turn this into a small head and shoulders continuation pattern and blast off through the double top. Well, if you now look at Ethereum, it's at the double top, had a little pullback, and is just waiting for the signal. So I think you let Bitcoin lead the way on Ethereum, and whatever Bitcoin does, follow it with Ethereum. If you're a crypto trader looking for just a little bit of advice on how to trade your Bitcoin or your Ethereum this week, that's what I'm watching. That's what I'm looking for. I'm expecting the Bitcoin to hold. So we'll see. Ethereum should go through this double top just like Bitcoin did, or like Bitcoin is trying to do. It hasn't yet. I do like the fact that it didn't turn into a copper debacle, because if you look at something like copper, it hit that double top and just crashed down for a bunch of points. I don't know if I'll pull up the copper. Well, maybe we can talk about that a little bit later. So if you've been following along, Jeff, are there any questions I can get to now before I show the last few charts that I had in mind?
Yes. Some interesting ones today. Amit wants to know, Amit says, I love your jacket. Is it a historical memento or is it current?
Okay. It's both. Historic because I had it created and used it on the trading floor for many years. And it's current because I wear it every day when I trade. It's a little of both. It's authentic and actual, but I still wear it every day. Puts me in my calendar.
Diana says we should see the back.
Oh, you should, huh? I don't know if I can do it. Can you see?
All right. Let's see. We did have a let's see. Amit wanted to know why you chose a 40-day algo for Apple.
I didn't. The street chose it. I just noticed it and mapped it out. So in other words, I don't actually choose anything. It's not my choice. I just listen and follow whatever the charts say, because charts are literally a visual look at all the news that's coming out, all the news that's already come out, the cooking of certain books in certain companies, government reports, traders' reaction to such, that's all already built in the chart, which is why I tend to not think and just do what the chart says. And they're not always going to be right, and we're human, so we read them incorrectly. But I didn't call that a 40-bar algo. I just saw what was working and said, well, the street's using a 40-bar algo. That's the one I'm going to play with from now on. So I kind of let the street call it, and then I just look for it and start using it.
Chris wants to know what your opinion is on crude.
All right, so if you want me to start bringing up other charts, let me show the last two charts I already had prepared, and then we'll go over charts that the fans would like to go take a look at, the traders.
Okay.
So,
all right, that sounds good.
In this presentation chart, this way I can start bringing up other charts for you. In this presentation, I found another couple of charts I thought last night that, I don't know, looked to me like we should be using them. So is that number 11 in my list? It sure is. Look at this one. Parker Hannifin. All right, so not everybody in the world even knows it or trades it, PH, but it's above the 100 and 200 ball moving averages. It just broke out of this channel. And when you get above the 200 ball, boy, the street just goes crazy on that stuff. They love anything above or below a 200 ball moving average. They love to sell below and buy above. And that one is almost like a guaranteed trigger, the 200 ball moving average. It's just been that way. There's no need to wonder why. It's just what the street seems to adapt to and adopt as their own. And I use it all the time. So the 200 ball moving average is this teal one right here. The 100 is green. The fact that the 100 and 200 got together and Parker Hannifin got above them after breaking out of this channel, wow, you got to like this. I think this is a decent looking buy for the next couple of days. So buy the dips in Parker Hannifin if you're a PH trader or just looking for a stop trade. And then finally, for you meme stock traders, I don't know where it went today. And in fact, maybe some of you can fill me in on that. Let's find it. Why are you not in my list? I don't see chart 12 in my list. We'll go find it elsewhere. Charts number 12. There we go. Check this out. Now, maybe it went up today. I don't know, but my work tells me that AMC is no longer in vogue, a meme stock. AMC, you know, they went crazy on the Reddit. Well, I don't know if it's that good of a stock anymore. I think maybe you might want to consider getting out of this. It is below the 100 ball moving average. That is this blue line, which getting below it makes no sense because it hasn't been below it at all. Look, it doesn't go below this long. It doesn't go below this average at all. Right? Not a chance here. Not a chance here. No way right there until it finally breaks, and now you can't get above it anymore, right? Cannot get above and cannot get above. So that tells me that we've got a head and shoulders, which is much larger, right? Much larger than the one I showed you earlier. This one, there's a bigger one, takes the whole top of the chart. So this could likely be one that's given an actual sell signal. We'll know soon enough. And you are below the 100 ball moving average. Is anyone out there today watching AMC? Is that stock up or down? Because right by the average is where you really have to figure out what it's going to do. I don't want to pull up a window in front of you guys. I mean, I could get it in 30 seconds. Let's just see.
I would call it flat looking at the chart.
Ah, okay. It's interesting. So it didn't go up.
The range is tiny. And right now it's 36.90, 36.09. Or 30, yeah, 36.09.
It's down 36.83 cents. It's down a teeny bit. All right. So it's behaving in the way I thought it would, and keep an eye on this for the rest of the week because I don't like the way it broke down below that average and created a formation that others can see. So maybe they're all going crazy on another stock and they're starting to get bored with AMC. we've all seen those meme stocks going nuts. You never know which one they're going to roll into. But the analysis many times will tell you a storm is coming, and you end up catching it anyway. So these were the stocks I wanted to, well, the charts I wanted to present to you, and I hope that there were some lessons in here or some setups that you could use moving forward. I thank all of you for tuning in. And now let's go discuss crude oil. Oscar, what do I think about crude? Well, I'd have to make a lot of people angry by saying, let's go, Brandon, because crude's not supposed to be up here. Why is crude up here? It doesn't have to be. We have plenty of crude on this planet. So it's really not good for us kids. CLZ, what is this one? Right? We don't need, oh, good. My goodness, we don't need crude doing this. All right, so price of crude has been just skyrocketing, as you can see. It has been in this channel, which I think you just kind of ride till it stops. There's a few different channels here, but we can do a larger abstract, and then we can do a little tighter channel as well. But you're in a channel. You've been in one straight up. You know, there's a tighter one here too. I don't want to get too, we don't have to break it down too much. You can see there's tighter channels inside of this channel. In any event, this is not good for the market itself. When you've got crude moving up like this, it has to start to put pressure on the stock market. At some point, it has to. Because of that transportation average I showed you, that everything has to start with transportation somewhere. You've got to get raw materials to a factory. You've got to then get the goods that were made out to a distribution center or a retail center. You've got to move to those centers to go get it. A lot of transportation takes place, which uses a crude oil. And the price of crude moving means that everything that gets shipped is costing money. And if that's costing money, companies are going to feel the pain. And either they send it all the way through inflation, make the product smaller or cheaper. So this going up is not good. But what I would tell you is because we have an established channel and an established trend line, here's how I would tell you to handle crude. Just using simple trend line analysis, this is your spot right here, and we'll find out what it is. Let's just label crude. So it's crude oil daily. You see this line, which is the top of a channel, and I'll show it to you so that you realize it's the channel, and that channel actually goes back further. When you get to the bottom of, when you hit this trend line and bounce from there, you expect a nice fat rally top line. You get under this trend line, you will go to the bottom one. There is a ton of money to be made in between these two numbers because we're talking not as high as 85.30 and as low as 80.50 to 80 even. 500 points of between here and here, and this is how you should play it. Off this, become a buyer. Gets below this, become a seller. I've got an Omni that actually tells me what to do. It tells me where to sell, what to buy, what to sell, and at what prices. That's not exactly what this webinar is about, because the Omni, you need to come to this. And they need to teach you in a 4-day session what happened here online. So I'm showing simple techniques that you can use moving forward. So that's what I would tell you about, of course, putting in this swing day bar up tells you crude is supposed to go lower today. Right. That one bar alone tells you it should go lower. But you've got this line in the sand sort of area. And that's what we're using somewhere around the 82 even mark. You get below 82, not good. You stay at 82, you dips. So that is my brief opinion in crude without the Omni.
How
Is there
about
another question?
Yeah, Dan would like you to look at Netflix.
Netflix. I don't know if there's enough room on the top of my chart for that one. An insane move it's had. Netflix. It's .o on this one, right? If I remember right. Or
That is correct. Mm-hmm.
There we go. So this, what a crazy, crazy stuff. How they keep adding millions of subscribers. I think they added another 4.2 million subscribers this quarter. I don't know how they do it. It's a wonderful thing, isn't it? So when you're adding that many subscribers, what else can happen? But what happened here last, which I was actually looking at last night, was a bull flag breakout. So you can draw the bull flag. It's very simple to see. In fact, let's just parallel this. So you've got a bull flag, and it led to a beautiful bull flag breakout. And here's what's interesting, why I tell people all the time the news comes out in the charts first. Because this bull flag was built, it formed, and then Netflix gave the news that they added 4+ million subscribers for the quarter, and it exploded right out of the flag. And this is stuff that's really easy to use and will work for you. I promise you, this stuff is easy to use, and I can show you how to use it. I've got a live trading room. It's free to you if you want to come visit me. Really simple to get there. You would literally go to livewithoscar.com, either log in or register. If you register, there are no credit cards required, no nonsense. It's username, password, jump right in. And then you can be with me in my live trading room, and we can go over techniques like this together and just about anything else you can think of, because I kind of live the markets, and I live in a live trading room and spend my life there. And I share my information with my Omniacs and friends. So please join me at Live with Oscar. Jeff, what else can I help you with?
We have a couple of rapid fire questions. Do you look at volume with your moving averages to support breakouts or support resistance?
Good question. Answer is, I used to chart volume as importantly as I would chart, or as avidly as I would chart price movement. But I started way back in the day when there were point and figure charts, which you held with a pencil and a piece of paper, no computer screens, no bar charts, none of it existed. And I would follow the markets in volume, because when you seen volume built up, it almost always meant something was going to happen in that market. Then the advent of things like options and derivatives came out. And here's what I've learned over the years. You follow volume in one market, and what you're not seeing is that they're in another market, a derivative, doing exact opposite of this, so that this is a wrong position, hopefully, and the market goes the other way. And that's why I do not follow volume like I used to. The commitment to traders report is the same thing. That used to be a golden godsend for me. Oh my God, that traders report, I'd study it all. Please put that on me. Sorry about that. That was me.
That's okay. You're fine. The coughing earlier was our video team.
I didn't do that. So what was I just telling you about to finish that off? I wanted to finish off the technique for you. I know that we just finished the Netflix and the bull flag. And other questions for me?
Yeah, we had a question that was about, do you use other indicators?
Volume was the end of that question. So I stopped using volume because what I had found was I was being tricked. I would find that volume swelling in like silver, and meanwhile they were doing the opposite in silver options, so that the swelling volume in silver futures was wrong. And that got worse as time started to pass, and more derivatives and more options. And now I do not follow volume except for rollover time. If I'm trading futures and I want to know when March is rolling over to June, I'll use volume. Otherwise, I don't let it trick me anymore.
Keith, along that same line, Keith wants to know if you use other indicators like MACD or RSI.
I actually do look at other indicators as well, but I will tell you this. There is no single one indicator standalone that works. That's called the system. If anyone tells you that they have one indicator that works, they do not. It's not possible. I've been studying for 40 years in these markets, more than anyone I've ever met, And I will tell you, there is no one indicator that's a perfect system. So you need groupings of indicators that are all pointing in the same direction. Otherwise, I find them not so accurate.
Cool. On YouTube, Chris wants to know if you think silver is finally ready for a breakout move.
I might as well pull the chart up. Is silver ready for a breakout? The best advice I had ever gotten when I was a young kid on the floor, I was just became a broker. And, well, at least we're over some averages. Let's go check the template and see if we're over any good averages. All right, we're getting there to 200. So let's label it, and then I'll explain silver as far as I can see it. I do know one thing. TV has gone crazy lately. I'm talking about silver being worth more than gold one day. I'm not so sure. This is December silver. So, just because I have to get it out there, the best advice I've ever gotten in my life was, hey, kid, whenever you see silver stick its ugly head up, take out your lawnmower and chop it off. I kid you not. Verbatim. I was told that when I first started in silver. Anytime it goes up, just sell it. It's not going anywhere. So, what does that mean? Well, here's what it means. I started in 1982. The price of gold was $300 an ounce. The price of silver was $14, $15 an ounce. 39 years later, the price of gold has gone up thousands of dollars. The price of silver has barely moved, just like I was taught 40 years ago. So the advice is good. Don't ever expect silver to go anywhere except for back down when it goes up. Now, with that in mind, do you remember I said to you a small head and shoulders is considered a continuation pattern where a larger one is a topping pattern? Well, did you notice the one sitting right here? Now that you asked me about silver, look at this one. And it absolutely did its job just like it was supposed to. Shoulder, head, shoulder, crack. Do these techniques not work wonderfully when they're used properly or what? Isn't that perfect? So now, if this was a really tight, small one, I would have called it a continuation. But look at the size of this thing. It takes up a huge piece of the chart, month after month after month. So I say silver hits the 200 ball moving average and stops cold. And that comes in at, let's just see what value we have. That comes in at about 25.60-ish. Because that is where it always has trouble. And if it can't get above, like it couldn't get above right here, let me give you a smaller circle. Couldn't get above here. If it can't get above here, it's going back down. Not only, watch this, not only did the head and shoulders work. Let's remove the head and shoulders. Look what else worked on this silver chart. It's why I really love technical analysis, because it surely is a roadmap to what's coming next. Look at this bear flag and how well it worked. Boom. Look at that. You couldn't ask for a better one. So, yeah, there was a day or two where it jetted out. You can call that the flag if you want, but I kind of tend to put the line a little closer to the action. And boom, market cracked just like it should have after dropping from a head and shoulders. And that, my friends, is how technical analysis works. And it really, really works well. Anything else I can help you with?
Well, if you have maybe a second gold, George wants to look at it. But we are running out of time. That'll probably be the last one we can look at.
Well, gold is my nemesis today. I can tell you that much. Why? So I'll show you why we got long gold and we got stopped out for it. So generally, unless I see, this is gold. I got long gold today. Thought it was a great idea. Omni was bullish. Market was bullish. Formation looks good. And I'll show you what happened. Cost me 5 G's, maybe 6. I didn't count. I know it was ugly. You see how if you can get above an average for more than one day, you need 2 days above an average to tell you you've broken out. 1 day didn't hold. 1 day didn't hold. 1 day didn't hold. 1 day didn't hold. 2 days above the average. 2, today's bar's not in. So I said, okay, being that we're 2 days above the average, it's a 200 ball moving average. The street's watching. I expect higher today. Omni was bullish. Plus we're breaking out of this thing. We just broke out of major pennant. So why wouldn't I want to buy that today? And what happened? Market turned around and stopped me out. So they don't always work, these techniques. That's where gold is right now, I'm assuming, and gold has failed at the 200 ball moving average. So be careful with gold.
I think we should call it there at 10:59, Oscar. So
All right.
livewithoscar.com.
Livewithoscar.com is where you'll find me. Traders, now the techniques I just showed you, by the way, I kid you not, this is my 101 technical analysis. I could do this with my eyes closed. I can teach you a much more sophisticated line of analysis, but that doesn't happen here in these seminars. That happens here live in Las Vegas. If you'd like to contact me and hang out with me, just come to livewithoscar.com, create your membership or log in, and you can literally just click this button and you're chatting with me live in a split second. Right there, live with Oscar. I'll be in this trading room. Now, if I let that happen, I'm going to take the camera away, so I got to turn that off. But I would have been in that trading room live on camera just like that, and you can meet me there as well. And don't worry, the camera's only one directional, me broadcasting out, so you can be sitting there in your underwear. I'll never know. Make sure you come join me.
Thanks, Oscar. Great job. Great job. I
Thank
appreciate
you,
it.
everyone. Thank you, Metastock. I hope I've taught you a few techniques that you can use, everybody. And I will see you all when we do our presentation for 3 hours in November.
All right. Thank you very much, Oscar. As always, a great job. I'm going to go ahead and eject you now.
Very good. Bye-bye.
Thank you. All right. And he does such a great job. We love having Oscar in. Last year, we sat down with Oscar and we did a course with him. And let me go ahead and turn on the screen share. And it was so well done that we decided to do it again. So let me just go ahead and make sure I'm sharing the right monitor. It appears that I am. One of the things I absolutely love about Oscar is his ability to mark up a chart. So coming up on November 20th from 10 a.m. to 1 p.m., we're going to be hosting a webinar that's just with Oscar Carboni on trend lines and technical formations. He's going to actually go ahead and show us how to do trend lines, support and resistance levels, technical formations. It's going to be it's going to be like 2 sessions, a 3-hour class with a half-hour break. And he's going to kind of just spend a bunch of time with us kind of showing charts, doing Q&A. Last year we did it. It was one of our most well-received courses last year. So I want you to join us for it. I think you'll enjoy it. He really gets to the basics of drawing tools in Metastock and trend lines, technical analysis, support resistance, those type of technical formations that you're looking for. It's one of the things he does best. So this event's going to be November 20th, right before Thanksgiving, the week before Thanksgiving. November 20th, it's going to run from 10 a.m. to 1 p.m. Eastern time. That's a Saturday, so we tried to schedule it at a place where we think everybody can go. Normally, we set the price for this course at $499, and of course, as part of the summit, it's $399. You can sign up for it at 800-882-3040. www.metastock.com/saleschat. Bob says in the YouTube chat, Oscar, you did not look at my stock. I'm sorry about that, Bob. That was probably my fault. I don't even see your request, but I'm sure if I scrolled up, I just missed it. Join him at livewithoscar.com. I'm sure he'll probably have a chance to kind of give you an idea of where it is there. So again, thank you very much. Gary says, give Oscar more time. We do. We bring Oscar in all the time. He's one of our favorite guests. We absolutely love him. So really appreciate what all the talks that he does. Join us. We have a 90-minute session with him, Gary. It's only $399, 800-882-3040 or metastock.com/saleschat. Okay. And we can help you get set up and going to that. All right. That class is actually also part of our Traders Summit Action Pack, where you're going to get the RMO ATM, the training course. Vince Vora's Vora Victory add-on for Metastock, which is awesome. The Magic Trader Elite add-on. The Magic Trader Consulting Service, which is done by Peter Dalal. You're going to get 3 months of Guy Cohen's OVI Traders, and Oscar Coburni's Masterclass that we just talked about. Learn Metastock, Unleash the Power of Metastock. 2 years of Stocks and Commodities magazine. That's all $5,000 here at the event today. $1,990. You can sign up for whatever you want, or the whole package. Metastock.com/summit deal. Or you can give us a call at 800-882-3040. We're putting the slides together over the last couple of days. And actually, the guy that was helping me with the slide was like, wow, this is an amazing deal. And it is. Like, you're going to save almost $3,000, a little over $3,000 in this package. And it includes some of the best things that we've got to offer. So metastock.com/sales chat if you want to chat online with somebody and they can kind of help you get that going. So in any case, real quickly, I do want to say thank you to Stocks and Commodities for sponsoring today's event. They've been sponsoring us now. If you can believe it, we've been doing these online sessions for like 9 years now. I've absolutely loved them. I appreciate the work Stocks and Commodities has done in terms of sponsoring the event for the whole time. So you can get a free issue of Stocks and Commodities if you're watching on YouTube after you get done hitting like and subscribing to the channel. Go to metastock.com/tradersummit, and for free, you can sign up to get a free copy of Stocks and Commodities. You can also get the CMT Association's free guidebook. And all of the presenters today, or most of the presenters today, do have a special offer that you can sign up for. So go to metastock.com/tradersummit, and you can get signed up for that. Also, while we're at it, CMTassociation.org is a new sponsor of the summit. We welcome them. They've been really good to work with. It's a very, very well reputed, I wonder if that's a word, organization. We're very, very happy to be associated with CMT. You can find more about them at CMTassociation.org. Okay. And our next presenter is also somebody that we've had many times in here. I remember doing lots of sessions with Hima. I love kind of her take and the way she presents. And we're going to go ahead and bring her in there. And there you go. Hima, how are you doing? Can you hear me okay?
Yes. Hi, Jeff. I'm doing well. How are you?
Good, good.
Good. Am I coming through all right?
You sound great, as always. Let me go ahead and make you the presenter.
Fantastic.
You sound like an angel. Is that what we usually...
So sweet. Thank you. An angel's better than a devil coming to Halloween here, right?
Right. For sure. Amit, your question about when you buy the software, is it a yearly subscription? When you buy the software, it is a one-time cost. So, but what we were promoting today is actually, if you haven't tried Metastock before, try it out on the lease because it's an easy way to do it. Hima, go ahead. It's your turn. I'm gonna get out of the way.
Awesome, Jeff. Well, thanks for having me here. Hello to everyone here. I'm excited to be here to train you today. And, we're at that post-lunch little period here, so I want to make sure everybody's stretched and ready to go. So please, in the chat, let me know where you're dialing in from, where you're logging in from. I love knowing how we can trade from anywhere, right, in the country, around the world. And so I am now, I think it's different since the last time I was here, but my husband and I just moved to Austin, Texas. Shocker, like lots of people. And I've been wanting to live here for a long time, so moved this summer. And would love to know where you guys are dialing in from as we dive into my presentation here. All right, awesome. Well, like I said, here I am for Not Your Mama's Momentum, how to profit in any market on any time frame. So we're going to get started. I am going to be looking at live markets with you and interacting with you. So again, use the questions panel if you're here in GoToWebinar. And later, Jeff and the team can let me know if there's any questions on YouTube. Fantastic. So how to trade momentum. Get a sneak peek behind the One Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough for trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends and price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? Now, how many of you want to get as much as possible out of our time together? I want that for you too. For most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. Now, in a moment, you're about to discover how to make money with future stocks and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, awesome. I promise that by the end of our time today, you'll know everything you need to know to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated, all right? Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you well know, trading involves risk. And it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Right? Your results are up to you guys. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you. Right? I don't know your plan, your account size, your markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? Well, if you haven't been following me for a while, here's a mercifully short introduction. So I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. And I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far out of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray, now Piper Sandler, before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I have helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders. And I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. All right, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great. I was in the center of the action as an analyst with Piper Jaffray and making them a ton of money, starting work at 5 a.m., working late, and burning out quickly. Is anyone else a corporate cog making someone else rich? I know, right? I mean, I thought there must be more to life. The money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. I'll never forget the moment the bottom dropped out of my world when my beloved dad and mentor died suddenly. And at first, it felt like my whole world was crashing in. I had to leave my job to tend to financial and legal family matters and more. But then I realized that this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets, I had started a futures report that I called my Skinny on the Mini. It started out as just another exercise, but soon my dad started making money with it and relying on my little report. And then I started sharing with other traders too, and they were benefiting. But all of that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders were hounding to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers, and they said yes. They would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I'd learned from my late father. And in a moment, I'm going to share those various secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what, guys? Right, freedom. There's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Freedom. I mean, wouldn't that be amazing? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? They made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading futures, stocks, and options. And I'll show you that a little later. All right, so what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive right in. All right, guys, so trading momentum can be easy. But first, you need to understand how it works. And a Formula 1 car racing track will have you understanding momentum in no time. All right, so type a Y in the question box if you guys are here with me. You're at the track. Now put yourself in that driver's seat, okay? You're at the starting line of the track. You rev up your engine and you go. So you pick up speed really quickly or accelerate on the straight runs of the track. You see a turn coming up and you prepare accordingly, right? You ease off the gas to slow down or decelerate, even if it's just a little bit. So you can have more control as the car whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more. Are you getting the idea of how you'd accelerate and decelerate on this track? Well, now you know exactly how price momentum works. Now let's jump into that helicopter that was looking down on the racetrack and now get a bird's eye view of the track. You see, the racetrack becomes priced as you see it on your stock charts, and momentum is generally plotted on the bottom as a subchart like this. Making sense? All right, cool. Now when price is trending higher, you've got upward momentum that is improving. That upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Getting this? All right, great. Now let's look at the other side. During falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. All right, guys, now let's take this to the next level here. We're going to dive into the indicator itself. But first, let me share with you results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. All right, guys, now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. But first, you guys want that Jedi secret? All right, great, because I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using my special Jedi indicator. And also keep in mind other markets you want to look at here today. We will look at those at the end of my presentation. Now, this indicator is called the RSI Power Zones, and you can use it on any market in any time frame. Now, here's where I really need your participation. I want to know if I'm speaking your language, so take a look at these 2 columns, all right? On the left, we have a variety of active markets. Indices, that would be your S&P, your Dow, NASDAQ, and more. Stocks, maybe you trade the FANG complex or other sectors or industries. ETFs, I have a lot of coaching students that trade the SPY. Bonds, that can be your 30-year, your 10-year, anything smaller. FX, currencies, I just posted a timely YouTube video on the pound. Commodities, that's oil, gold, silver, everything else. So let me know here in the questions box, in the chat, what market do you trade and what time frame are you looking for your setups? For me, my favorite is the E-mini S&P 500 on a 3-minute chart. So type it for me in the chat because it's important for you to see that the RSI power zones can be used on a variety of markets and time frames, that I'm speaking your language here, all right? And we're going to go ahead and look at the RSI power zones on a market that we all know, that we're all super familiar with, and look at it in a really long-term time frame and see how it works. Then we'll drill down to smaller time frames and smaller markets, or other markets, I should say. All right, guys, so here it is, whether you trade it or you know it at the gas tank. I've got a commodity for you in a monthly time frame. And that is oil. So whether you trade it or not, it is important to monitor. So we have these 4 zones on the RSI power zones that I need you to be aware of. So the RSI power zones down here is this black squiggly line with these 4 sets of colored zones. The 2 lower red lines make the RSI bear support power zone. The 2 lower green lines make the bull support power zone. The 2 upper red lines make the bear resistance power zone. And the 2 upper green lines make the bull resistance power zone. All right, awesome. And I see here we've got Matthias trading Forex on a 4-hour chart. That's a great time frame to be able to use the RSI power zones. So here again, we're looking at a monthly chart and we're looking at oil, right? So I want you to follow the price action along with the RSI, and let's look at this history unfold. So there was this big run up in price. As you can see, it took us to these crazy new highs above $200 a barrel. And that strong advance was accompanied by the RSI power zones on oil rising from the bull support to the bull resistance. This is the first key to the RSI power zones, okay? Is that when you start looking at that 0 to 100 space on the indicator as different zones, instead of just overbought and just oversold, you can trade better with existing strong trends. And again, this is what was evident on the monthly time frame. Then there was this really sharp fall, right? Price took out the previous lows, and when it did this, the RSI power zones fell into the bear support power zone. This was my first clue that this was not going to be a one and done fall, that the market might end up going lower or at least going sideways for a while. And that's exactly what unfolded over the next couple of years. Oil went into this giant sideways range. You guys remember, were you trading then? Type a Y for me in the chat. Okay, the thing is that every single high that formed, every one of these yellow highlights, it was after a peak in consolidation that tied to the RSI capping the bear resistance power zone, those 2 upper red lines. So this was another clue as to the future direction of the breakout. And after falling to $100 a barrel here, right? People thought, oh, there's no way it's going to fall lower. We're going to climb back up. And the indicator and price action were saying otherwise. We actually had another drop, quite substantial. And both lows in price, marked by the yellow horizontal or vertical lines, they saw the RSI power zones push and pressure down into the bear support power zone. Okay, this made it easy to maintain a selling mentality instead of getting excited every time it got to some random level called oversold. From there, do we have a recovery? Absolutely. But even that recovery on its first attempt higher, it capped at the bear resistance power zone. So here, we saw the market recover back higher, but not able to clear those 2 upper red lines. And then from there, fell once more. After it fell, here's where we are today, Tuesday, October 26th. You can see that the gray vertical line matches where the last chart left off. So there was a fall back into what? Bear support power zone. And we've been rising since then. Oil has been pushing higher, and getting back above that late 2018 high is a good sign. The thing is that when you look at this on shorter term time frames, weekly and daily charts and intraday charts, guys, the RSI power zones in conjunction with price can provide you opportunities to capitalize on trading with that trend and be ready for when it turns or has a pause. So can you see how looking at the RSI power zones on oil might have better helped you navigate trades in oil or markets related to it? Okay, type a Y in the chat if you see that. All right, awesome. Now let's look at another market that's really popular that I know a lot of traders look at, an ETF on a weekly chart. Here we've got the 4 power zones again. And here we have every candlestick representing 1 week of price action. Guys, what I'm doing is I'm taking you out on a date, all right? I'm taking you and the RSI power zones out on a date to get to know each other and see how you gel. Looking at this on markets that everyone's familiar with and a lot of you may trade. So let's come back to this late 2016 into early 2017 price action that was on the SPY and how it compared to the RSI power zones. There was all this sideways action. Price broke above this horizontal dash line and then pulled back into the bull support power zone. That provided an opportunity to go long only if you were using the RSI power zones, guys. If you were using the traditional RSI, you would not even seen this. Totally would have missed it. That in itself is huge because what happened from there? Market advanced higher, huge advance, and that whole advance, so the RSI continued to improve, ultimately reaching and extending beyond the bull resistance power zone. Again, this movement from one green zone to the other, it helped you stay on the long side of the markets, right? Not trying to pick tops. Have you ever tried to pick the top of a market and then immediately have the trade go up higher and stop you out? Then using the RSI power zones will help you to stop doing that. Okay, learning how to stop losing money is sometimes as important as finding winning trades, guys. All right, what happened from here? There was a sharp move lower, very sharp drop in 2 weeks, took out the price action of like 10 weeks. But all that happened with the RSI power zones is that it went from the bull resistance power zone down to the bull support power zone. It basically was relieving itself of overbought conditions, sort of like a pause in the race higher. And when I was writing the skinny and the mini at this time and everyone was kind of freaked out by this price decline, I said, listen, this is just a sign that we're going to go sideways for a few months before the uptrend resumes. And that is what happened. Sideways trading, tradable moves in the daily intraday charts all unfolded with the RSI and the weekly chart simply unwinding overbought conditions, moving from the upper green lines to the lower green lines. And then the market exploded higher again. And it coincided with the RSI power zones resuming higher once again. Here it is, as of today, October 26th. So that gray vertical line marks where the last chart left off. And you can see there's been a lot of moves in this market since then. And where are we now? Steadily churning higher with the RSI power zones continuing to track higher. Yes, there are pauses along the way, but on the big picture balance, they are up. So can you see how looking at the RSI power zones on the SPY the past few years might have better helped you navigate trades in the SPY or markets related to it? All right, awesome. Now we're going to dive into the trade setups. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. By now, you're getting it. So we're going to dive into my proprietary 3-step approach to using RSI power zones to find great trade setups. Okay, I'm going to show you actual setups that I use and share with my trading family. And we're going to look at this on live charts as well. So here it is, using RSI power zones to identify trade setups. Okay, 3 key steps. Step 1, review the chart and assess the price trend. Now, why am I talking about price all of a sudden after saying momentum, momentum, momentum? I mean, that's because price is king, guys. Price is the source of data from which momentum is even derived or calculated. And we will benefit more from trading momentum if we are clear on what the price trend is. So when you make this assessment, and I'll show you how in a moment, we have 3 choices you end up with: uptrend, downtrend, or sideways. And yes, sideways is a type of trend. You can be prepared for the next directional move if you know how to monitor the momentum of the sideways action. Now, step 2 is evaluate the RSI power zones reading. This is specifically looking at the RSI value relative to the 4 power zones. Okay, each zone has those distinctive upper and lower borders, and there are 4 total zones. So you want to know where the RSI is relative to the zones. Step 3, determine the presence of an entry signal between price and momentum. And usually the best signals come from when momentum and price are not connecting. They're not like jiving together. That's usually an opportunity that we can take advantage of for profit. All right, so you've got your 3 steps using RSI power zones to identifying trade setups. And I'm going to repeat these steps so you're going to have them down pat by the end of our training. And the best way for you to learn is using actual examples. So you know what I'm going to show you here, guys? I'm going to show you market calls I actually made to traders in the Hima Reddy tribe as they were happening. Okay, I didn't just have them in my back pocket as like beautiful textbook examples. I highlighted these markets when these opportunities were happening so that you could capitalize on them. Actual calls I made. So I want you to type a Y in the chat for me so that I know you see the value of what you're about to implement here. Not just going back in the past and finding a pretty picture, but showing you calls I actually made to the tribe. And again, we're going to look at the live markets too. All right, awesome. So here, let's look at a stock on a daily chart. How about Netflix? Anybody trade the FANG complex? Lots of my traders do. So we're going to go through our 3 steps here. Step 1, review the chart and assess the price trend. Now for a daily chart, I generally like to look at least 6 months of price action, potentially more if there's big sideways ranges in between. So take your eyeballs back to the beginning of this chart. All right, I'm going to highlight the price highs and price lows. So here we had a high in price. Then we had a low with smaller moves in between. Market ran up and gapped and made this high, corrected down to this low, traded up to this high, and is now sitting at this potential low, right? Green bullish looking candle. So here we have what's called an uptrend in price with a corrective pullback in motion, meaning we're on that dip, that corrective side of the uptrend. Great, that's step 1. Step 2, evaluate the RSI power zones reading. Well, you can see that it's holding the bull support power zone, right? It's in between those 2 lower green lines. Great. Now what's step 3? That's right, determine the presence of an entry signal between price and momentum. Now here, there's an opportunity, a disconnect between price and momentum in multiple ways. Very short term and longer term. And this resulted in me at this time, the exact way this market looked, bringing my traders' attention to it and saying, guys, I think we're ahead of a big move higher. And that's what unfolded. Price went from the low at 271.22 up to 423.21, a 56% move higher. And I have a whole training that dives into RSI power zones for true mastery. And I'm going to show you the signals that are in there in module number 2, session number 2. Because I cannot teach you everything you need to know within an hour. It would do you a disservice and it would shoot you in the retirement. Yeah, I said shoot you in the retirement. Hey, money isn't just money, guys. It's the blood, sweat, and tears that it took you to make it. And you can't afford to lose any of it. I'm here to help you maximize it. And of course, I can't teach you everything that I've learned in 21 years in 1 hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can look at how I can teach you more in depth. Making sense, guys? Are you getting this? Type a Y for your understanding and following it, because we're going to dive into another one of your favorites. But first, I have to know you're still here with me. All right, awesome. So here we've got Twitter on a daily chart. Anybody trade tech stocks outside of FANG? There's lots to choose from and lots of opportunities there. Now, this was really interesting because we actually looked at this exact setup during a monthly group coaching live session I had with members. So I had students in the room, in a webinar room with me, and we saw this setup that unfolded. So step 1 is still the same. Review the chart and assess the price trend. High, low, higher high, higher low, higher high, higher low. What's the trend here, guys? That's right. An uptrend in price. Again, with a corrective pullback in motion, looking a lot like the beginning of that Netflix chart, right? The step 1 there. Step 2, evaluate the RSI power zones reading. Again, looks very familiar. Holding the bull support power zone, rising up out of it. Now, here's where it came in a little bit differently. There was a disconnect between price and momentum, and on as early as this date marked here, as early as April 10th on this chart, you could have calculated a target. That's right. Using momentum and price, you could have made an actual precise calculation for an upside target of $39.13 when you were currently trading around $30. Everybody see that? So I did this calculation live with students. And then the market went up from there. Here's what unfolded. The market went up into the target, reaching it by June 5th, holding that original April 4th low. And guess what? It actually continued on higher from there. So this was a minimum upside target. And again, I have a whole training that dives into all 4 of the RSI power zones, and I'll give you that setup in the system. I'm just showing you here what you didn't know that you didn't know. The trading can be simple when you follow the expert. Making sense? Are you getting this? All right, awesome. How about we look at a different type of market? FX, we got some FX traders here, right? So let's look at that on a daily time frame. And then, like I said, we will, in my time here, look at this on live charts and see what is brewing. So rinse and repeat. Step 1, review the chart and assess the price trend. Now here we have a high in price, a low, lower high, lower low, lower high, lower low, lower high, and currently at a lower low. So what's the trend here? Yeah, this is a downtrend. And there's no major bounce or anything in motion. It's just a clear downtrend. What about step 2? Evaluate the RSI power zones reading. Well, we moved from the bear resistance zone to the bear support zone, right? And actually are starting to lift up from there. But the alignment of moving from one red zone to the other along with the downtrend is important to recognize. Step 3, determine the presence of an entry signal between price and momentum. Now, what was happening here was actually a defensive setup, guys. So if you were short, it was a warning to start to protect your position, and then from there, potentially go long. Now, here's what unfolded, okay? Remember, protecting your shorts because the trend might change to up. Well, this is what happened. The pair traded from 0.9186 up to 1.0050. And if you're not up to speed on your FX math, don't worry. You know what that is? That's an $8,600 move in price. That's just on one contract. And what if you only got a part of it? What if you got a slice? You'd still be pretty happy, right? I'm very excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education to trade the market so you can take control of your financial freedom and live the life you and your family deserve. So by now, you know that power zones on the RSI can really boost your trading. Because whether you're new to studying momentum or been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's all about, right? Making sense, guys? Are you getting this? All right, awesome. That's the result our trading family loves seeing too. Like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, are you guys ready for more? All right, awesome. Then it's time to master RSI Power Zones. I'm going to share what I have for you here today, and we will today be looking at these on the live chart. So get ready thinking about what markets you'd like to look at live with the RSI Power Zones. Now, so far, you've heard about how I've come to really benefit from using the RSI Power Zones, and here's what more of my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's RSI Power Zones indicator has become the standard on all of my charts. Norman shared, a day after learning one of Hima's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning when the market opened, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. The system that can give you all that is the 4 Zones RSI coverage system. Before I give you this opportunity, let me show you the features and benefits using this system will give you. So rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You can pinpoint your trades faster so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 Zones RSI coverage system gives you all this. But first, who is this not for? This is not for those who are trying to get rich quick. All right, like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this is not for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. Since you're still sitting here with me, you're taking the time to learn to boost your trading. You're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 zones RSI coverage system, I give you my 21 years experience on a silver platter, and it's 100% focused on step-by-step systems, instantly accessible starting with video tutorials, where I take you by the hand and I move you through the 8 phases of a trade. So you have a complete system to your approach that you minimize mistakes. I give you my top RSI Power Zones trading signals from years of study and observation with various real world examples across multiple time frames and markets, which we're going to see again here in a moment. I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones, and much, much more. Now, to make it even easier, you'll also have cheat sheets that you can download and print out and keep right by your trading desk. All right, guys, I want to do things that will expedite your learning and application. So like when I was in school and had a math teacher or a science teacher that let me have that cheat sheet with formulas, it boosted my learning, right? So these are going to be easy to read grids and tables like this, along with step-by-step trading strategies, all filled out, moving you faster on your path to boosting your trading account. Now here, you're going to love this, all right? This is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including Metastock, our host here today. Now you can download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like, forever. You'll see all the platforms listed out on the registration page. Now, I've had many traders email in and offer me hundreds of dollars just for the indicators, and I'm giving them to you here as part of the complete system. I've included everything to set you up for success. Now, the only thing you can possibly need is for me to take you by the hand personally and help you. Actually, would you like that? Would that help you if I hopped in the computer with you and showed you live how it's done and answered your questions right there on the spot? All right, great. Then I'm going to give you everything, including me. Monthly group coaching for life. Once a month, you'll get together with me online personally, and we'll spend an hour together, and I'll personally walk you through the markets, doing analysis with open Q&A to help you become the trader that you want to be. Right, now you can see that I've built in everything you need to boost your trading with the RSI Power Zones. Now, here's the thing, guys. We all know the world has changed a lot in the past, almost a year and a half now. And while the 4 Zones RSI coverage system is designed to teach you how to fish for RSI setups, when I give you the fish, when I give you setups, it does aid your learning greatly. So you're going to love this awesome bonus that I'm revealing here today. As a bonus, you're getting my new quick case studies. These are hot, timely, actionable updates in RSI Power Zones activity, highlighting trade setups that I'm seeing instantly in multiple markets, hot off the press. So every time I make these updates, they will be added to your portal and you'll get an email notification with every update. So the 4 Zones RSI coverage system with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI Power Zones is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live, right? This is priceless, but if I had to put a price on it, it's easily $797 just for the first couple months because I easily charge $500 an hour for my one-on-one coaching. But you get me for life. The RSI Power Zones indicator available for the most popular trading platforms with free updates for life, including Metastock, is valued at $497. Plus, you have the bonus of the quick case studies giving you hot, timely, actionable updates on RSI Power Zones activity across markets. Now, this brings the total value to $3,488, and it's worth every penny. Now, let me ask you, if all the system did is help you to trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of the system is over $3,488. Because I want to make an investment in your future, okay? Because I want you to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. You can get started now by heading to himareddy.com/metastock. I'll make it even easier for you. When you visit himareddy.com/metastock and invest in the system today, I'm going to give you all this because I finally want to see you succeed in your trading. And I'm giving you our personal 100% satisfaction buyback guarantee. All right, so take action now. Use the complete package for 90 days and wear the tires off the system. If you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. Okay, I want you to be 150% satisfied with the 4 zones RSI coverage system. After all, my clients tend to stick around a long time and become my friends too. So follow the whole system. I want you to get out there and treat it like a rental car, right? Put it through the works, wear the tires off the thing, drive it all over the place. And if you don't feel you've gotten far more than your investment, then I'll hop on the phone with you, personally work with you. And what I really want is for you to be totally satisfied, and that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488, and I'm bonusing in those quick case studies to boost your trading faster. And for a limited time, I'm giving it to you for the simple, easy investment of $297. So you can go ahead and sign up, and we're going to look at live markets here. Let me show you exactly what will happen when you join us. All right, you'll get a login access email with details to enter the RSI Power Zone system at my educational portal, right here, big RSI in blue. All the training you need is right here, where you can get to it easily and get started right away. Literally says start here, by the big yellow arrow here. And you can get the Zoom link invite to our next monthly group coaching call. And there's all this other cool content too. And some of it's undisclosed bonuses for you. You're gonna love it. We love to over deliver. All right, guys, so take action now because this offer is only available for a limited time and only for this Metastock Online Trader Summit. Go ahead and visit himareddy.com/metastock and take advantage of this limited time offer and get my entire system for just $297. Now I'm here for Q&A, and I'm gonna be looking at markets with you live here. So let me go ahead and grab my charts here, and let me know, guys, where do you wanna see the RSI power zones come to life on in your charts? Jeff, if anybody's asking from YouTube, let me know. But I wanted to make time, especially now in this very important fall into winter season in our markets, to look at live charts with you guys. All right, so I'm pausing my screen for one moment so I can bring over my charts and overlay them and give you a look here.
All right, when you're ready.
Okay,
the
great.
First one is natural gas.
All right, awesome. So I see natural gas coming in from Nitin. All right, Nitin. So very interestingly, I actually do every quarter, I do long-term market analysis on 20 markets, and natural gas is one of them. So I just looked at this guy really, really closely. Let me first just say that forecasting that I had done in Q3 back in the summer, okay, I called the high, the time of the high of natural gas in early October to the week. So that was really useful for anyone who's following my long-term analysis. Where we are now, let's focus in on what I have here. I've got my RSI power zones indicator in the bottom, and I've got my triple moving average filter. So what this filter is an additional guide for those of you who are not really maybe used to studying price action for trend. Is anybody newer to trading here? Maybe you're still getting your handle on price action, like highs and lows and stuff. Let me see if I can draw on this chart. I think I can. Okay, yeah. So I would normally come in and evaluate the trend by looking at the major highs and lows in the market, right? But some people who are newer to trading, or they need that kind of extra helping hand, they definitely benefit from my triple moving average filter. And all the settings for my moving averages, the type of moving average, the values and everything are in the 4 zones RSI coverage system. All right, so with that, what's the deal with natural gas here? Well, for starters, there is room for it to move higher. There's actually, let me double check something here. 4983. Yes, there is a bullish setup on the RSI power zones happening right now. And I teach that in session 2 in the modules. So using that, you could calculate further upside. So I'm gonna just change the time frame really quick to see what is back in the past. And yeah, there's this very important spike here, Nitin, you can see from November of 2018. So this is the continuous contract chart, right? The current contract obviously is different, but yeah, definitely room for further upside on natural gas, but likely limited to the November 2018 high. All right, do we have any other questions? I'm gonna check in on my baby, the ES, while you guys give me questions here. So I call the ES my baby because I've been studying, trading this market for 21 years now. On the daily chart, I have a couple of interesting points suggesting that we're at a juncture here as to whether we're going to really push up and make new highs. And one of them, guys, see how we're still kind of hanging out right above the bear resistance power zone? There's still room for upside. You know, we're up until we're not, but that makes me a little bit more cautious, especially since we recently fell every time we came to the similar levels. So just wanted to point that out for anybody else trading the E-mini S&P. This is specifically the December front month contract.
Okay, Epi would like to look at pound Aussie.
Okay, I think I got that right. So I'm going to bring this back to a daily chart. I don't use moving averages on anything but a daily chart. But here on the daily chart of pound Aussie, what I'm doing is kind of squishing up the data to give me perspective, since this is not a market I look at a lot. And the first thing this tells me is how we retraced a lot of this decline from the pandemic high, if you will, and are now starting to roll over again. Do you guys see how the RSI power zones came right into the bull resistance power zone on this high? And it did the same thing back here. Now it started getting overbought before price actually made a high. That's why, guys, it's not as simple as just trading back between the zones. It's not a game of Frogger, okay? That's why you need the setups on top of the zones to really be consistently profitable. And again, that's what I teach in the system. You're welcome, Nathan. Awesome.
DVN is something that Greg would like to look at out of YouTube.
Hey, DBM, like that, Jeff? Or did I not hear you right? DEM.
No, DVN.
Oh gosh. Okay, I get it.
Devon Energy Group. Devon.
Thank you.
DVN.
Okay. I'm not typing in well today. So tell me in like code, like okay, Delta.
Yeah, Delta Victor November. See, I know that.
There we go. Thank you. Okay. All right. That's how I speak to pretty much everyone on the phone. It's using the NATO codes. All right. Here we got it. Devon Energy. Okay. So again, because I want to stay on one time frame with you for the purposes of our session here, I'm just squishing up the chart, as they say. But when I actually teach you in the system, guys, no matter what software you use, I teach in 4 zones RSI multi-time frame analysis. Okay. It's very, very important that whether you're trading an intraday chart or daily chart or higher, that you are looking at a different time frame to confirm your analysis. And you can look at the RSI power zones on every one of those time frames. So I don't know much about Devon Energy, obviously. I didn't even get the ticker in on the first try, but I'm a technical analyst. I just need price and time, and I can go to town. So here we are. We have a move off of this March low. I see GAN concepts coming to life here. Now, I'm here focusing on momentum teaching here today, but I do still educate and teach on GAN, and there's concepts that are in my newest ebooks on GAN that are really important in terms of knowing where you are in a trend. So just with that hint, I will tell you guys that I believe there's this move and we could potentially get a correction and then another move higher, okay, based on GAN concepts. Where DVN is right now versus momentum, let me again come and zoom into the action. So can you see here, whoever asked this question, I'm mixing the name sometimes, how this was beautiful. Bull support to bull resistance, right? Then corrected lower. Now notice this correction was a bit choppy. Actually, between this low and this low, there was a bullish pattern that would allow you to calculate upside target. And then here we are again, moving from bull support to bull resistance. Again, notice, just because you get to bull resistance doesn't mean the market's going to stop and turn lower. Do not sell just because you get to bull resistance. It's a very dangerous game. In fact, what the idea is behind the RSI power zones is that strong markets, bullish markets, get more overbought. That's why they're living in the upper half of the chart, okay? And bear markets get more oversold. That's why the 2 bear zones are in the lower edges of the market. So room for further upside. I would monitor the most recent higher price lows. And if I just erase my drawings here, I can give you a specific on that, which is this guy right here. The low on a October 13th, if we move below that, then that whole further upside thing probably turns into consolidation. All right. I'm seeing some tickers here in the GoToWebinar. Jeff, can I just go ahead and grab those?
Oh, absolutely. Yeah.
All right.
I was going to point them out if you didn't see.
Okay. I've got a couple screens here. Okay. CCJ, Cameco Corp. Again, I don't even know what this is. I don't know what sector it is in, and that's okay because I'm deploying technical analysis tools, which, guys, my trifecta of price, time, and momentum. It could be a chart of widgets. It doesn't matter. You can apply those concepts to anything that you can plot with price and time. That being said, if anybody here trades tick charts or charts that are not based on steady intervals of time, I recommend that you use your RSI power zones on a time frame separately, okay? So let's say you trade a tick chart, don't go putting RSI power zones on there. It won't work the same way. Maybe put your RSI power zones on like a 1 minute chart or a 3 minute chart, okay? That's a pro tip for you there. Okay, so this CCJ stock is up at new highs. We're on a GAN third drive higher. Again, I get into that more in my GAN education, but where we are right now, well, actually third or fourth drive higher. So not looking so healthy here. So here's where it comes to trade management, okay? Sometimes, guys, the value in what you find in your analysis is not in just finding a new long or short, it's in knowing how to manage a position. So let's say that you were long from down here, okay? Let's say you saw market hold the bull support power zone. If you follow my triple moving average filters, you might have had opportunities to get long somewhere around this consolidation. If you are still long now, I don't recommend adding to positions. Why? Because price and momentum are not jiving. Price is going higher, but RSI is not yet. I would actually protect your position with a trailing stop somewhere where I just drew in that U shape. So again, there's room for further upside here, but I don't think there's a whole lot. It's what I've put in a persistent uptrend category. So does that help you out, Neil? Okay, and then I see Alexis asking about the SPY, which is the uncle of my baby, the ES. So let's go look at that. And again, I'm just going to show this to you guys one more time here, just to make sure everybody understands what I have in the program. We have our next group coaching coming up in mid-November. So you have plenty of time to get into your tutorials, come prepared with questions. And again, that's monthly live group coaching for the life of the product, which it's not going anywhere anytime soon. So you'll have plenty of opportunities once a month to come and solidify your understanding with me. And honestly, monthly group coaching feels a lot like what we're doing here. I get more into the weeds, I get more into the details, but it's you come with your tickers, your markets, and I look at them with you live. All right, so for Alexis here, we've got the SPY. So just like I said about the ES, the SPY is also in an interesting place where, look at the RSI power zones. This is one where, notice how for months now, it's been respecting bull support. What if you just bought the SPY every time it came to bull support? Who would have been pretty happy with that? Right? For a trade for several weeks or for several days. Not bad, right? But the catch is, it's not just about buying back and forth between the zones. It's understanding the way that the indicator behaves fully, which again, I teach in the system. And part of what's interesting here is we kept pausing just above this bear resistance power zone. So the fact that this is happening here again, it's not show's over, but I would very, very, very carefully watch the low from 2 days ago. This is one of my GAN concepts coming in, okay? So the October 22nd low on the SPY right now is very important short term. While we stay above that low, room to move higher. If the current price action comes back and corrects below that, then I think there's a decent chance we come back into wherever these shorter term moving averages are, right? Moving averages update over time, so they won't be the same place they are now, but that would be the support I see. All right, I have a couple minutes here, so I see one more from Alexis, but Jeff, do you have any other from our YouTube audience? Requests or questions?
Oh, no, I do not. But
Okay.
I was interested to look at Bank BAC because I do own it, actually. Right
Oh, okay,
now.
well, there you go. So for Jeff and Alexis, let's look at BAC. All right, again, normally I would come in with multi-time frame analysis. That's where we do monthly group coaching. But here, just to get perspective, okay, so here we are at new highs, very similar story to lots of other stocks, high last February, low last March, and trekking higher. So Jeff owns it. So let's talk from the perspective of trade management. So without bugging Jeff for exactly where he owns this stock from, how long he's been holding it, I'm just going to make an assumption. Let's say you were long from somewhere here, okay? Somewhere in this price zone. We had a long-term consolidation. Notice the first clue for consolidation breakout was the RSI power zone starting to hold the bull support power zone. Okay, that gets a little bit more advanced, and I have advanced RSI power zones education after you complete 4 zones, but that was hugely helpful to be kind of ready that we might break higher. Once the breakout occurred here, notice the pullback. Let me erase the drawings. Notice the pullback to the old top. This is a very classic Gann move, and we're higher from there. So if you wanted a looser stop, like if you're long from somewhere back here, and this is a long-term hold, I would protect your position with a stop beneath this low here from earlier in October. However, if you have a tighter trade on, okay, you're going for less points, you really want to catch this before it turns lower, then I would put your protective stop right here. This is a Gann concept of how you look 2 bars back and trail your stop, but that's what I recommend. So I can take this off my cursor and show you exactly. So somewhere beneath $47 basically, because look at how close we are to the bull resistance power zone. Okay, just because you get close doesn't mean the market's going to stop going up, guys, but it gives you this clue, this insight that the power might be waning. All right, awesome. Well, I want to thank you all for having me here. I want to bring you back to these details another time and look forward to seeing you in the 4 zones RSI coverage system and our monthly group coaching calls. Thanks again to Jeff and team for having me, and I hope you all will have a wonderful, wonderful rest of the day.
Thanks, Hima. I mean, Hima. Great job. I appreciate it. All right. Very good. Let me go ahead and I will be, let me go ahead and kind of switch over real quick. Let's do this. And let's go ahead and make me the presenter real quick as well. What a great job. Always does a very, very solid job for us. And we really appreciate Hima coming in today. So thank you very much for that, Hima. You can learn more about that at himareddy.com/metastock, as we put in the chats right there. I do want to remind you that we are doing a Summit Action Pack today. You can get the RMO ATM, the training course. Vince Vora's Vora Victory, which is Vince is coming right up. A great add-on. He's going to talk to us a little bit about that. The Magic Trader Elite, the consulting service that goes along with that. Geico and ZalVi Traders, the masterclass that we're doing with Oscar next month. Learn Metastock Premium subscription, 3 months. Unleash the Power of Metastock, and Stocks and Commodities Magazine 4. Thank you for the lights, Greg. 2 years of Stocks and Commodities. This is a great package we've been putting together for you. Normally, if you just bought everything separately, it'd be about $5,000. Today, we're going to do a discounted price and get everything for you for about $19.90. And if you're enjoying the content and you're learning a lot today, there's a lot of courses that come from these people. There's a lot of other information that's provided. This is great. This is a great package, $19.90. I'd encourage you to do that. You can do that online at metastock.com/summit deal. You can give us a call at 800-882-3040, and you can visit us online at metastock.com/sales chat. If you have any questions, things like that, just let us know. Our sales guys are awesome. Even they do a great job. So as we transition gears, I want to remember to say thank you to Stocks and Commodities for sponsoring the event. Great magazine. They've done a great job of helping us promote these events and keep them as popular as they are. Thank you for all of the support. We appreciate it. Oh, by the way, you can get a free issue of Stocks and Commodities just by registering. If you're watching us on YouTube, go ahead and hit that like for me. I'd appreciate that. Subscribe to the channel. We're always putting good copy up here. But after you're done with both of those things, go to metastock.com/tradersummit and sign up to get a free copy of Stocks and Commodities. As well as there's bonuses from almost all of the presenters today that you can sign up for. I do want to say thank you for CMT Association. They're a brand new sponsor. They've been sponsoring. This is their second event. We appreciate that. CMT is a great organization. And you can also get a free guidebook at by registering today, a guidebook to their curriculums. So, but we do appreciate the CMT sponsorship. Man, CMT is such a great, well-respected, well-reputed organization. I'm proud that they're sponsoring our online trader summits. So there you go. Next presenter today is Vince Vora. Vince has been a partner of Metastock for a number of years. He's always really good to work with. I've had the pleasure of working on a number of different systems with Metastock and Vince, and I absolutely love him. We've come up with some great concepts for measuring kind of the slopes of moving averages. He's a very smart guy, has a really good idea. One of the things I'll say about Vince is I really like, and I hope he talks a little bit about kind of the advice he has for position sizing today. He may or may not, but I think he does a really good job in kind of laying these things out. Let's go ahead and turn it over to him. Vince, how are you doing today?
I'm doing great, Jeff. Can you hear me?
Yeah, I always smile a little bit when I can hear you because there's always that little bit of a gap between, are we going to have a technical problem? But we can hear you. You're coming through great. And here you come.
How are you?
We can see you as well. Very
Nice.
good. Very good. Let me go ahead and let's get the presentation turned over to you. Let's see, make you the presenter.
Sure. Let me just share my screen here. Make sure. Yeah, you should be able to see my chart now.
Yep, we can see you. We can hear you. We can see the slides
All
or
right.
the chart. I'm going to get out of the way.
Okay. Well, first of all, thanks. Thank you for having me back. Really appreciate it. Glad to be here with you, everyone. Thanks for joining us today. I wanted to talk about my victory system, which is something I created for myself. It was intentionally meant just for myself, not meant for sale. It was a selfish reason. Excuse the phone in the background there. I, really wanted something that would be a little more responsive to the markets, because when I did create this, now it's been about 2 years now. I thought there'd be more volatility coming up in the markets. And then, of course, the pandemic hit and we went for quite a ride. So I really wanted to share this with you. It's very simple. It is based solely on technical analysis, which is a good thing because that means it will work on anything you can chart. So stocks, futures, Forex, crypto, any market you want, any time frame. It will work on. So what you're seeing here on the chart here is a chart of the SPYs, the S&P 500, the ETF. And you'll notice that there's a number of different arrows and these little dots here as well. The blue line you see, I'll hover over it. It is a 20-period simple moving average. I have that on every layout I've ever traded with. It is, I guess I'll have to say, my favorite indicator. And we use it here with Victory for trend and momentum. When price is above the 20, it's usually trending higher. When it's below the 20, it's usually trending lower. And the slope, as Jeff was referring to, the slope is what tells us how much momentum we have behind that move, right? So the higher the degree of slope in the direction of your trade, the better. Okay, so you'll hear me referring to that over and over again. But what I'm showing you here is the arrows. There's a couple of indicators behind the scenes here. When they line up for a long trade, you will see a green arrow. And from that point on, the candles will be colored in green the whole time until we either get an exit signal or we immediately switch to a bearish mode here. Now, as you notice, there are numerous signals on this chart. The intent here is not to trade all of them. You could and still do quite well with this, but I want you to simply trade the best of the best signals. So I'm going to try to explain that here as we go through it in the next hour. And then if you choose to grab a copy of this indicator, along with it will come 2 training classes where I will describe in detail which trade you should take over the others and why, and really help you differentiate one setup with the other. But I'm going to break it down and give you the one simple technique that I use with this. I'll explain to you exactly how I trade this system. Okay, so what we want to focus on are the setups that happen along this 20-period moving average when it is sloping in the direction of the trade. So for example, any green arrow that comes in with the 20-period moving average sloping higher, that will be a valid trade setup. Okay? If you get a red arrow along that 20 when the 20 is sloping higher, you do not want to take that short. Obviously, you only want to short it if the 20 is sloping downward, right, in the direction of the trade. These dots that you see, the green and red dots, what that is telling you is that the same criteria that came together to signal this arrow here has come together again here. In other words, it's another valid trade setup to the long side, but because we're already in a trade, it's what we call a re-entry. This gives you the opportunity to get in on this setup if you missed the initial one, or to add to your position if you're more aggressive, okay? And, if you're more conservative like me, and you're already in the trade to begin with, you don't have to do anything. You can just take that dot as further confirmation that you should remain in that trade for now, okay? So if we look at the overall markets where we're at now, obviously we've come a long way from the pandemic lows here, right? This was last February, March, when we bottomed out and we started to climb. And I want to go back to this period really to show you one main reason why I love to trade with this system. And more than, the fact that it gives me some pretty accurate entries, it's that it gets me out when things look like they're going to go the wrong way. So we were trending nicely here on the S&P until we got to here, right? February 21st. And, immediately, we switched from long to short here. Now, would I have taken that short initially? No, I would not have. Why? Because the 20 is sloping higher at that point, okay? You could have marked the low here, the prior pivot low, and said, if we break down and we take out a low, not only do we move below the moving average, but we take out the low, at that point I might be willing to go short. Or you could simply wait for that initial retracement and then that re-entry dot. And here, when the 20 was sloping significantly lower and we got the re-entry, that's when we jump in, right? And it worked out to be a great trade. So again, yes, we want to identify some great trade opportunities, absolutely. But we also want a system that will get us out at the first sign of trouble. We do not want to give back our profits, right? So again, over here, if we were in this trade here, we moved up nicely. As soon as we pulled back, it tells us to get out. That way, we're not completely giving back all our profits, right? We're keeping most of it. And that is the key here. What you should expect with this system is that you will have, or you should have more winners than losers. But more importantly, your winners should be bigger than your losers. Okay, with that kind of math, you really can't go wrong. So for that reason, I'm going to ask you to strictly focus on the trade setups, be it arrows or dots, right? Initial entries or re-entries, when we have significant slope in our favor. So, along the S&P 500, any of these trades here, we could have taken. And, the ones like this one that don't work out, you can see that immediately it tells us to get out. So yes, it would have been a loss, but it would have been a very small loss, right? Yet the winners would have been pretty substantial along the way. Now, I'm going to show you several charts just to give you an idea how you can use this on anything. So I'll show you a couple of futures contracts, a couple of Forex pairs, some crypto, stocks, obviously, but I want this to be as interactive as possible. I don't want to be cherry picking anything for you. I want to show you and convince you how well this works. So by all means, type in your symbols. Let me know what it is you want to see here, and I'll show you how Victory would have reacted in the past to this and what it's signaling for the future. Also, please, if I forget near the end of this session, I want one of you to remind me. I have some trade ideas for you at the end. I did a scan just before coming on, and I want to share those with you. Okay, but let's look at the Qs, which is the ETF for the NASDAQ 100. Right, where are we with this market? Well, first of all, if you look back, going back, there were some great setups all along the way here. Right, look at the slope on that 20. That's what matters. That is telling you that not only do we have an uptrend, but we have a strong uptrend, right? Strong momentum on our side. And those are the two things you always want to trade with. Trend and momentum. If you trade with those two, half the battle's already won, okay? So whether you bought in here or you added here, or just bought in on any one of these, you are making money, and some pretty good money along the way, right? Where are we now? Well, we just switched from short to long here. And yes, right here, the 20 was not sloping. So we did not get in on this trade here on the Qs right now. We're waiting for a re-entry, with proper slope. But here we are back near the highs. Now, obviously, there's little to no resistance overhead. So we are likely to continue going higher here. So for now, we should continue to look out for potential long setups, okay? But I did want to show you that whether you're trading on a daily time frame, a weekly time frame like this, and again, you can spot them very easily, the trade setups, right? Very, very easily. If also, I want to tell you that if the market, whatever market you're trading, whether it's an individual stock or any other market I mentioned, if it consolidates for any period of time, in other words, kind of goes sideways, right? You want to take the breakout of that consolidation, right? But only if the system is telling you that you should, okay? So in other words, there will be times where the 20 is flat, okay? The only time I want you to take one of these signals is if price breaks above the high of that consolidation range, okay? So look at this one here. This isn't really a consolidation range. This is a pullback, a pretty significant pullback, right? And then it's telling us to go long, but the 20 is flat. So I wouldn't want you to take that. But if it clears that high and we break out to new all-time highs, you could feel free to take it at that point, since it's still telling you it's a long trade. And now at this point, the 20 is sloping. Or you could just simply wait for the next signal and take that. Trust me when I tell you, there will be plenty of setups. Your job every day as a trader will be to compare one to the other and select the best of the best. That's what the training classes are for, okay? You will never run short of trade ideas with this. There is a scanner that goes with it that I'll show you near the end of the session. And that is fantastic. It'll highlight several ideas for you within seconds or max minutes. And then you want to take the best of the best. So I notice a number of you have put in symbols, and that's great. We will look at them. I want to address Jeff's question before we move on, just so I don't forget. Position sizing, right? So I always prefer to use a percentage of my overall account balance, all right? So the idea here is you should never, ever put more than 5% of your overall account balance into any one trade, okay? But if you can reduce that, it'd be even better. So what I tell my students is you can start at 5 if you have a smaller account. If you have a larger account, you can start with a smaller percentage. Dollar-wise, it'll still be a sizable trade. But if you start with 5%, the goal here is that as you build your account, you want to reduce the percentage. You want to drop it to 4.5, to 4, 3.5, etc. If you can get down to putting just 1% of your account balance in any one trade and still have it be a sizable dollar amount, you're doing very well. And that way, you're really reducing the amount of risk you have overall, because remember, we cannot control the market, right? Anything can happen at any time. God forbid if another 9/11 type event happens and the market shuts down, doesn't reopen for a while, then when it does, it opens 50% lower than where it was. We have no way to exit our positions, etc. So you never want to overexpose yourself, okay? You always want to trade within your means. So it's always best to have as small a percentage in any one trade as possible, but no more than 5, okay? So I hope that makes sense. And so getting back to having a number of choices for trade ideas every day, what I do is I want to select the top 1, maybe 2 that I enter, right, on any given day. Because overall, I will have 10, 20, 30 positions at any given time, right? So, and then as one comes off the books, you add another one, okay? But you never want to overexpose yourself. So let's start looking at some of these symbols. Here's well, that's not what I wanted. Here's Goldman Sachs. The financials have been flying recently, right? And that's a weekly. Let's go to the daily chart here. And you'll see that we don't want to trade. There's several of these trades that we do not want to take, right? Flat moving average, or the moving average is going in the wrong direction, so we don't want to take them, right? But we definitely want to take the ones that are along a slope, right? So right here. Now, let me just go back a little further here. Yeah, here's a perfect example of one of those areas of consolidation where you can mark the highs of these candles, right? Of these peaks. So you can see we can draw like a box here, right? Where, there we go, right? It was bouncing between the high and low range over and over again. That's a clear channel. So when we pop out of that channel and we get a signal in that direction, you know, and the 20 is sloping, that's when we want to take that. If not, we patiently wait, and here's a re-entry, and it would have been more than enough here. It would have been an amazing trade, right? Next entry is here. We have a slope, we enter. Re-entry is here, right? And you see it over and over and over again. Those are the ones you want to pick out. When you consolidate, you don't want to take it unless and until, you know, you attach those pivot highs to pivot highs, and we break through. At that point, you can feel free, or just wait for a re-entry and go from there. Okay. Let's see who was asking for question here. I think it's Nitin who wanted. Looks like Harley Davidson. Hog. Let's go with Harley Davidson. Here we are. Now you're going to find charts that are, you know, that trend really nicely, that are nice and clean, that have candles or price bars that are all more or less the same size. And then you have charts that are a lot more volatile, a lot more back and forth, right? Regardless, you want to find the ones with the two pieces of criteria that I mentioned from the beginning. So it's either a green arrow or dot with an upsloping 20, right? Or a red arrow or red dot with a downsloping 20. Really that simple. We will teach you a lot more in the training classes, but you don't really need any more than what I'm giving you right now. What I'm showing you right now is what I trade with, okay? The only difference here is that if we have, say, 2 or 3 or 4, even 10 trade ideas to the long side, how do I compare them? Which one or two do I take compared to the others? The main difference is the slope on the 20, right? So, you know, if you have a gradual slope, it's good. If you have a sharper slope, it's even better. Okay. And again, the time frame doesn't matter. Okay. The time frame should be determined by yourself. In other words, how much time do you have to devote to trading, right? If you're going to do this full time, you know, you want to trade for on the daily chart or lower, maybe the hourly. Maybe if you want to day trade, use the 3-minute, 5-minute, 15-minute, right? If you have a full-time job, a family, and you can only, you can't be in front of your screen every day, you may want to choose a weekly. If, you know, you're very busy, or you're more of an investor rather than a trader, you only want to look at this once a month, then use the monthly chart. Look, there are a lot of stocks that, you know, can be very choppy, right? Look at Amazon. Who thought at the beginning of the year that Amazon would look like this, right? You know, we've traded Amazon maybe twice this year, not a whole lot, right? Because it's a mess here. But if you go to a higher time frame, it starts to smooth out, right? You can really see these trades come together. Look at the monthly, right? And these are enormous moves on the month. Now, many of us might not have the patience to sit through it or to stay with an investment for this long. But those of you who are, you know, maybe doing this in a retirement account and do not have the time to devote to trading every day, but are more of an investor, you simply use the higher time frame charts, and this tool will help you just as much as anyone on the daily time frame. Okay, let's see. Warren is saying, I think Thinkorswim at the bottom of our chart. Does this mean that it's pro? No, this is only programmed on Metastock right now. This is not programmed on Thinkorswim or any other platform right now. It's exclusively on Metastock here. Okay, Sylvia was asking for ENB, Enbridge. Let's have a look at Enbridge. And there we go. So quickly, you know, at a glance, right? Split second, you should be able to look at this chart, and sure, it's easier with hindsight, but you know, your eyes will quickly be trained and you'll be spotting these right away in the future. You should be easily able to see which signals you would have taken here very easily, very quickly, right? The ones with slope. And on some charts, you know, where there's a lot of back and forth, you'd say, well, I wouldn't have traded this chart. And that would have been a very good thing. Imagine getting in here, right? Getting stopped out, getting back in, getting stopped out, getting back in, getting stopped out. You do not want to do that. Okay. Now, the longer a channel continues, the bigger the opportunity, right? The longer it consolidates, the bigger the move eventually, right? So you don't necessarily want to take your eyes off a channel. You might want to put a chart like this on your watch list, right? And wait for a break, because when the break comes, it will be significant. So when this broke above the highs here, you could have entered here. It would have been a very nice trade. Or just wait for a re-entry or a new entry here to come. It will likely come very soon on this chart, okay? The other tip I will give you is that the closer these entries are to an all-time high, the better. Why? Because there's no resistance overhead, and those are the ones that tend to do better, right? If you look at something like Target, right? Target was trending really strongly for a very long time. And these entries were so easy over and over and over again, right? Here, great entries. This one, this one, this one, this one. Even going back here, right? If you mark the prior high when it breaks the high, but there are some more here and so on. It turns around, right? Do we take this one? No, we don't. But what does this show you? That we got in here, could have added here, added here, added here. Look where it got us out, near the top of the move. it didn't give it all back, right? Got us out immediately. Did we immediately go short? No, because the moving average was not in our favor. Now it starts to slope lower, right? We get a minor pullback. There's the red dot. We enter short. Pulls back again. We add to it, and off it goes, right? Turns around, gets us out immediately. So we capture that profit. We don't give it all back, right? Now, do we go long here? No, I didn't. Why? Because the 20 was at best flat. It was not sloping higher. Now it has turned higher. So if this pulls back a little and gives us a green dot, I will trade again to the long side, okay? It is really that easy. Trading doesn't have to be difficult. We, the traders, make it difficult. We're our own worst enemies, okay? I'm sure you've heard, don't bring your emotions into trading, remove your emotions. Well, we're human, so that's almost impossible to do. So what you want to do is have a tool that basically tells you what to do so you don't have to really think about it. And, you know, you don't have to take my word for it, but when you grab yourself a copy and you can go through thousands of charts, and you will see that if you enter when you have an arrow and that 20 sloping in your direction, you'll be right way more times than you're wrong here. You'll continue to capture these trades. How many of you have traded Costco recently? Costco was on quite the run, right? And again, here's Costco. You know, we bottom out here and we turn. Now, would we have taken this again? No, we would not have. If you're more aggressive, right, you may want to take these, because if you're just looking at the price action, right, throughout here we were making lower highs and lower lows. There were also some very good short setups here, beautiful ones, right? Now, when we get that green arrow at this point, we had already made a higher low, and we're just breaking above this pivot highs, which means we have higher highs at this point. So you could have taken that. I consider that a more aggressive approach, which it's just not the way I trade. I patiently wait for another setup. Here's where I would have gone in, and then here. And then here, you notice how it consolidates, right? We can zoom out a little so we can see it a little better. Always take your trend line drawing tool and mark the highs, right? You can mark the lows too, just to create your little channel, right? Point is, once it breaks out of that and you have that green arrow, you can go with it or wait for that re-entry and take that, okay? But again, and any time frame, doesn't matter, daily, weekly. Look at the recent one on the weekly, just last week, right? Fantastic. Look at the slope. That is the kind of degree you're looking for. Has it worked in the past? Absolutely it has. Here, 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 right? So if you're just focusing on the ones with slope, you eliminate all the others, right? If you're worried about, you know, not fully knowing exactly how to draw a channel or draw your trend lines, or you don't even have to bother. Just wait for the ones with slope. But we'll teach you all of this during the two training classes. Look at the monthly chart on Costco. If you were an investor here, how easy would it have been to remain in this trade all the way? You'd still be in it. There's absolutely no reason not to, right? Now, how many of you have been watching Tesla, right? In our market chats with my members, I was talking about Tesla. Well, I was talking about it before in here as well, but right here on this setup here, I said it was going to go back to 900, back to these highs over here. We got a beautiful setup here, right? Got us out, got back in, added to it here, and off we go. We are over 1,000, right? We obviously hit that 1,000 mark yesterday, became a $1 trillion market cap company, and continued to run. And believe me, I'm no fan of Tesla. I'm really not. For the longest time, I always said the price was way overvalued, but it doesn't matter. It really doesn't matter. Usually, you know, when I trade individual stocks, I don't even know what they do. I look at the symbol, and that's all I know of it. What matters to me is there a green arrow, a green dot, and is there a slope? That's really all I care about. And off it goes. But I wanted to share Tesla only because, you know, if you go to a lower time frame, right? We can look at weekly again. Look at this trade. How beautiful is that? Look at this one, right? Fantastic. You go to monthly, right? And again, here's one where if we were just looking at the monthly, would we have gotten in here? No, right? But if you draw a line across, let me put my phone on mute. It's making noises here. There we go. If we mark the highs of this consolidation range and you mark the breakout, right? You're green, you mark the breakout, you start to slope, off you go. Or wait for this one. Would it have been a bad one? No, from 700 to 1,000. Fantastic trade. But let's go from one extreme now to another. Let's go to like a 5-minute chart, right? Look at that. It's exactly the same thing, right? Does it matter? Time frame doesn't matter. It's the same rules, same criteria you're looking for. If it's green, you get an entry and the 20 sloping higher, you go in. Listen, do they all make money? Of course not. Look at this one. We got in here. It did nothing but go sideways. Now, we didn't get out. So if you got in, eventually you would have made money, good money. But not all of them do. You will be stopped out of trades. You will have losing trades, no question. But as I hope you can see here, when it doesn't go your way, see this red one here, we're sloping lower. We wanted to get short here, right? Immediately turn green. The next bar told us to get out. Red again, immediately green. So we would have taken a couple of losses there, right? But look how small look how small the movements were. How many of these losses could we overcome with just one of these winning trades, right? That's what this is all about. Okay. And again, it's very quick and easy to spot and get used to. Let's talk about, or let me show you commodities, right? Forex and crypto, etc. So crude oil has been going crazy lately, right? Everyone's been talking about the price of oil. Let's have a look at a daily chart of crude oil, right? Again, beautiful setups all along the way, right? So if we look back here, here's a consolidation, right? If you mark the highs, connect, and all you have to do is connect pivot highs to pivot highs or pivot lows to pivot lows, right? That's how you draw a trend line. Nice and easy. Once we get the breakout, we want to jump in, right? If the 20 is still flat, skip it. Don't worry about it. This one, we definitely had a slope. It worked out beautifully. This one just kind of went sideways, right? Then we got it again. Beautiful. And again, right? This one here. And now these ones here. Whereas, and there were short trades like this one where we would have taken that, not a problem. Okay. Now, if you are even more conservative and you really want to be safe, okay, you can confirm on higher time frames that the trend is higher on those time frames as well. In other words, let's say you were debating and you were saying, well, you know, we were dropping here in oil. Now we just turned, but it's very early in the move. Do I take this one, right? Well, maybe if the two higher time frames are telling you that it's going higher, then it's an even safer trade, right? So at this time, right, if we went, and this is September 22nd, right? If you would have switched to a weekly chart, right? And you would have looked at September 22nd. Where's September 22nd here? Let's see, back here, right? If this was green and sloping higher, beautiful, right? And same thing on the monthly, right? So, and yes, you absolutely would have been green here. So it would have been an extra layer of confirmation. You can use this any way that makes you feel comfortable. If you have another indicator that you like, right? Say you like to trade with the MACD for whatever reason, right? And you say to yourself, well, I'm only going to take these signals when the MACD is positive, right? Great, up to you. I'm telling you, it's not necessary. I did all the trial and error to narrow it down to a very, very simple formula for this. You don't need that extra layer of confirmation, but until you convince yourself that this will work, go ahead. By all means, do that for yourself, okay? Let me see if there's other questions here. Oh, Bruce is asking how this is different from my winning momentum system with the Ichimoku cloud. Yeah, it is a completely different system. And really what's different is that it's meant to capture the pivots in the market more quickly, right? So it's more responsive to that. With the cloud, the winning momentum strategy still works very well. Nothing wrong with it. But for example, in an area like this, this was likely to move in the cloud or below the cloud, and then we'd have to wait for it to come back above the cloud before we have an entry, okay? Again, you can put the cloud on here and only take the entries that are above the cloud. You can merge the two together. There's nothing wrong with that. But I wanted something a little more responsive because I was expecting the market to be a little more volatile in the coming years. So that's the only difference. This has fewer indicators. It only has 2, believe it or not, only 2. So it responds very, very quickly. When those 2 are in line, we have a signal. When they're not, and we're split, it's either going to tell you to exit or it's going to show you a yellow bar like here. And there was a yellow bar here for 1 day, or here, yellow bar, or here. It's telling you those 2 indicators are pointing in opposite directions. We don't know which way this market is going to go, so you want to sit tight and do nothing. And it's that simple. So, it's a simpler system, but it's more responsive. And that's why I'm trading with this now. Okay, what else did I just showed you? Oil. Let's look at like a forex pair, the Euro USD, right? Here we are. So again, do we look at this any differently? No, we do not, right? If we have an uptrend and we have momentum, meaning slope, we wait for these dots or, a new green arrow, and we take that trade. If we're sloping lower and we get a red dot, we take it short. It's that simple. So look at this short, right? Look at these shorts in here, long here, shorts in here, right? Really that simple. That's simple. And you can see for yourself that if you just stick with those, you have a very high winning percentage, right? You just have to be disciplined enough to follow the arrows and the dots. It's that simple. And again, whatever time frame you prefer. Crypto, Bitcoin. Let's look at Bitcoin, right? Now, Bitcoin has certainly been volatile, hasn't it? And a lot of these trades we would not have taken, right? And here, right? But there were some beautiful trades. Look at this one back in here, right? And back in here. There's one right now about to set off. Here we go. So I would keep an eye on this. This is today's dot. Now, just to be clear, the dots are the arrows. Once a bar is closed, and it doesn't matter whether it's a 5-minute, a daily, a weekly, a month, once that bar is closed, right? If there's a dot or an arrow there, it will be there for life. So there's no repainting after the fact. okay? But while that bar is still open, we could see a dot and then it disappears, right? So, for example, if we were higher this morning and the formula came together, it showed us a dot, but before the close, it sells off and those two indicators separate, that dot can disappear. But if that bar closes and it's there, it is there for life. So what you see here, there's nothing repainted. These are actual signals. If you look at Ethereum, right? Same thing. Just look back at Ethereum and see how simple and easy these were. And, we never know when we're going to catch a run like this, but boy, is it ever fun when you can sit through one like that, right? I don't know if Greg is on. Greg from Metastock last time told me he had a trade in Devon Energy, this one here, which worked out beautifully for him. I think it was right on this date. We did an event, I believe, if I'm not mistaken, or I can't remember, sometime here in early October. We did an event, and he was asking me if he should sell at that point. Well, it's triggered now a couple more times here, and it's still trending really strong. So just a great looking trade. But again, look back. There was one here, here, here. It's really that simple. You're welcome, Bruce. Let me see. Are there any, Jeff, if there's questions from anyone watching on YouTube, let me know. Let's see.
I will, none so far.
Okay, not a problem. Keith had a question. Sorry, Keith had a question. He said, does the dot appear the day after the price has touched the 20-period movement? No, it has nothing to do with if it touches the 20 or not. The 20 is there for slope. That's what we look for. Now, having said that, I'm glad you brought this up, reminded me of a point. What you do want to focus on, another thing or another way you differentiate one setup from another, is whether it's close to the 20 or not. Because sometimes you will get a setup that's a little further away from the 20, right? And some that are very close to the 20. I prefer the ones that are close to the 20. Why? Because when price moves away from the moving average, it always snaps back, right? It always reverts back to the mean. It moves away, it reverts back. It moves away, it reverts back, right? So just like here, it moved away and it comes back towards it. So, to buy when we're very far away from that 20, it's adding risk because it could just snap right back to the mean. Now, if it were to do that, we would get a red arrow or an exit sign, fairly quickly. So, the losses would be still small, but I just prefer the ones that are very close. That way we can ride that whole move away from the 20. Okay, great question. So this will protect you, no question. Now, there's one thing that it will not, but nothing will, and that is a big gap against us, right? It could be some black swan event, some unexpected event. It could be an earnings announcement. So be careful. Always know when the next earnings announcement is if you're trading individual stocks. I prefer to exit my position ahead of earnings, right? That's totally up to you. But again, when you have a portfolio full of positions, you generally want or don't want all the positions to be in one direction, right? If you're going to have 20 different trades on, you don't want all 20 to be long and no shorts, right? You got to have some sort of hedge on all the time because you never know when something can happen. So, but having said that, what you can do is use the scanner for this, right? There is a scanner. Now, before I get to the scanner, I want to show you one other thing. If you go to the top left here, on your Metastock platform, you click View. Come down here, and there's Expert Commentary. So if we click on Expert Commentary, you're going to get this box here. Now, it will tell you a bit about myself and a bit about trading wins and the victory system. But if you notice, if you go back to your chart and you look at the far right, the most recent candle, you'll notice that there's this little triangle overhead, right? It always defaults to the most recent candle. So what this box is intended to do is tell you, basically walk you through a trade. So if we had gotten in here, let me move the arrow here. So there it is. So you can click over a bar and move it there, or you can use these arrows at the top left of the expert commentary window to move that along. Now, you'll notice that when there's an instruction, when there's a new signal, whatever, this will add some text here that is the same color as the signal. So if it was this red arrow here, this text would be red. It's green here, so the text is green, right? And it's telling us the victory system is currently signaling a long opportunity, okay? Now, let's say we got into that. And by the way, also, it'll tell you if you're going to trade this with options, it'll give you some direction on the time to expiration and the delta. You want to choose that sort of thing, okay? A guideline. But the main feature here is that as the trade progresses, and let's move the arrow along, one bar at a time. There we go, right? It will highlight and tell you where you should put your stop loss, okay? So if you see here, it says the victory system is currently in a long position. Traders should look to exit this position if the price of the security closes below 29.15, okay? Now, you can simply wait until you see the red arrow, okay, or the exit signal, right? And that's what I would encourage you to do. But if you have to go to work, say, and you can't watch the market while it's live, and you need to put a stop loss in there, because you never know what's going to happen while you're away from your computer, you have the number there. Now, if we move to the next bar, right? Now it's 29.37. See, it's moved higher. If we move to the next one, now it's 29.62. So it trails that stop for you, okay? So really, it holds your hand through the life of the trade, which is great. Now, if you have a trade like this, like Greg had, that just, day after day moves higher and higher and higher and higher, right? Fantastic trade. You don't have to wait, completely until you get an exit with your full position. If you have multiple option contracts or numerous shares, you can scale out at different points, okay? We talk more about that in the 2 training sessions, but, it's always smart to take some profits on the table, but you always want to leave a little for the full length of that trade. As you trade with this, as the weeks go by and you get more and more confident with the system, you're going to be happy to just hold the whole thing until the end, because some of these trades are enormous. But, at least at the beginning, and especially if you're just starting out and you have a smaller account, you want to bank those profits when you have them. Okay, that'll do 2 things for you. Not only will it build your account a little quicker and have you gain confidence in yourself as a trader, which is huge, but it'll also help you build confidence in the system itself and allow you to be more disciplined with these signals, which is what you really need. Okay, so the expert commentary, fantastic feature.
Vince?
Also, yeah.
Real quick, we do have a question coming in from YouTube about, particularly the Bitcoin chart, but I think you could show this on this chart as well.
Sure.
He's just coming in a little bit late. How do you know not to trade in the whipsaw sections? And I think he just missed the part where you're talking about the slope.
Sure, absolutely. So for example, in this area in here, the way you know not to trade is by the 20-period moving average, the blue line here, being flat. You want to focus on the areas where there's a slope in the direction of the trade, when there's momentum, okay? So see here, these 2 dots, look at the slope on the 20, right? It's definitely sloping higher. Now, visually, anything that's, about this degree of slope or higher is what I would call significant. So these are great entries here, as is this one here, or this one here. If the 20 is flat, or you notice that price is just going back and forth within a certain price range, right? Actually, I think Microsoft would be a great example of this earlier this year, right? You see how in here, it was very choppy, right? We could mark the highs. Look at the pivot highs all throughout here, throughout this range. We could pretty much draw a line and capture most of those, right? And same with the bottom. So there's a very clearly defined channel there. So price was bouncing back and forth, back and forth, back and forth, right? So while you're in there and the 20-period moving average is not sloping in the direction of the trade. So see green arrow here, it's totally flat. Green arrow is totally flat. Green arrow is totally flat. Same with red. Here it's kind of sloping higher, but pretty much flat. You don't want to take these until it breaks out, right? You only want to focus on the ones with slope like here. These are the easy money makers, and that's all you want. You want to make trading easy on yourself. The reason I reduced this system to only 2 indicators is to keep things simple. So if I were to go and try to trade in here, I'm now really complicating things for myself. So that's what you want to avoid, okay? And now, of course, Microsoft has been doing quite well. Let's see. I'll come back to see if there's more questions, but I want to really show you the scanner before we run out of time here. So if you click on the letter P here in the power console in the top left, it'll bring up this box. If you click on the Explore tab, at the top are all the different strategies. They're in alphabetical order, so you need to go down to mine here, to the Vora ones. And what we have here are the Vora Victory right here, right? And the Vora Victory re-enter, okay? Now, Jeff recently added Vora Victory Filter and Vora Victory re-entry filtered. What the difference there is, the degree of slope. So the ones that say filtered are adding another filter there, looking only for the ones with the strongest slope. But let's mark these ones here. Actually, I'll just do Vora Victory for now, in the interest of time. And we come down here, and we are going to scan. I think I have the index constituents, the Dow 30, right? 30 stocks in the Dow Jones, and the 100 in the NASDAQ 100, okay? You come over here, but of course you can select whatever market you want. You come down here, pick your time frame. I'll leave it at daily, and we'll click Start Exploration. You should see this box pop up, and it'll tell you here, I've selected 126 charts. And look at that, it's pretty much done. We're already at 90, and there we go. We're done. So out of the 126 charts, 117 were rejected, meaning there are no valid signals, but 9 of them have valid signals. Now, you can see here that there's a new long, new short column, right? The ones with a number 1 is what it is. So here, Amgen is a long. You'll notice it has a 1 under new long, but 0 under short. That means it's a long. So if you only wanted to look at long setups, you could just click on the new longs here and
1,990. You can take advantage of the metastock.com/summit deal. You can give us a call at 800-882-3040, or you can chat online with us at metastock.com/sales-chat. So we're running a little bit late, but I still want to say thank you to Stocks and Commodities for kind of sponsoring the event. They do a great job. You can get a free issue if you just go, if you've already registered, don't worry about it. If you're watching us on YouTube, right after you hit like, go to metastock.com/tradersummit. I got the hiccups on this item, and claim your free issue. metastock.com/traders-summit. You can get a free issue. Craig, stop that.
So I wanted to apologize. It looks like we were down for just a little, unbeknownst to me, our stream stopped. That was going to We're okay on the
YouTube?
webinar side, but the stream going to YouTube stopped for us. I'm not sure how long that was down. Nobody commented about it in YouTube, which shocks me. But apologies, you're back up now, and I think it's.
I don't think it was very long.
It couldn't have been because no one said
Because
anything about it. But
yeah,
if
well,
anybody
the
out of
last
YouTube
time we had
right
was
now could comment, maybe let us know how long we were paused. Anyway,
Okay.
please continue, and apologies for the interruption.
No problem. Scared the hell out of me, though. All right, I want to also thank you to cmtassociation.org for sponsoring the event. They are a new sponsor of ours and a great, well-reputed organization. While you're signing up for that free magazine, make sure to download their program guide. Our next presenter today is a gentleman by the name of Peter Dalal. Peter has deep roots with Metastock. He's been going back, I think it's like 16 or 17 years. He developed a program called the FX Traders Advantage way back then, and it was a very, very popular program. Was designed to look at the Forex. In the meantime, he has really been kind of working on his routines and his models. He's put together a program called Magic Trader, and it has a very unique color coding strategy that's going to kind of help you understand what's going on in a market. I really, really like it. I want to welcome Peter. I'm sorry we're a little bit late with you, Peter, but it's welcome to the event. And let's go ahead and kind of give you the presentation. Make sure we can hear you. I can't hear you yet if you want to turn on your microphone. And let me make you the presenter as well. All right, Peter. Okay.
Can you hear?
It looks like, yeah, we can now.
All
Just,
right.
we couldn't hear you long enough to make me a little nervous that it wasn't going to work.
Actually, I turned the volume down. That's why.
Oh, no problem. I think you should have the pop-up that says, do you want to share your screen? If you want to do that, I'll make sure we can see it.
Okay. Do you have the pop-up share the screen yet?
You should have gotten it. I can send it back over there again if you want me to. For screen. Okay, here it comes. Okay.
Can you see my screen?
Not just yet, but you should have just got it a pop-up saying, do you want to share your screen?
We have a pop-up.
Do you see a pop-up that says, "Do you want to? You've been made presenter. Do you want to share your screen?"
I don't think we're getting the pop-up yet.
Okay.
To share the,
Let me
can you
try
see it?
one more time. Okay. Let's see. Okay. Here we go. Third
Okay,
time's a
now
charm.
I got it now.
Great. Awesome.
All right. Can you see my screen?
Let's see. Not just yet, but it usually takes a minute or two. I do show that the let's see, the screen is being shared, and I can see your screen.
All right.
I can tell you that it's the correct screen, and we can see your PowerPoint.
All right. Perfect. Thank you very much.
No
All right.
problem.
All right. Yep, I appreciate giving me an opportunity to speak here. So let me know when we get started.
That's all yours. I'm going to get out of the way.
All right. Thank you very much, everybody, coming today. And we welcome you here in Magic Trader, some kind of webinar here, I guess. So we're going to get started quick because we have less time and we want to do justice to the other presenter just after me so we don't delay him. So I'll be brief. All right, we're going to talk several topics and I'll be very brief. It is on here, but the most important here is we're going to talk about how it was designed, because this is not your regular indicators. We did it everything from scratch. So this way we can do things a little bit different way. And we have patterns on these things that tells you something. We invented something new, and there are multiple claims or multiple, it's a lot of claims. So basically, we're going to talk about that and how practically it's been applied. And Jeff is going to come at the end, and then I will do Q&A. That's what we're going to do. Now, I have to be very honest and upfront with you. We got a couple of slides because I'm registered and we listen to the lawyers. I will be brief, and anybody who cannot have a complete understanding of this disclaimer, Jeff has a copy. We have it on our website. We have on a Facebook group. All these disclaimers are existing all over the place, and Facebook gets every day same disclaimers. So basically, let me be brief so we could go to the main content of this presentation. I'm not a registered investment advisor, neither I'm a lawyer, neither I am a accountant. Everything we're going to talk here is for education purpose only. Trading is risky, you're going to lose money, and also you could make some money. And we cannot guarantee anything. And all this presentation contains are for education purpose only. We're going to talk about some of the current stocks people wants to talk about it, but that is no recommendations to buy, hold, and sell securities. So we want to be very clear. Everything will be done 100% for education purpose only. Now, as I'm registered with CFTC, this is the CFTC disclaimer. In short, in hindsight, everything looks good, including this magic technology. That doesn't mean that it is going to be repeated. And these are falling under hypothetical results, and you could still lose money if you follow them. And they are stimulated trading results. We have options included in this program. So there are symbols you're going to see later on. And options are risky, and everybody should get a copy of characteristics and risk standardized options from OCC as well as the supplement. Now, as far as my company is concerned, we are not claiming that we are an investment advisor or we don't give any professional advice here. And everything, including the alert room, right? You're going to be having a lot of disclaimer there too. And we do live, but it is for education purpose only, and I don't give any recommendations. I could talk about my trades, but not anything else. Now we have a lot of pattern spending. You're going to see a lot of trademarks, service mark. We've been around since 2004. We started 2006. I started doing this magic trader with institution, right? So we've been around for a long time. And the first time we going to the retail customers, some taste of institutional, how they trading. And you could blame it to previous president, copyrighted material, right? So let's move on. Again, this is my NFA ID number for my company. You could check whatever you want to check it. And I was also previously registered with SSC. So fortunately, I don't have any bad records, luckily. Try very hard. Now, we are actually getting some royalty because of the patents with the Metastock. We have to disclose, and everybody should, because that's a FTC requirement. So you're going to see we're trying to be covering most of the laws so we don't get in trouble, right? We don't make money, it's okay, but messing with the regulator is not a good idea. Now let's get started. So the whole goal for this webinar, and what I did, this I created, so it's a theme we're going to do here. Somehow this, okay, now I got my, sorry about that, because I have 8 monitors here and it's hard to sometimes look at the arrow. So our goal is today to pick up some ingredients. So make believe you are in a kitchen. You could see here there are a bunch of ingredients. So I picked up 5 of them and I was fortunate to find a picture suiting to my thoughts. And throughout here, you're going to see a bunch of candlesticks also. So that's the theme. That's what you're going to be facing within an hour here with me. So I just want to have you warm it up. And there is a bull. So we are going to be talking about the bull trades or bullish believers trades. So in short, these 5 ingredients do exist. And how I found these things. One is I've had a ton of exposure to institutional trader and a bunch of companies, right? Because of my involvement with Citigroup behind the scene. And before it became Citigroup, I started hanging out with people right from travelers, right? And I got exposed to things which normally people do not get it, including acquisition of all the Smith Barney, Commercial Union, Aetna, everything Sandy did it. So I was hanging out with these people and I learned a lot. And I was fortunate to go to the trading floor to hang out with them while they are trading. And I've seen things which normally people don't see. So I'm an engineer, so I figured out and I didn't say nothing, right? Idea here is what they're doing, I want to transfer this thing one day for my own trading. So that's how this whole kitchen started, to be honest with you, with those ingredients. And I put a picture here, and even a clock with the magic trader. I made it yesterday. Jeff is seeing for first time anyway. So just sense of humor before we get started. So you're going to walk into the kitchen. The kitchen is usually look messy, but you got to find the prepared food. That's what we're going to do, preparing some food. So there are 5 ingredients. So you could see here 1, but those ingredients will allow you to find low risk pinpoint entry and exit with the help of 5 ingredients. That's our goal is. And also what I learned, because my busy schedule with all these drillings and dealings, right, I needed time and I don't have time. And sleepless nights was the gift I got it for a couple of years, including traveling with Jeff and Kelly for years. And I says to myself, there got to be a way to find a better way to represent what I learned. So we got to bring it down to simplicity. So I do not have to do much technical analysis. However, I'm not telling we could eliminate all the technical analysis. That's a wrong statement, but minimize them. And they repeat things, right? To analytical things, repeat and repeat, looking for chart patterns and things like that. There could got to be a simple way to find them instantly. That was my goal. So I could go on with my life very easy. And that's what most of the people in this room have the problem. You cannot be glued to the computer. You heard it. But a high school student can figure it out. That's what our goal was. And that's what some people never traded. We get them in a alert room and we get them started. Now, it's the same 5 ingredients from the kitchen. Now we're going to see how Wall Street looks at that. So what I did it, you don't need to learn where this line came from. So there are 5 major items, which we call 5 ingredients for the Wall Street in a trading, just like here 5. So these are simple things what you came across in a high school. A thick vertical line, which is a green color. So we're talking about bullish. Market is bullish. Nobody wants to know about going down. So we talk about only bullish trades, right? So that doesn't mean the software is designed only for bullish trade. It is designed for everything. So this is a green thick vertical line. This all 3 lines, which we're going to show you on a chart, there is a purple line, blue line, and dotted line. So anything about dotted line, which are 2 parallel lines, is good for bullish believers. And this came from a health indicator, which also we have a pattern for that. So there are 3 colored horizontal lines, right? Or our world is called health lines. So we number as a number 2, which consists of 3. Then this is the spike. Some people call it a dotted triangle, whatever you want to name it, doesn't matter to me. But that consists of number 3 ingredients. Then thin green vertical line, which is a pure health. So this has some relationship with the health, but it is its own standing, right? To confirm that health is good, you could also move forward. Then horizontal time risk, we call it as a ribbon. I think this I learned from Metastock. They call that as a ribbon, but in our language, the when which system is designed, it has all these things to deal with time risk kind of parameters. So that is expressed in the horizontal ribbon. So once you identify those, you're good to go. That's normally our trading style. And later on, you could find each of them individually in one shot, and you could see all these things matching or not matching. And that's about it. And we're going to discuss those few times so you get concept clear. So Magic Trader is a multi-dimensional software, and it's a risk-based software. Now, there are pinpoint entries, so you could have green, then black, and red colors, right? Often you're going to see it, and we're going to show you how to apply it. Basically, in a risk management side, we identify, then analyze, right? Then we can control the risk. We're going to also software does where actual transfer of the risk happens between bullish believers and bearish believers. You could see in a real time. Normally, you don't see them, and we have also patent claims against that. So the software is basically all about risk, risk, risk. Normally, we talk about price, price, price. This we took a route because on a Wall Street, when you trade as a professional guy, you got to worry about the risk rather than making money. Otherwise, you are out of the commission. So what we did, this concept which we filed and got the patent for, is based on believeness. So I figured out there is a line in the sand where everybody believes that we should go long, and there is a line in the sand where everybody thinks that we should go down. So what I did I tried to put it in a picture format. Instead of reading this thing, you could understand it better here. So see this green line? This is not the lines you see normally with everybody's programs, right? These are specially designed lines, right? On above this line, everybody believes that we are going to the moon, right? And that's a line in a sand. So it's a very simple concept. When you see prices are running around on top of the green line, we're running to the moon, right? Are we going to the moon? At the opposite side, when it is below this red line, right, prices are dropping, we are going to the bottom, right, or we're going to the ditches, I guess. So basically, on a Wall Street, people talk about risk on and risk off. That's where the Wall Street people talk, and one time I did talk too. So this is very simple way it was designed. And you're going to see different colors here of the candle. Don't get intimidated. What it is, we're not going to talk about much, but I want to let you know. We also discover everybody wants to talk about buy and sell, and I realize that is not reality. When you talk about buying, there are three different ways institutions and general public buying, and how we could dissect them in a real time. And that's how we found out it is true. And because I was trading on the other side, right? I know what we were doing. When I will take the trade, when initially when we reversing the trade, and I witnessed this thing on a trading floor. Even the prices are going down, we will start buying because we got to buy $10 billion worth of, say for instance, Ford. We got to start buying when prices are dropping, and then we reverse the trend. And we shot the hell out of this stock. And if it is like too much up, we start, like say for instance, Yahoo. Yahoo, we knew that it's going to go 200. That's a psychological new time high, I mean all-time new high. So we started shorting at 185. And we keep shorting. Then we knew that 203, we're going to take a bunch of thousands of shares and we're going to keep shorting. And we bring it down to 135. That's the way institution does. When everybody was buying, we were shorting, right? That's the way institution, many of them trade. I cannot tell all of them trading, but this is one of the things I loved it, right? Controversy trade. So let me talk about a little bit. As I told you, I came from Wall Street. My journey started in 90s to hang around there. Eventually, I had to get a license. You can't do things without license. So I got Series 763. Then currently I have Series 3 and 34. And I've been trading as an individual trader as well as professional prop trader, then become an institutional trader, things like that. But not a big deal. Idea was I was waiting for Metastock to give this version to ordinary people so they could make money like professional trader. That was, and they get an exposure. And I wanted to really disclose all the secrets what they're doing to people. That was the reason why we did this. So ordinary guys don't become victim. Now, what did happen? My daughter was very young, and I'm already busy. So I asked my daughter to help me, and she also helped me invent this thing, all these coloring systems, and all these lines and everything. There are about 10,000 items we submitted to all what you call patent claims and patent pending, whatever. So you could understand what went on there, but doesn't mean that you got to learn all. Pick a few things and be happy. One strategy can make you a little bit more comfortable situation for trading. So this my daughter sacrificed her young life doing that, and she has a lot of credential, right? Because like what she has to do with construction, because that's one of the business we're doing, right? So uh, we we were trading commodities since I came here. So she learned commodities trading, and she wound up getting Series 3 and 34, just like me. So that's a little bit about both of us. Now, again, you're going to see it, same thing, but a little bit organized. Same direction line. So this green line is a direction line. This is the health I was talking about. So I put a green health, and here it's a red health. In fact, I added this webinar, and then everything is the same, but each of them are the element, right? Or they are very important individually also. And you could trade with 5 together or 3 at least, right? So on both sides, on a bearish side as well as bullish side. So I thought that probably I would rather show you, because Jeff likes me to repeat things, because new guys, new concept, they get lost. It becomes complicated, but there's nothing complicated. If you can remember this thing, and I of course you will, because you learned this thing in high school, so why not? Now, what I want to tell you, that as I told you that you need minimum 3 of those. So even though you have 2, then you need another thing here, which is we call catalyst. So you don't need to learn about catalyst here, but you could recognize this color. It's a yellow color candle, turquoise color candle, or black candle, or sometimes in Explorer, you're going to see all 3, but in the front, you only see one of them. But Explorer discloses there are 3 catalysts. That means there are tons of institutions are lining up to go bullish. So these 3 candles is so powerful, and it has also its own way of trading. So I just want to let you know, where institutions start loading up, this is normally is the place. How we could claim that? I have gone to CBOE, I have gone to the dark pools, plus what we did when we were designing these things, and first time it came out, I was fortunate to work with Bearstone and Lehman Brothers and a bunch of institutions, right? And when they're taking trades, we cross-verify, including Forex, right? With a guy named Tom. I don't want to talk his last name. He is the head of FX. And I said, hey, Tom, did you take the position on New Zealand dollar? How did you know that? I said, my software shows me. So that's how we verified. And lately, one of the gentlemen, Metastock was kind of curious. So I went and asked favors and got all the data from dark pool and this pool. And I have an alert room, and we eyewitness and documented every single thing. When they take position, we know. We have this turquoise bar, yellow bar, or different color candles. So we have fun going on in our alert room. So we can make bogus claim, that looking for trouble. So at least we have some documentation, but that's not the point. We want to make money here. That's our purpose here. So basically, you need some tools. So when you go for hunting, right, you need some special tools. So Metastock was nice enough to put 39 different ways you could scan different things in a magic trader. So basically, for today's purpose, we're going to use 5 ingredients, right, and catalysts together, scanning tool which Metastock created for me. So we don't have to analyze and all this stuff. We just scan it and open this chart. Looks good, good to go. So let's dive into that. So don't get intimidated. What I did it, you're going to see the same scanner Explorer result, right, with Metastock. So what I did it, the important points, I put an arrow. So this is the same one I showed to you. This is the date of the chart we're going to look at for today's study purpose, right? And I scan it and I try to put it in a way it's easy to be understood by anybody. All right, because Jeff told me that we need to simplify it. Otherwise, it looks complicated or overwhelming. Yeah, but once you understand it, it's not that much, and ignore everything else. So we're going to stay focused on 5 ingredients plus catalyst. So this was done on a daily chart. You could do in any market, any time frame, right? 5 minutes, 10 minutes, whatever you want, or custom 65 minutes. Some of the people on Wall Street like to do 65 minutes, right? And a lot of people don't talk about it, but I was there, including 39 minutes. People are using it. Go and figure that one out. But that's a Wall Street. Unless you don't trade there, you don't know the secret. Trust me. Same thing like yard. When they talk about Forex, I buy 10 yards. That means 10 billion. All right. So basically, let's go here. So here are the same one, what you're looking at, and the graphical presentation is here. Number 1 is here, number 2 here, number 3 here, number 4, number 5. And we have given an Explorer. So existing people who are just become a customer, this is kind of a little bit training to you. So you could identify them right here, and all catalysts for bullish believers are here. And you could see here, they all lining up. So on average, you could get 4 or 5 such setups on a routine trading day, right? And if you don't, then you could utilize 3 and 1, right? But most time we are lucky. So basically you could see they are not a low volume. These are having pretty good volume, right? More than million. That's what I prefer, right? And you could see they have good volumes. But it is also true, you can't just blindly trade and go on a put it. You got to open the chart, and chart tells you a lot of stories which you don't normally see it. Now, these are 5 ingredients, as I told you, and this is the yellow bar in this example. And these are the 4, I took it from here. So let's go to the next slide. Now, what I did is again repetition of the same thing we learned, so we could get some kind of confidence today. So these are the same 5 ingredients from the Explorer. I bring it here so you don't have to think much, and you could relate those items on a chart. So we're going to go on exercise. Number 1 is here, which is that vertical line. Number 2, there are parallel lines about dotted 0 line, right? It was done on 14th, which was also part of the Explorer. And you could see this lining up with this triangle or a dotted triangle. That's number 3, which is right here, right? Then you're going to see number 4, which is that health, pure health, right? So you could see here on that yellow bar day, this line up. And then this is the ribbon, which we call horizontal time risk. It's also lining up. So when trade are having risk aligning, they all will line up by themselves. And yellow bar is the catalyst. Oh, institutions coming in. Why not me? And look at the results of HBAN. And you could go and open up whatever the programs you have it, right? We taking trade above the line in a sand. Don't forget that. And that doesn't mean you cannot do other way around, but there are different methods of trading, which we show in the alert room plus our recorded trainings. So the best trades are both lines are meeting the basic requirement, line in a sand, right? And green line is above the red line. That's it. And fine gradients matching, we got a yellow bar, we're good to go. Oh, Peter, this is after the fact. You picked up the whatever. You could do whole day long. I could show you dozens of examples. This is not one time kind of theme. Now, it looked like a junky chart, right? Totally junk, right? Nothing happening. Going horizontal, right? Like people, oh, consolidation, this, that. We don't even worry about much. But the key here is the ingredients matching or not. So look at here. So it is also true after consolidation, it has to break out one way or the other way. So let's see here. Oh, tech people, and I was one of them. Oh, it breaks this one, then I will enter. If this breaks down, I will go down. We really do not worry about those things. My way of doing it, institution commitment. Yes, institution commitment. Yes, way before even this happened, it was telling me. Then the ingredients started lining up. So I am very much confident. Oh, they got to fill up the gaps. Those things does not matter when they come with a truckload of money. That's what we're looking for, right? So now, 1, 2, 3, 4. I'll repeat again. Vertical line, 2 lines which has a value of 4 and 1 before they show you horizontal line. That's what we need. 4 and 1 value, right? So usually what I do it, and you don't have to do it, when this starts forming, I look at the 60-minute, what is happening. If it is showing yellow bar, I'm in. I'm not waiting for end of the day. So existing people, you got the clue, right? Or for this session purpose, let's go at 4 o'clock or a little bit earlier than 4 o'clock before market closes. That's what we were doing on a trading floor. We'll wait until 3:45, then we'll start putting position with New York Stock Exchange to the specialists back in days, right? So basically, you don't need to worry about it around 3:45. Look at the movement whole day on a 60-minute. I came from institution, so I don't talk much about smaller time frame, right? But for trading purpose, like futures, yeah, you got to trade with a smaller time frame, 5 minutes, 15 minutes. But on institution side, people prefer 60 minutes. That's why I like to talk about much here. So basically, little guys, you could go with any time frame you want. Doesn't matter. It works the same way. So don't get nervous. So catalyst is the yellow bar, which we talk about it, right? And all things are matching. So we on entry, I took right from Metastock charts. So there is no mystery. So we enter at 76.43 on a day 1 and go to sleep. This is a swing trading. We could do scalping, scalp swing, right? All kind of stuff with this software. Look, day 2. Suppose you don't want to enter. You want to do at the open. Okay, you do it at the open. I'm not stopping people, but I trade with the confidence. So basically, I mean, it kept up. Oh, third day. It's going to pull back. Who's here? That's what you have to worry about it. Who came to jump it up, right? That's what you have to care. Catalyst, right? So you recognize you don't want to have to worry about institution coming and going. It is yellow bar. Let's go. So second day it went to $77.07 from 76, right? So let's go another one. Third day, as we had a previous speaker talking, revert to the mean. So it went to my magic line, did not even touch. That means it has a power, but it closed above this one, bullish. So stay in a trade. And it doesn't tell you to get out, but I want to disclose. I took out some of the symbols to make it clear. Later on, I'm going to show you the option version, which is kind of like, what the hell happened here? But you could turn it off if you want it, right? If you don't want to see too many things, but then you don't know. And this is the problem with the existing way of trading. You don't know what is happening. I want to know what is happening. So I want to, I want to show you a little bit here why I want to know in there, and then we'll continue. So it's a little bit interesting to look at, right? So this is one of the chart. So let's see here, daily chart. So I want to show you what we learn is there, or we are having just one particular example. It happens everywhere. This is a full scale. Look at it. It happened here. This came a little later. So you wait. You could enter here. And this is the institution setup. How I know? Because I was one of them trading with that, right? So basically you could see same catalyst. We are above these two magic lines, right? Look what happened. However, this software has some uniqueness, forecasting. And here, earlier is telling that we are going to make a new high. This language came from CFTC regulators. I want to tell that it can go higher. They say, no. It's kind of guarantee we can't talk about it. Okay, we settle with this one. So Magic Trader, earlier high. It's telling you in advance, we're going to the moon. Did it went? So when you have other kind of, and I'm not knocking anybody's down. This was my worries, right? We have one buy arrow, and then we don't know when the sell arrow in between. I'm worried, right? Should I add more stuff? Here, I'm going to add. Institutions are there. I'm going to add with a confidence. That's what I'm looking for. So this is the advantage of that. And it's telling you we're going to the moon. Little bit pull back and look at here, another institution setup. Then it's telling we're going further high. Did we went high from here? Yes, we did. And look at here, what happened here? Another institution setup. So this software gives you that advantage, right? And then there is a pullback. Look what it came. Risk reversion, right? So to the mean. So we did not even made it to exact mean. So it's automatically done. And where you put the stop? Right underneath here. And you could trail if you want it. You could do whatever you want, but at least you have a guidelines, live trailing stops. And these two lines took me 6 months to design. So you know these are not the same lines you are used to. And every time frame has their own magic lines. This is a part of the pattern, right? So you know what that means, right? So we specially designed this thing which works in particular time frame. And you like daily, trade with daily. Same thing also true for weekly, monthly, whatever you want to trade. So if you are an institution, it's funny. Let me tell you something. Look, when it moves, right? Look here, around this time you enter, then the cross came in. You could consider the cross, but I get in here earlier, way before other people come in. And look here, it keeps on going. If it crossed below, you could get out and go back again, right? Exit, I get out here, or as soon as this spike forming or pull back, I get out. Even on a swing trading, I'm not interested in. So I don't have too much market exposure, and I look for another setup and go back somewhere here. I may pay more money, but I could trade for a few days, better system, right? Which makes fine ingredient sense. So I will come back here and trade again. So I just want to give you an idea how to trade with this thing. So let's go here. So we are back in APH, and you write it down the symbol. Whatever the trading system you're using, compare. Right? We enter here where you would enter, and you're going to see. So I took out all these symbols so you don't have to go like confused right now. But they are there if you want it. If you don't want to see it, take it out. Doesn't matter to me. Metastock is great, right? They give you that option, but learn to put it back. after you learn. So basically, we are on a day number 3. So we're moving along to the higher side. Now, day number 4, most of the people will chicken out, but it may still close above it, right? That's a little bit technical things. Came back from my training, but I go by the symbol. And if you want, later on, I will show you the symbol, what it was telling you, even though it closed lower than the open. Technical guys, they will try to not, what do you call, go at least long. They will be afraid. Software forecasting, we're going further high. That's funny how software figures all out. So what I'm going to do, I'm going to keep it ready for you meanwhile. So when we come back, you could look at what I said, or if you want, I could show you so you feel confidence. Look at here. I like to look at the real chart. Look here. It was telling me going higher. Right here. And even an expert advisor will tell you all these things. Here was the institution setup, so you could add more things. Yeah, you had a drawdown, but you're supposed to enter here somewhere. Look here. And keep telling you. Now it is pullback, so I will get out. Did it went intraday high? Because this is good for intraday trading also. So people who are scalper, they could use this symbol. It's a little risky. And now look, it pulling back, but still better than entry here, all the way here. So we made a few bucks here. So let's go back. So this is the 4th day. So we're going to go a little bit speed. So we could leave some time for next guy. So this is the day number 5. So you could see here we are at 78.35, moving along from 76. Now day 5 and day 6, right? So in 6 days we moved $3.06, 5% per trading day. I don't talk about the regular day, trading days. That's how we calculate everything, trading days. And it is also not typically is going to ever happen same way with everything. And it's hypothetical because regulator wants us to make sure we tell you this is not typical. So it's hypothetical. So it's make believe it's going to happen because in hindsight it looks good. Your security will do different. So this is how this thing works. Now, as we talk about, because last couple of webinars, they want to know where is the exit point. This is for MSFT, old chart, right? So these are my kind of exit, right? And then the opposite spike, as soon as it forms, I'm out, right? And I don't like to trade when it gets started flattening up. This is the most money you could make it, then you start losing the theme. So we get out. So again, 2 lines horizontal, that's what is necessary, but sometimes you miss a little bit further upside, right? Because they take profits here and then they continue a little bit higher. So make 80% of the move, you are good to go, because if you are trading options, it's a good money. So now what we're going to do, I'm going to take you to Metastock train or a bus here, right? And Jeff is going to take you to the ride for showing a little bit what he wants to show, right? And I created this thing yesterday and I sent it to Jeff, how it looks. So he must be looking at second time. So Jeff, go ahead and talk whatever you need to talk. Then I will come back. If time leaves, we're going to analyze some charts. Whoever wants me to show the chart, I will show them the chart of the security they want to discuss here. And meanwhile, please go ahead and talk to people. Yep.
All right. Peter, let's see. What kind of charts do you guys want to look at? Let's go ahead and look at DVN, if you don't mind, Peter.
You don't want to talk about your thing, or you want me to keep going, or you want to do at the end? So hopefully DVN, you want to say?
Well, if would you prefer that I actually kind of talk about the offer and kind of what we're doing with it right now?
Whatever you want. I'm here, so let me finish. But I want to give you enough time. That's the whole idea.
Yeah, no, I understand.
Because normally you don't have left any time, but Q&A will go on and on. So why don't you talk and I will come back. So this way you have time, because in all honesty, you have to have some time for you too.
Okay, well, here, we can definitely go through the offer. Hold on just a second for me. Let me go ahead and turn the presentation back over to you. Thank you for that, Peter.
Yeah, I'm coming back, right? Because I want to answer whatever the question people have.
Okay, let's see. You go ahead and share my, let's go ahead and show the screen here. Okay, hope you guys are doing well. So let me go ahead, and I'm gonna go ahead, Peter, there's a little bit of bleed on your audio. I'm gonna mute you for just a second. Okay, so here we go. For Magic Trader, as part of the add-on package, it is a huge package. We basically have a total of 48 indicators. There's 47 explorations, 2 expert advisors. Greg, can you hit the lights? 35 templates, huge 127 page manual, 102 symbols, 11 highlights, and 1 commentary window. One of the things about the add-on kind of goes with Metastock as well. It's not something that you're going to grow out of. So you have all the indicators, the explorations, the expert advisors, all that kind of stuff is included as part of the package. And when I initially went to learn about Magic Trader to kind of get ready to start talking about it and showing it, I actually went through the manual. And I will say that the manual writers that we have, in combination with Peter, did a really good job, because I was able to go through and understand kind of how the color codings work and how all of that kind of stuff works all together. So all of that comes in a package, and normally it's about $199 per month. One of the things that we're also offering today as part of both the Trader's Action Pack as well as the consulting in the education room is the consulting educational alert room. And in this room, it's a tight-knit group of people where they do webinars and they talk about topics like short interest and hedging strategies, earning strategies, entry analysis. They meet a couple times a week. They'll also talk about, you can kind of read here in terms of what's included. One of the things I'll say about this room, they meet a couple times a week. In addition, Peter has a kind of like he uses WhatsApp to kind of communicate with you during the week. He kind of gives you picks. People that are part of this service absolutely love it, and they hold on to it, and every time their renewal is up, they pay for it because they really enjoy it. So the normal price on that is $299 per month. Okay, and as part of the package that we're going to give you today, we're going to give you the magictrader.com and the Magic Trader Facebook group, and basically we're going to offer kind of an offer that we've never really done before. So we're going to give you Magic Trader Elite, the educational room, the Facebook group, and the education portal. And what Peter has agreed to do is to give you the 2nd and the 3rd month for free. So if you paid for the elite room, that would be about $597 for 3 months. The educational alert room would be about $897 for 3 months. You'll get access to the Facebook group for no cost and the Magic Trader educational portal for no cost. All of that would be about $1,494 in value. It's $498 today. So you can try the Magic Trader add-on for Metastock. You can also get access to his educational alert service. All of that's going to be available for 3 months. So into January 26th of 2022, if my math's right, and I'm pretty sure it's right, it's limited to the first 50 people that sign up. It's only $498. And I'd encourage you to try it. You can give us a call at 800-882-3040, or you can visit us at metastock.com/sales-chat to get that. Okay. It is also part of our overall larger package where you're going to get RMO ATM, the training course, the Victory add-on, that Elite and Masterclass, the OVI Traders Club access, the Oscar Coburni's Masterclass, the 3-for-1 subscription on Metastock, the Unleash the Power of Metastock, and 2 years of stocks and commodities. So if you want to get the whole package, it would be $19.90. If you just want to get the Magic Trader access, it's going to be $498. And so it's $498 for 3 months. That's well worth it. give it a go. See if it's something that works for you. The people that are part of the room absolutely love it. And so on that note, it would come as a recommendation. So let's go ahead and kind of bring Peter back in to answer a couple of questions while we have a little bit of time with him. Let's see, Peter. There we go.
Yeah, I'm here. Can you see my screen?
No, but I don't. Let's see. I don't think that's terribly important. We can put you back if we get any requests for looking at stocks. Oh, actually, we do have. Let me go ahead and send the screen back to you. Here we go. Okay. One of the things where I'm sending that back to you, Peter.
Okay, I got it.
Yeah. Dakari says, I truly enjoyed the room. Dakari is a big fan of Peter's. He's been using the room since Peter started the room. He's like, I really enjoyed the alert room and the amount of value Peter brings from Wall Street. The magic lines protect my risk and help me trade more confidently. And he says that's not a guarantee of risk or profits. So Anthony Buxton wants to know if you can look at the mini NQ on a 3-minute chart.
What is the symbol?
Mini NQ, I think that's the ES would be the mini. Is it the ESC1 would be the mini S&P?
It's NQ1, I think.
NQC1? NQ lowercase c1 maybe? I don't look at futures too much. NQC1. Yeah, NQC1.
Hold on, this is easier. We could look at all of them once. Then I'll enlarge. Hold on. I should have done. We look at it. I don't remember any more symbol because everything like we programmed it. See, this is what we call 4 horsemen. Hold on. You know, I was looking at a lot of charts.
It happens. I'll get out of one of these days and realize I have 50 or 60 charts open.
85 sometimes. So what I'm going to do, close up a few of them. So this way we could look at a bunch of them. Because I could hold 90 some charts with my computer. But I don't look at it, but I go through flipping every second. Okay, so let's close this one off. Now, okay. This is the first thing we do. So he's looking for NQ, right? All right, again, there is no one wholesale recommendations. The one which I look at, right, individually, first magic line, right, they already on top of each other, right, all the bullish believers are there and is forecasting high. However, if you look at that, they pull back here and from the mean is very distant. So expect the pullback right into the security. That's what I would say, or in this case, futures, right? But health-wise, it's still looking good. The current is strong. The real entry was here. If you were doing, and we told it, the reason why there is a blue line there, because I drew the line, right? And yellow bar is close about that line. We told everybody we're going long from this point. And you could see same time the line was drawn to every single future. So we'll use this future to our advantage to trade everything else. So I don't want to go against the wind. So if the wind is blowing the other way, stock, if it is strong, it's going to still move. But at the same time, I could have a more output if futures are helping us. So in this case, right, there is a pullback, so which is kind of right dragging. This is dragging. So put a tight stop. That's the best I could tell you. But everything is strong. And basically in alert room, we gave them the levels for ES actually this morning, right? We knew, and 45.90 was supposed to, it was a schedule. And how we know? Because we have the horizontal lines, which I'm going to show you, right? So we can also have all the levels pre-calculated. So they are not Fibonacci. These are the magic zone lines we created from scratch and cut the patterns. So everything you're going to see new, because we don't want to use the old one if we don't have to. So this way I don't have to battle with things which I left already years back. And I'm leaving this one for at least 17 years. I live without them, so it's okay. We keep an eye because I got to deal with traders coming to us. They are technical traders. And I was teaching for Reuters. Jeff was with me for many cities together. So I really can see in a few minutes, can I give the answer or not for myself? And while we are here, I want to just teach you, right? So again, look at this here, institution. And here, it was a little weaker, but they did came, all right? This is also institution color. So this one also little was weaker than these three horses. We call them poor horses in our trading room. They run the show. Any other one? I want to get rid of these ones. I could show other one.
Yeah, we have one more, but I think we kind of probably should stop there just because of time. MNQ.
MNQ? Okay.
And that's from Vernon in GoToWeb.
Okay, MNQ. MNQ.O. Let me see. Because I have trouble getting that symbol. Let me try. Nope. Jeff, you may have to help me because I can't find the symbol in your.
That's what he provided, and I'm not seeing it as a symbol either. So, Vernon, I'm afraid I'm not able to find anything that starts with MNQ.
Oh.
Symbol. No, I don't see anything that is MNQ in there. Unless he's talking about MNQFF.pk, which is a pink sheet.
Hold on, starting the Metastock. Anybody else has it? Because it crashed my computer.
Oh, let's see. Well, no. Did it crash out your Metastock?
Yeah, Metastock crash, yeah. But it will
Okay.
show up in a minute.
Yeah. Oh, so actually, he was just giving us a symbol for a different platform.
Yeah, give me a second.
All right. So, I think that's okay. Let's go ahead and go back into kind of just wrap up a little bit.
Okay.
Thank you for coming, Peter. Appreciate it.
Thank you very much for you to arranging this webinar. I appreciate everybody coming in, and they could reach out to Jeff if they have any question.
Yeah, and you can get the alert room. So, but it's by 1 month. Get 2 free. It's only $4.98. You can take advantage of it. 800-882-3040. Nilesh says, hello, everyone. Thank you for the knowledge sharing webinar events like this one. So thanks for coming, Nilesh. I appreciate that. Thank you, Peter. I'm gonna go ahead and kind of let's see. I'm gonna say thanks for coming. We appreciated you being here and all the stuff that you've done for Metastock, and we'll see you at the next one.
I appreciate you, Jeff. Thank you. And thank you very much for everybody also coming in here.
And that is also part of the Trader Summit Action Pack as well. You can get as I said, the ATM, the training course, the Vora Victory, the Magic Trader, both the plugin and his master, or his not his master class, but his elite room service, the OVI Traders Pack, the Oscar Carboni's Master Pack, the Learn Metastock, Unleash Power Metastock, and 2 years of stocks and commodities, all as part of the Metastock Action Pack bundle for $19.90. So, yeah, thank you, Julian. I appreciate that. I appreciate kind of that. It's not in any case. All right. While we're kind of transitioning real quick, I do want to say thank you to Stocks and Commodities for sponsoring the event today. Thank you. They've been basically sponsors of us all along, and they've done a great job. Also want to say thank you to CMT, the CMT Association, for sponsoring today's event. and for being one of our brand new sponsors. It's good to have him on board. We appreciate it, and you can learn more about him at cmtassociation.org. Okay. The next person I want to introduce is a guy that I consider a friend as well. His name is Guy Cohen. He's coming from across the pond from London. And he actually has a very, very unique way of looking at options pricing and consolidating options pricing. Very, very smart individual. Also friendly. Also a dog lover. So let's go ahead and bring him on here. Hey, Guy, how are you doing today?
Hey, Jeff. Good to see you. How are you?
Good. I'm doing
They
very
give you a
well.
little tap. Just everyone just wave. I don't think I can see the. Let's see if I can see everyone waving. And can you hear me tapping here? I'm not a
Well,
tapper.
I can hear you. Yeah, you're coming through.
Okay, that's good. Just if everyone's there, give me a wave as well, just so I can know that you're there on the GoToWebinar platform. There's Leon. Okay, I see you, and you see me. And now I'm gonna do something. I'm gonna share my screen in just a minute.
Yep. I just gave you permission.
Okay, so the next thing is, can you see my screen?
Yes.
Okay, good. You can see me on camera as well, I guess. Not that you want to, but yeah, that's just a little punishment for you.
No, I love the brick background. Like that's a beautiful wall you've got back there.
Someone said that. Well, it is actually wallpaper. I will tell you that now for nothing. I'm not going to pretend, but it's much nicer than just a plain wall. It's something nice about bricks, isn't there? Even if it is wallpaper. But it is my studio. It's my laboratory, kind of. That's what you see. There's my lab right back there. Okay, so I know that you got time, and I think we are a little bit late starting. So I'm gonna start right away and try and get you caught up.
I'm gonna get out of the way. If it takes you a few extra minutes, don't worry about it.
Thanks, Jeff. Appreciate it. Hey, hi everyone. Good to see you guys at Metastock. I always like the Metastock crew because they're also very friendly, but I also like the Metastock audience as well because you guys are cerebral types. You think about things, and I'm here also to help you think about things a little bit in my way, which is has. Let me put it this way: it's the magic happens behind the scenes, but what we endeavor to do is make it easy for us to make decisions as traders. So I do heavy quant work in the back with my team to an institutional grade, but the net result for you guys is a very simple and easy system, but based in pure logic and based in science, if you like. So this particular presentation is about the big money strategy, but for small account traders, and that will become obvious as we go along. I am going to speak a little quickly so that we can make sure that we don't overstay our welcome here as well. Quick disclaimer: obviously, stocks and options trading can present potential rewards, but potential risk as well. Don't trade with money you can't afford to lose. That's simple. Past performance not necessarily indicative of future results, not to be construed as specific advice recommendations if I make any today. So you know the form, you've been there before. Now, I want you to get your pens out. Please write something down. We're not going to have to write too quickly, but this is really, really important. This first slide is super important because it'll help you frame the market, what you should do, what you should be looking at. I call it the 3 master keys. We have 3 master keys of trading in my Wise Traders ecosystem, if you like. The first is market timing. If you think about it, the market right now, the S&P, looks a little bit overextended in the short term, does it not? Give me a wave if that makes sense. And therefore, putting on new long positions today might be a little extra risky at this point in time. We don't like to buy into overstretched markets. So market timing isn't so much always about trying to get it right. It's just also about not getting it obviously wrong. Give me a wave if that makes sense. So it's I can see you. It's so good if I can see the waves coming in. If I can't, I'll just carry on anyway. But it is very useful if I can. So market timing is a very important part. The second part of our system, our master key system, is stock selection. And that's what we're going to be talking about tonight. We're going to talk about stock selection. But the third part is also critically important. That is putting a trade plan together. And my trade plan is all about giving you control, putting you in control with the way you enter a stock, the way you protect yourself, the way you defend profits. So many traders let profits go by, they surrender their profits. Then if there's a windfall to be had, how to play for that windfall without the benefit of hindsight. And then the entire trading system that you trade must be enshrined in empirical evidence. If it isn't, then you are de facto gambling or relying too much on skill rather than something that is empirically has substance behind it. So what we're going to focus on tonight is the stock selection piece of the puzzle, and I enshrine that with what I call big money footprints, because ultimately what we're going to be doing today is we're going to be learning how to follow signs that big money is getting involved in a particular stock and may well continue to be involved, therefore forcing prices up or down. So we talk about small accounts, and really this is all about, your perception of whether your account is small. Some people think they got a small account and there's 100,000. Some people think they got a small account and it's 3,000. So it's a perception thing. But these guys thought they had small accounts. One of them made 4,500 in an hour. The other one made 640,000 or 76,000 in 2/3 of a year. These ladies 3x'd their small accounts. Now these were quite small accounts, only about $3,000 they started with each. And Pat turned hers almost tenfold in 9 months. In 9 months to $33,000. Chloe 15x'd hers in 2.5 years, and Joyce did the same and tripled her account as well in about, again, 7 months. So what I'm showing you today has the power to do this kind of thing, and we see example after example of it over and over again. So what we're going to cover is why do we want to trade stocks when there's so many other asset classes out there? What are the secrets to growing a small account? I'll whiz through that. Then the mechanics of why prices move. This is critical. If you don't understand the mechanics of why a price is moving, then you will again be shooting in the dark. Then we will be ready to go through the big money footprints, the footprints that the big institutions or the big players leave behind that are very difficult to find, but we can find them, and I'll show you exactly how we find them. Then I'll do a case study, how it's possible, how these other ladies have 3x their accounts in such a short space of time, and then a quick demo of how you'd find the best setups in just a few minutes. A lot to go through. Let's start with why stocks. Very quickly, if we look at the other asset classes, you've got real estate, slightly illiquid, and you can get tied in with debt to a illiquid asset class. It's obviously got a room for a balanced portfolio, but you don't want all your eggs in that one basket. Now, when it comes to bonds and commodities, quite specialized, hence the cap and mortar board, specialized with bonds and commodities. You really got to be, make a career out of that. With crypto and Forex, yes, we all know the stories, but I've got the dice here, and that's because it is a bit of a gambler's thing. With crypto, the only way of being sure to win at crypto is to get your timing right, and that really is a gamble. You got in early or you didn't. And with Forex, there is no empirical advantage bestowed on retail home-based traders at all. There is just no inside kind of information to be had with Forex. So systems that work one day with Forex are bound to not work very shortly after they then get adopted en masse. And then you've got the alternative type of investments like wine, fine wines, classic cars, art, all that kind of thing. But again, specialism is needed for that. So what's that leave? That leaves stocks and options. So stocks. Why do I love stocks? Well, because they're accessible by anyone and they can be super exciting. Overstock did a 10x last year in only 120 days. So that's 4 months. And that did it. That's better than crypto. That's more repeatable. That's more doable. That's more accessible. And it's safer as well. So stocks can be a tremendous avenue to increase your wealth very quickly if you know what to do. $1,000 turning into 10,000 in just 3 months. So with stocks, we can also speed up the process for a repeatable strategy. Repeatable is the big word that you've got to get in your minds and write down. So it's easy to start. You can start as small as you like. It's simple to learn. There's minimal cost to set up. It's flexible. Obviously, anywhere where you can get a connection to the internet, and you can choose how much you do, and you'll get very quick feedback. You'll know very quickly whether you're onto something or not, and, or at least if you're not going the wrong way, that is. And then it's scalable. You can grow a small account really quickly. We've seen it over and over again. So our way of approaching this is simple, it's logical, and it's different, and it's repeatable. I say that word over and over again, repeatable. So if it's so easy, then why aren't all traders millionaires? Well, because there's so many things to choose between out there in the markets. There's overwhelm in terms of how much you've got to learn. Where do you start? Who do you start with? If you've ever had that situation, maybe put up your hand quietly or loudly. And then there's the time. When you're overwhelmed, you've got to again spend all that time learning different methods, staring at screens. We don't do that. We don't do screen sharing with us. I'll show you why later. But again, if that's you, this might resonate with you. And then more time endlessly chasing the next best promise and the holy grail, and then realizing that either it just didn't work or it just wasn't suitable for you. So endless issues there. And then who do you trust? Who's the guy or the girl out there that you really can trust? What they say makes sense, it has a logical basis, and there's actually something of substance there as well. Now, a professional, they demand proof. So here's one of our proofs. We run money for professional traders. We actually help them run money for their own clients. And this is one of our portfolios that we launched in February 2020. It's got about 22.5 million in there right now. It's the start of a hedge fund situation for us. And we're up, actually it's 83% as of today, but let's just call it, this is 2 days ago, 81.37% against its benchmark, which is the S&P, which is 37.26%. So if you'd invested in this, you'd be very happy in that managed accounts. Now, why most private traders just never get past these challenges, and then they end up feeling terribly deflated because they try even some more, some for years and years, and they keep trying and they keep getting let down. So stocks can be the answer, and that's what we specialize in, stocks, and then stock options after we've mastered stocks. So let's talk about the secrets of growing a small account. I'll do a quick version of this, but let me please implore you to keep it simple. Don't overcomplicate things. Trading is all about people. It's about the interaction between buyers and sellers, and nothing more, nothing less. And what you've got to understand is the weight of who's winning that tug of war. If you're doing something like this, I hate to say it, it is going to lose you money. It's going to send you around in circles. If you overcomplicate things, you will get analysis paralysis. You'll be confused. You'll be overwhelmed. And ultimately, you'll either lose interest or you'll just lose money. Please don't overcomplicate it. It's all about demand and supply at the end of the day. A chart this simple and shows you the battle being won between buyers or sellers at a point in time with clarity. That's how you are going to make money. That's reflecting what people are doing, and therefore that simple chart that reflects what people are doing is what will ultimately help you money. You'll have clarity of whether a chart is a goer or whether it's not a goer, and then you can move on if it's not, and if it is, you can have a clear plan. Hopefully that makes sense. Again, give me a wave if this makes just logical sense to you. Now, when we talk about the secrets of growing a small account, there are 3 principles, and I won't go into them in detail, but there's safety, first of all. Let's talk about safety. Well, don't bet the farm. Don't put too much on. That's pretty safe. Also, go with neat and tidy patterns. Don't go with crazy volatile stuff that you don't understand, you can't make sense of, you can't make a plan around, where you can know what you win and know what you lose in advance. Think it through. If it's neat and tidy, then you've got a technical setup that you can potentially at least control your risk with. So controlling risk is key to safety. Now let's talk about growth. Well, what about if you have a strategy that has proven to actually provide growth for a small account or even any kind of account? But again, it has to be based in logic and has to be based in empirical substance. And then the mindset. Do you really want to have 50 trades on at one time? No. You want to have only a handful, enough to cope with. Don't overwhelm yourself. Less is more. Have a watch list. Don't have too big a watch list of thousands of stocks. Cut it down, or have mechanisms with which to reduce large amounts of stocks into a small, manageable number of stocks. Focus and specialize in a technique or in a setup. Makes sense, doesn't it? Again, keep waving your hands. This is just simple stuff. It makes sense. And by the way, we all know that when people specialize, they make more money, whether it's in sports, whether it's in professions or medicine or anything. When you specialize, you end up making more. So do that. And this is what Thomas did. He specialized, and then he got 24 out of 25 winners. And he was kind of a problem child for us in our world. He was kind of obstinate and didn't want to do it this way. And but then he got it licked. He got it nailed. Now, hang in there to the end, and I'll show you how to get this little report that I wrote called Growth Secrets for Small Trading Accounts. It is very, very important that you know how to do this in a way that's nice and simple, and you can have clarity with what you're doing. So we go on to why prices move now. This is super important. Once we know this, then we can get on to the big thing, which is the big money footprints, following big money in the market. Let's talk about why prices move. Super important. Imagine a piece of real estate. Imagine this beautiful home. This is a beautiful home, by the way, and this is your dream home. Certainly, I think it's rather worthy, I have to say. Now, there are 3 scenarios I'm going to give you, and each of them will teach you something about trading, because again, it's just about the flow of money at the end of the day. So let's go through each scenario. Sorry about the coughing. Scenario 1 is that this home is on the market for $950,000. Bit of a bargain, I would say. Now, you think it's a bargain or think it's a good value, and you decide to offer $950,000. Now, so does Bob, some other guy. Bob offers $950,000, and then Sue offers $950,000. Jim offers $950,000. So everyone is offering $950,000 for this beautiful home. And the question is the price moving? It's not. Loads of offers are going in, but the price isn't moving because everyone's offering the same thing. So there's a lesson to be learned there, and that is the big money being thrown at this property wasn't enough to move the price, didn't move the needle. Everyone's offering the same. So now we go on to scenario 2, and now there's a bit of new information out there. So Google, Amazon, whoever you want it to be, have just decided to build an office park 5 miles, headquarters 5 miles down the road from this property. So what's going to happen? Well, Bob gets the information, as does everyone else. Everyone's got the same information here, but it's new, and thinks, well, hang on, there's going to be new people living here. They're going to want homes. They're going to want facilities. They're going to want lots of nice things like restaurants and cinemas and playing and leisure facilities. This area is going up, and so he bids $960. Sue bids $970 with the same information. You are more bullish. You bid $990. You think this is going to be it. This is going to be the thing that really happens. Then Jim bids $1 million. You now offer $1.1 billion. Now, what's going on here is called a bidding war. So big money alone isn't enough to move the needle of the price. Big money needs to come with big aggression as well, i.e. people bidding over each other on the way up or offering under each other on the way down. That's how prices move. Again, give me a wave. This is simple mechanics, isn't it? Give me a wave if that makes sense to you, because it's important for your trading. Because now we have scenario 3. Now, scenario 3 is different type of information to scenario 2. Scenario 2, everyone had the same information, but scenario 3 is different. Bob has gone around all the neighborhood, and he's found that behind this lovely home is a parcel of land that's owned by an old couple, and they would privately like to sell it. They would be prepared to sell it to Bob, and now no one else in the world knows about this except for Bob. It's only available to him if he chooses to have it. Now, he realizes that putting these pieces of land together is going to make the combined worth more than the separate parts. So he's now willing to pay more than anyone else, $1.2 million. And the reason is because he can build more properties on it. He can make this one bigger. He can extend it. He can do anything he likes with it, but it's going to be worth a lot more for him to have them both together. And with that private information, that scarce information, Bob now has an advantage over you, and Bob can get your dream home and take it away from you. So don't let Bob do that. Realize that information is, of course, valuable, but scarce information is what changes lives. So again, give me a wave if you can, and let's move on. What does scarce information mean in the real world? Well, a diamond dealer has scarce information because they're educated in how to value diamonds and how to add value to diamonds. Typical diamond retail markup is about 100 to 200%. That's 2 to 3 times. That's worth millions to a diamond dealer. You don't see many poor diamond dealers out there, do you? They know specific information that we don't about the cut, the clarity, color, carat, source, all those things. But what about something else? Coca-Cola's secret recipe held in that vault in Atlanta. That's worth billions. A secret formula, scarce information. Same with KFC. Secret recipe, scarce information, worth billions. Scarce information means repeatable profits. It means it's life-changing stuff. And that's your aim here, is to be the diamond dealer of the stock market, to be dealing with scarce information. Give me a wave if you can, because the point of scarce information is that not many people have got it. So that's why prices move. Now we're ready to talk about big money footprints, following big money. So what are they? Well, they are telltale signs where you can see big aggressive money. We already know that that moves prices, but where you can see it present already in a stock, but also crucially lining up for more, because it's the fact that it could line up for more that could move the price. And again, that could be up or down. So 3 of these are readily available for you to exploit now. After this session, you can go and do this, okay? So if you can identify what those big money footprints are, you will have a lifelong skill. You have a skill which will simplify trading for you and will be able to help you make money consistently and intelligently as well. Now, very quickly about me, I'm a professional trader, I'm a bit of a quant as well. I've made over 7 figures, thousands of % in personal gains, including runs of turning 14,500 into over $187,000 in just 6 months and others. I'm also the founder of Wise Traders, which helps private investors just like you as well. Now, I might be known for some of my books I've written, bestsellers by Wiley and Financial Times. I've been on the financial news channels, all those things as well. I've also had blue chip clients like the New York Stock Exchange, for whom I actually provided an options trading platform, and also the International Securities Exchange, for whom I analyzed their options data. Now, all these things give me the ability to have an edge working with these people. They were my clients. I didn't work as an employee there. And remember, it's all about people. Okay, don't overcomplicate things. And that's why with my professional systems, we are over 81% up in 20 months against the benchmark, which is only around 37% up. So $10,000 invested, that was in 20 months. But if you go back to the whole history of our testing, if you went back to 2005, put $10,000 in there, that's now worth $473,400 against $37,000 that you would have made on the S&P, even during some record-breaking times it's had. And so that's what we're doing. We're beating the S&P currently by more than double, or by notional 44.11%. And over the years, we've outperformed the S&P by over 11 times. And that's why I get paid big fees by professional money managers. It's why, you know, millions of dollars are traded in the markets every single day using my specific systems. And actually, here's where we are today, up 82.68% since February 2020, right before COVID. And then that's against the S&P, which is just under 38%. So that's what we measure ourselves against in that portfolio. So we have something very special. And with Wise Traders, I serve an elite community of private investors just like you, some of whom are also trading with Metastock as well, who are our good friends. And these people include the likes of Chloe, who 15x'd actually in 30 months, not 40, not 14, 15x. And Roger has made, you know, almost $700,000 since I last spoke. Well, when I last spoke to him, which was just a few months ago. And again, we have transformed lives. We transformed Roger's retirement life, and with Chloe, both of them almost gave up. So again, we can do amazing things if you'll go with this. Now, let's go back to the start. For me, I am a nerdy academic type who learned this stuff on my finance MBA in 1996-97. I've developed it a lot since there. But now that MBA would cost around $57,000 just for 1 year. By the way, that's a lot. And I didn't even get the secret sauce from here. I had a kernel of an idea, and this was the idea. These professors, I won't go into them, but both professors said in 2 different lectures, they said this: if you want to make big money in the markets, you must follow the big money. That kind of made sense to me. And what's the big money? Well, there's stock investors like pension funds and insurance companies, those kind of companies. And then there's the kind of other people, the hedge funds and people and the big individual traders trading options, the options traders, the people who are willing to risk more in order to make more. Now, why would that make sense? Well, because they have got the research dollars and they're acting on that research. Now, when I thought about, you know, following options traders, I thought, well, that's a pretty good idea. That makes complete sense. They're leveraging up. Follow the ones who've got the leverage, right? They're taking the biggest risk. and they're doing it for a reason, are they not? But then I realized very quickly, back in 1998 sort of time, that it would take years of research, billions of rows of market data. The amount of options data is enormous. It's even more now than it was then. I'd need people like quantitative analysts, these eggheads, really, really smart mathematicians. I'd need specialist programmers, industrial-sized servers, expertise way beyond what I could do myself, and it would cost millions of dollars. I realized that. But what I also realized is that there are 3 other big money footprints from which you can get serious outperformance consistently, and that's what we're going to go through. Now, what are the big money footprints, as I call them? Well, elite investors, they trade with billions of dollars every day, literally billions of dollars every day in the market. And some of their activity leaves a trail, but that trail, here's the catch, is invisible to the untrained eye and without some sophistication of programming. But if you can latch on to that trail, you will be able to literally bank consistent profits. You'll be able to remove guesswork, establish absolute clarity, eliminate overwhelm, and overall, not only make money, but save enormous amounts of time. And I know you guys, I know Metastock people, you love spending time at your screens, and that's great. With my method, you don't have to, so you can do other things with it as well. And that's what I'm going to show you. So big money footprints. There are 3 of them I'm going to go through right now. And again, remember, big aggressive money is what moves prices. So the first big money footprint is super important because that is the absolute epitome of showing you big money, which is, in course, big money itself, which means big volume. I'm going to show you that in a minute, or accelerating volume. The second big money footprint is super important because this is what drives the price change. What are we talking about? We're talking about aggression. Of course, we saw that when there was a bidding war with that property, didn't we? And the third big money footprint out of these 3 is super important. We haven't covered it yet, but it's an area, a price level where lots of eyeballs are watching. And if eyeballs are watching, then there is the possibility of increased demand moving forward. So we're talking about what I call key levels, and they can be very, very simple. So I'm going to go on to that right now. The first thing, let's talk about big money in terms of a big money footprint. In its simplest form, it's a big volume spike like a green thing or a red thing. Green on the way up, red on the way down. In its simplest form, there are other more involved formats, but we can see it with your naked eye. You can see when big money is piling into a stock. So with GE here, can you see an area here where my footprint is? Can you see the footprint and the big volume spike here? Well, this happened at a time last October, literally about this time last year, and all of my crew were onto this. They see a big money footprint. Okay, they saw it, and there were other things going on as well that made this quite irresistible. In fact, there was even more happening before that. So there's a big money footprint, and the result is 83% in 5 months. That's the move, the consequential move that happened after that. The second big money footprint, as we talked about, was aggression. So what we're looking for, look carefully, is a big move. Now, on the bullish side, we want a big move up because we want to, in the recent past, we want to see that the stock is capable of moving. We don't want to hold on to a stock that doesn't move. We want a stock that moves, and preferably in our favor. And then ideally, after it's made its big move and before we're getting involved, it goes quiet for a little bit. So big move up and then a pause. Kind of bull flag kind of territory, what that is. So with ATA here, we saw that, a big move up and then a pause. Okay, a big move up and then a pause. So the big money footprint is definitely there. It also happens to be there with some big volume there, by the way. So this led to a move of 124% in just 4 days. That's how violent certain moves can be. The third big money footprint is the one of key levels. What do we mean by that? Well, in its simplest format, the 50 and the 200-day moving averages, you can also add the 20 for very, very rampant bullish markets as well. But what we're looking for is a cross and a hold above on the way up or below on the way down. It's as simple as that. We're looking for it to cross and hold. What that means is that more eyeballs will be looking. It's like Paul Tudor Jones said, look at that 200-day moving average, and then you'll see that he wouldn't even consider stocks below the 200-day. So that's a key level that people are looking at. It's setting off alarms on trading desk and alerts. So here's a firm. This happened not too long ago. It crossed and held the 50, and then it just popped up, dipped down, and then gapped up again. Now this was a 71% move in 12 days, only a few weeks ago after crossing. In this case, actually, it was the 50-day moving average, with earnings being one of the big catalysts. So let's now go put these three big money footprints together, and let's just see if they were there. So with GE, we had the big volume. We then had the cross and hold of a key level. And in the recent past, by the way, it doesn't have to be right now, it can be in the recent past, last 30 days or so. And we also had the cross, we always had the big move. Sorry, number 2 was the big move, the aggression. So it went, from, 50 to, we're talking about from 50 to actually, before we were getting involved, to about 60 in a very short space of time. That's a big move. And then we have the cross and hold of the key level as well. That's setting us up for something pretty interesting. And then when it finally broke out of that holding pattern, then that's where the 83% in 5 months. And this is GE, boring old GE, 83% just with the stock in 5 months. You can pretty much multiply that by 4 for even deep in the money options on that one. Now with ATA, this happened even more violently and even more quickly, 124% in 4 days. But are the big money footprints here? Well, there's some big volume compared to what it had been before. Look at those big green spikes. It got even bigger later on, but even at this time, they were very big. Then we had a big move from like about 3 to almost 9. That's a huge move. That's aggression for you, number 2. And then the third footprint is the cross and hold then of that key level, and that results in a big move, 124% in just 4 days. And this is George, who actually just wrote in to LinkedIn just the other day. Literally, he calls me Dr. Cohen, which is very nice. I'm not a doctor though, so please, that's not my claim. I am not. But he calls it my magic system. I made 88% profit in just under a year. Pretty cool when you have people writing into social media saying things like that. It's very nice. Now this is beyond meat as well. Again, let's have a look at this, whether the key levels, whether the 3 big money footprints are there. Well, we had big volume. You can see it with number 1, this green line towering above the others before it. That's the signal. Then you had the big move from 120 to 140 something in only a couple of days. That's a big move. And then you have the cross and hold of that 200 key level. And there were other things going on here as well, which was really interesting. But then you had this big breakout and then big move, 57% in 2 days. So again, those big money footprints were in evidence. And can it go the other way? Yes, it can. It can go with bearish stocks as well. A cross and hold here of the 20-day moving average with TAL, and you had the big move down. That was good. You had some big money footprints. This is big volume literally in about 3 weeks beforehand, a big sell-off here. That paves the way for something more dire down the road, literally within a specific period of time. And then we have the cross and the hold downwards of that key level, the 20 key level in this particular point. And that then results in a 64% move down in just literally 32 traded days. And this is daily bars, by the way, daily bars. We're not watching our screens. This is Bill. Again, do you see the 3 big money footprints? Just wave if you do. The big volume, there's a big move, then there's the cross and hold, and then up she goes, 87% in just 3 months. Do you see the big money footprints here with Bitcoin? Now, you're not going to see it here because it's the line. These have been made so small because of what happened. The scaling's kind of, got it kind of skewy. But even here, you actually see that would count in any case. So we could move that big money footprint across a little bit. But do you get the big move? You do. Do you get the big volume? You do. Do you get the cross and hold this time at the 50-day key level? You do. And you get a little consolidation, and then you get a move up 53% in 3 days. Pretty cool. So we are going to filter for volume rush, for a price jump, and for key levels. 3 big money footprints, evidence that there has been big money involved recently, and potentially there is more to come. Now, there is a 4th big money footprint, and I want you to guess what it might be. 5, 4, 3, 2, 1. You guessed it. Scarce information. I mentioned it for a reason. If you can get hold of some scarce information without it being illegal, then you have a real shot here. So scarce information can be life-changing. But this is why people write to me on WhatsApp and go, thanks for DIG. Gave them DIG, went 25% profit in just 7 days with exactly the same kind of setup every single time. Imagine being able to specialize in one setup. That's your deal. That's what you do. So you need all the 4 big money footprints, and I'll show you the scarce information in a minute, but you also need a robust trading plan. This is the trade plan I mentioned earlier, one of our master keys. This is principally to control risk, to ensure you're consistent, to make sure you don't surrender profits, and make sure you can ride trends and follow a proven system. It's a proven 4-step formula, which I teach on my Flag Trader program. Now, I'll tell you a little bit about that, and then we'll move on to that 4th big money footprint. So this is where you can literally filter stocks, all of them, all the stocks, into a handful in just a click. It has all the tools, the training, and the support to start generating that consistent technique and that profitable income. And then literally it can take only a matter of days. It depends on what pace you go at, but it can literally take days. Or if you want to go a leisurely pace, you can go weeks, but you can then be seriously confident and consistent with this and still have time to do all the things that you want to do. Now, here's how it feels. You can literally log into the private areas, even on a mobile device with your cup of coffee in the morning. You can do what's called fast filtering in just a couple of clicks, literally pre-loaded filters, either mine or yours. You can choose which ones, and they will get you the stocks that are doing specific things according to our big money footprint templates, but with a couple of extra little flavors just for a bit of extra fun. And then you can pick the best setups because you'll be trained to know which ones they are. And this process takes literally minutes with no confusion. This is why David says he's blown away by the constant, continuous updates, developments, and ongoing ways, making the whole system more intuitive and easier to use, etc. That's what we are all about. We want to make trading a pleasure. And again, here's how it feels. Here was a very simple big money footprint set up with CRISPR only a few months ago. It was so easy. This is literally, meat and potatoes for us. 30% profit in just 7 days. And here's what Joel says. Joel says, it's not, he said, I received a gift pack. This is for an event he came to with us. Really appreciate it. But I tell you, the greatest gift is your software. Saves so much time combined with your trading plan. Yeah, one of those master keys. I have finally started making consistent profits. This is real music to my ears. And again, if you look at what Pat did, turning $3,800 to $33,000 from April to January in 9 months, all with the same kind of trade each time, and starting with a small account as well, whether it was Apple, Advanced Micro, Amgen, Bristol Myers, they're all the same kind of setup. So here's what it looks like. We have the automated software to find those big money setups. It has a 1997 value. We have our done for you watch list. They're already pre-done. You can make up your own, and I know that Metastock folks love to do their own stuff. I love it, and that's why I enable you to do it. But you can also hitch a ride on the ones that I've prepared for you as well. So literally one click and you can find stocks immediately that are doing a specific thing to do with big money footprints. But I also train you, but I train you in bite-sized videos, easy to get through, and it will only take you, literally it can take you as little as 1 day to get through it. Again, 1997 value there. Master key with our trade plan, our unique, special, simple 4-step trade plan designed to put you in control, to make sure you don't surrender profits, and to make sure that you can escalate your account if those stocks go on a trend, but also to bag quick profits if they don't. Then we have live Q&A sessions and also priority support. I've kind of put that together, and this is worth watching here. Thanks to your team for your hard work. Thanks for your diligence and persistence. I had difficulty yesterday, but it was straightened out within minutes of me reporting it to support. Exemplary follow-up. We really do our best to support you and to make sure that you are looked after and can do it. Now, the total value of that is just over $8,100. Normal price is $2,997. You can actually go onto the Wise Trader site, find this program, and you will find it at $2,997. But tonight, just for Metastock, just for a very limited number of people, it is at $997, and it's grandfathered. If you're in at $997, that's all it will ever be, at $997 per annum. So it is. I can put a little PA there as well. It is per annum. Just in case the questions come in, but that's all it would be each year. Now we're going to talk about scarce information. Now let's go back to it. We talked about the diamond deal. We talked about Coca-Cola's recipe and formula, and also the KFC secret formula. We know information is valuable, but scarce information, that's life-changing. Let's talk about that. This is why do I get paid the big sums from professional money managers? Because of scarce information. Why do we consistently outperform, as I showed you earlier? Because of scarce information. Okay, this is why we beat the markets and consistently as well. What were those professors talking about back in 1996, 97 about following the big money and following those options traders in specifically? Well, they were talking about scarce information, and it has. Remember, I said it was going to take years to do and millions of dollars and lots of data and machines and all this kind of thing, people. It did. It's exactly what it took. It took years of research, billions of rows of market data, quantitative analysts, programmers, industrial-sized servers, expertise, specific expertise, and yes, millions of dollars cumulatively over the years. It's exactly what it's taken. But here's the result. The result is scarce information that only we have in the form of what we call the OVI. I'll tell you that in a minute. But this scarce information has literally transformed Roger's retirement life, $685,000 so far in profits after years of frustration. And this technology, this scarce information, is sort of proven in its own patent, if you like. This is a patent that I won literally a year ago for this technology. This is our scarce information. It's called the OVI, the Options Volatility Indicator. And it's really simple to use because all the complexities in the back end. So here's how it works. Here's overstock going down. Here's overstock going up. The OVI is a line that goes up and down from a minimum of -1 to a maximum of +1. When it's negative, it's red, and should, we look for it to correlate or look for it to match stocks going down. And when it's positive and bullish, it's blue in positive territory. And again, we look to match it with stocks that are also going up so we can find a really straightforward and safe trading plan. So what the OVI is doing is it's revealing hidden money that no one else can see, because look, no one else can see this. It's patented. It only belongs in our ecosystem. And it's been proven to improve performance by at least 71%. In fact, sometimes even more. In fact, with Chloe, it turned her from a loser, from only winning 40% of the time to winning over 76% of the time. That's almost doubling her rate. And with Kyle here, from 30% to 80% win rate, and that now he was able to make his trading income exceed his social security income. So slightly different perspectives there. But for these guys, it enhanced their performance by way more than 71%. And so we're not talking about the 3 big money footprints, are we? We're talking about the 4 big money footprints. And look at GE. We talked about the big volume. We talked about the big move. We talked about the cross and hold at the key level. But guess what? This was right in front of your eyes the whole time. The thick blue OVI as well. That's the juice behind the 83% in 5 months. The same with Affirm. Look, that nice blue OVI showing you the insiders, the options traders are getting busy. The same thing with Beyond Meat. Look at the change. It went from red to blue before the big move, in advance. With Roku, it was a red OVI, and Roku halved in 15 days. And again, it was already red and already had the other big money footprints there as well. Earnings had literally been the catalyst to that. Where you see these red bells, that's earnings, and they're often the catalyst to a big move. Here's Amazon. Again, the big money footprints are there in evidence, but guess what? OVI is there before the big move starts up. The same with CRISPR. Nice trade there, 30% in 7 days, but guess what? The OVI was there again, look, before it broke out. So no one else can see this. It's called the OVI, Kathy. It's called the OVI. This is Kirkland's. I love this one. We found it at 150 in June last year. Loved it. I thought, you know what, guys, something's going on here. Look at this. Something weird is going on. All the big money footprints are there. And the 150, by the way, this fella said, I love this. Got an immediate first profit target on this one. That was on Twitter. And this is what happened in just 2 months. It went from 150 and it broke out all the way to $12, $13, 643% in 2 months. That was just the beginning, because within 8 months, it was now at $25. So that's a pretty healthy move, isn't it? Now, I'm not saying you're in for the whole lot, but that's just the power of what we have here. Now, look, this is Leg Mason, and this, not many people are going to notice that, but we could see something going on here. No one else can see this. That's what you got to understand. No one else is seeing this. No one else can see it. It's only us, and our members. And we had the big money footprints there, and this is what happened next. It got taken over, 34% in 3 weeks. Someone knew something there before that. Someone knew something, and that was the point of that particular thing. So we've talked about why stocks, the secrets of growing a small account, why prices move, and the big money footprints now. Now we're going to do a case study of how it could be you to emulate those ladies who 3x their small account in such a small amount of time. We're going to talk about Chloe and we're going to talk about Pat, okay, and see what they did. So this was one. This is Adobe. And you can see it's exactly the same setup, cross and hold, big money footprints, and of course, crucially, the OVI. So we're going to see how did these ladies get such extraordinary returns. Well, these are the trades that were made. This is advanced micro, 41%, almost 42% in just a few days. And again, you'll see, there it is. There's the fourth big money footprint. The other ones are there as well. Here's Marriott, same deal. Big money footprint there, cross and hold. It's all there, 20% in just a few weeks. Here's the Russell. There it is, 23.84% in just a few days on the Russell. And then there's Alibaba as well. Same deal, same setup, same exact everything. Here's earnings, actually. Look at the red bell. Earnings, the catalyst for the next move up, 41.5%. So you see, this is the trades that these guys are making, and they're being fussy. They're not even trading very much. They're trading, just over once a week on average. Sometimes they'll do 2 or 3, and sometimes they'll do nothing if the circumstances are not right. And this system enables you to be very fussy about all these things. Let's show you just a quick sort of demo, if you like, through screenshots just to show. But there are 2 options really that you've got ahead of you. The first option here, the first option is to do it manually. And by the way, you can do this, manually if you want. You can choose, stocks from, say, an index, the top 1,000 or the S&P 500, and you can save that watch list or any other criteria that meet the criteria for big, decent sized stocks. You can check the charts manually to see if big money footprints have been forming in the right way. You can even include OVI in your analysis if you have access to it. You'd have to get access to it as well. And then if you learn my trading plan, you can then execute that as well. And that's doable. Now there's another doable, and that is this. You can automate the process. Automation makes life a lot easier, a lot more fun. You can find those big money footprints, literally those stocks, in a couple of clicks, a click even now. You can then learn my trading plan and manage the trade for safety and low risk for optimal balance of that. Exactly what I teach in the Flag Trader program. And then the big word here is repeat, because what this strategy is highly repeatable, and you don't have to be going nuts trading all the time. Because again, remember those ladies having 10x and 15x their account? They're trading just about on average, just over once a week, 1.19 and 1.28 times a week on average for Chloe and Pat. So you can cut that learning curve with highly flexible, intuitive, pleasurable software on any of your devices using my proprietary filter software for small accounts and other types of accounts. You don't have to have a small account to use this, and it's just very, very pleasant indeed. You can access the optimal setups literally in a single click. Each of these tiles, you click on one button here, and it will take you to the trades that fit that, what we call fast filter. And I have a few fast filters. They're just a few different flavors, which moving averages and what the OVI is doing, etc., but all encompassing big money footprints. You click a button and you can do it. And you can even make your own as well, very easily. You can look at mine, you can adjust them, make your own as well. And that's just one click. General Electric appears in your watch list or filter search. All you have to do once it appears is look at the chart. You'll have been educated by me in the video sequences by then, in the bite-sized videos. It only takes about 8 hours of video. That's it. And you will know which are goers and which are not so good. We like neat and tidy. This was neat and tidy at the time. You confirm the chart manually. That's the part we have to do manually. And then you trade as per my very safe, simple trade plan. So with this one, with General Electric, we entered at $8.05. And we exited pretty soon after at $13.02, a profit of 61.74% in just a few months. And that's not with any leverage. That's not without even doing options. Here's what flag traders say. They say, well, actually, this is Henry. And actually, let's just get to the point here. He made over 38,000 profits from 3 trades very quickly. And also he said, I started trading with the OVI, I'm easily meeting my goals. That's pretty good. This is what the quants say, because we deal with professionals. Okay, using institutional standards of financial modeling, the OVI stands up to rigorous scrutiny as a valuable, logical, robust indicator, highly valuable in predicting broad market sentiment and so market timing, that is, and also identifying individual stocks that subsequently perform. That's pretty good stuff. Here's Bernard, when it was actually a few years ago, just to show you that it's been going on for ages. Again, he's making profits from 70% to 550% in gains. This is John, a recent guy. OVI, by far the best program I have ever done so far, and I love the personal relationship with everyone, that personal touch that we bring to it as well. Again, you can do this on a device, anywhere, anytime, on the beach, by the bar, looking out at the sea, you know, in the car waiting for your kids to be picked up from school, or whatever it is that suits you or you can do. And again, the same kind of trade every single time. We wait for the same setup, whether it's Boeing here or Halliburton or Chubb or etc. BXP. They're all the same big money footprints on display, and you can be as fussy as you like with this stuff. So let's just go through it again. Automated software for the big money stocks to find those big money footprints, 1997 value. With those done for you, watch this. Click one button, they're done for you, 1997. Bite-sized training videos to make you an expert in it, step by step, and you can review them at any time, and they're really nice and convenient. You can access whichever video you want. It's not just 8 hours all there. It's just it's curated beautifully, so you can go to the section that you need at any time when you want to review it. Simple 4-step training plan. This on its own is worth way more than 997. This could be the difference for you in your trading plan. The trade plan that we have is unique, and it just makes sense, and it is invaluable. Then we get the live QA sessions and the priority support, $1164 value. In fact, probably more as well, and you see lots of good praise for that as well. Now let's talk about the bonuses. Of course, it includes the OVI filters as part, embedded within the whole thing. So scarce information filters, invaluable because no one else has got them, no one else can have them. So that's that. The second bonus is super important because we get everyone into a one-to-one coaching session. So once you've been with us at a certain amount of time, we'll then have a session with you just to make sure you're getting along okay. That's the 1494 value. Because of this personal touch, as you saw in that testimonial earlier, we have a limit of 25 seats only, and that's just fair, isn't it? The third bonus is, I told you about earnings being a catalyst, that red bell being the catalyst to many moves. Well, we have what's called the ultimate earnings blueprint, the 497 value, because our earnings is a really lucrative time for this particular strategy, particularly after earnings. I'm going to show you exactly how we do that, because you could literally specialize only in that. And then, well, Chloe, it's actually 15x, by the way. So Chloe, if she's 15x, wouldn't you like to follow her? Would you like to see what she does, what her watch list is? Well, she's now part of my team as well. And that watch list, which gets adjusted from time to time, is then part of this. And all you have to do is go to ovi.to/growth. Total value is $12,737. Normal price on the internet right now is $2,997, and real price for you guys tonight, because it's MetaStar, because Jeff's a friend, and because he's very persuasive, it's just $997, and it is grandfathered as well. So in a year's time, when you want to renew, it will only be $997, regardless of what the price is elsewhere. So again, and if you do that, you'll also get this growth secrets for small trading accounts, but again, only for today for action takers right now. It is a guarantee. It's a really simple guarantee. It's a 30-day guarantee. The guarantee is, if you don't like it, if you don't think it's for you, we'll give you a full cash refund. No quibble, no catches. We don't do any of these pathetic fake guarantees that other people give, and I do get angry about them because they are fake. Well, this is a real guarantee, and if you don't like it for any reason, you'll have your money back. So it's a risk-free investment right now. Again, if you tried to get it yourself, right now it would be $2,997, but it is just $997 at ovi.to/growth. I will put it into your chat box for you as well. It's risk-free because there is that money-back guarantee, and you can test it out yourself as well. So www.ovi.to/growth. So that's where you go. Let me just do something else. Get you through another chart here. Okay, Mike in Minneapolis again. Using M-Phase, do you recognize this setup? It's the big money footprints. There it is again for 150% winner on M-Phase. Again, Steve big trader, 53 grand on one trade, 600% return on LinkedIn. Vinny, 7 out of 10 win ratio, big trades on Apple, making 34,000. Then you got Doug, 8 out of 10 win ratio, not unusual for us. 5x on Boeing, $10,500 profit. 8 out of 10 win ratio for Kyle, 60% on Home Depot. Home Depot's just done another nice thing here. Here's Kedzie, I love her, $200,000 up. I've made 21,000 since January the 1st. This was written on the 7th of January. So in 6 days, made 21,000. And fairly casually here, Blase, another $4,500 to $5,000 in the next hour or so, as you do. This is our community. We're big on the community. It is ovi.to/growth. We love the community with Metastock as well, and we like people who do things the right way. I'll finish off with this little thing here. Instead of some motivational quote, from some spiritual guide, I'll give you something a little bit more useful, and that is this. In our world, it's TWYS, and TWYS stands for this. T is for trade. W is for what. Y is for you, and that's the most important thing here. And S is for C. What do I mean by that? Well, I mean this. What we see is big money by way of volume. What we see is aggressive money by way of price action. What we see is key levels being broken and held. And what we also see uniquely that no one else can see is scarce information. That's what we mean by trade what you see. So that's me, www.ovi.to/growth. I know there's going to be some questions. It is for a swing trade, not intraday so much, Kathy, although we do have facilities, but we do swing traders generally on that one. And they are daily charts. And Jeff, do you want to step in here? I think I did pretty well actually on time.
Yeah, no. You gave me some back. We started a few minutes late.
I know. Well, that's why I'm here to please. I'm here to serve. I'm here to please.
Yeah, well, I've always been pleased. Okay.
I could see that you were under. I mean, you started me very late, so I thought, you know what, I'm going to have to help you out here.
Well, that wasn't necessary, but it is appreciated.
Oh, I want to tell you, by the way, I have an early breakfast tomorrow in London. Going to miss you. This is our date normally, eh?
Maybe 2022.
We haven't had a date for a long time, Jeff.
It has been a while. But I will say that in addition to your OVI being very good, you're also very good at picking places to eat.
Yeah. Yeah, very good. Yeah, I like that too. If anyone's got any questions, please ask. We do have a good Metastock crew. I love Metastock traders because they are really fun at my events. They always ask great questions, and they're always very cerebral and they're serious in a fun way. They're serious, and I love having those people. Don't forget, I work with professionals. I work with institutions. I like working with with really motivated and educated retail traders as well. It makes it all the more fun. I love the challenge, and I love interacting with you guys.
Kathy says she wants to get in touch with you, or in touch with to get some more information. Is there a place that we can tell her to reach out to?
Kathy, just what you can do, if you just pop your email, or Jeff can even pass your email address. There's what we can do as well is do www.ovi.to/consult. And that one will be, now I know we're a bit logged up with stuff at the moment, so you might not get an appointment till next week on that one. So the other one you can do is support, and just say that you're at the Metastock. In fact, I'll tell you what, I'm going to say Paul. I'm going to direct you to one of my people in support, Paul at wisetraders.com, and that's Wise Traders. That's okay. So shall I just make that a bit easier for you? How about that? Paul,
all right, cool.
He's my head of support at Wise. It's very difficult to write on these things, eh? Traders.com. Get in touch with him, Kathy, or anyone else. Say you're at the Metastock thing. want a bit of information, or what do you want to do as your next step, or just go to ovi.to/growth and get started. Again, there is that guarantee. There is no risk for you as well on that one.
Guy?
No, I'm okay. I'm back in.
Okay, your image is still... I'm sorry, Guy. Jeff was temporarily locked out of the room, so that's why I barged in. And now I guess he's back. But Jeff, I still see a frozen picture of you in the middle. That's actually very funny. I apologize, Guy. Please continue.
Right. Well, the frozen image of Jeff looks like he's about to eat something.
I can't say what.
Thanks, Kathy.
All right. Very good. Well, I'm glad I was able to make it back in.
I can't see you, though.
Yeah.
But listen, Jeff, I know that you probably need to. There you go.
Yeah.
There you go. But I know that you know. Hopefully, I've given you a little bit of time back there now, and I want to wish everyone a very happy event with you for the next 2 days. And if there's no more questions, I'll let Jeff get back on track.
All right. Thank you. Thanks, Scott. Great to have you. Always welcome. And have a good night. I know it's probably pretty late in London.
It is, and I got a very early start tomorrow as well. Eek.
All right. Thanks a lot.
Appreciate it. Bye, guys.
Okay. There is a few copies of me in here now. Okay. But I think this should... Let me see if I can... Okay, here I am.
The correct you. There's only one you, Jeff. There's only one you.
Yeah.
In so many
ways.
One
should tell that to go to webinar. Let me go ahead and make me a presenter here. I think this will be the right presentation too. Yeah, okay, good. And one of the things that I like to kind of mention is we actually spent a lot of time with Guy getting all of his stuff integrated. Like, so aside from like his web portal, the only place you can actually pull the OVI indicator, his patented indicator, is into Metastock. And as long as you're part of his OVI club, you'll actually be able to pull that into Metastock and see exactly. We actually also did include that OVI Traders Club as part of the Traders package today. So basically you'll get RMO ATM, you'll get that training course we were talking about, Vince Vora's Victory, the Magic Trader Elite, the consulting service, the OVI Traders, the masterclass with Oscar Carboni on November 20th for 3 hours, learn Metastock, 3 months of that, and Unleash the Power of Metastock, and 2 years of Stocks and Commodities magazine. When we were putting this offer together yesterday, the person that was helping with the slides was like, this is a really, really pretty big offer. The retail value is normally $5,000. Here at the show, it's $1,990. So you can take advantage of that if you go to metastock.com/summit deal. You can give us a call at 800-882-3040 and metastock.com/sales chat if you have any questions that we missed. So hopefully you're enjoying the session. I hope you are. We've gotten a lot of really good feedback. Let me know what you think. Let's kind of move on. I do want to say real quickly, thank you to Stocks and Commodities. Great sponsor. Been sponsoring the event for a number of years. You can get a free issue if you go to metastock.com/tradersummit, fill out a registration form and say, I want a free magazine. They will provide a free issue to you. In addition, our other sponsor is cmtassociation.org. They have a program guide that you can get for free as part of kind of filling out the registration form. CMT is a great organization. They've been doing it for a number of years, and we're really actually pretty proud to be associated with the CMT. So you can find out more about them at cmtassociation.org. So, and then let's go ahead and get to Kurt Christensen. Kurt is a frequent visitor of the show. He's up in, I believe, oh boy, am I going to enter uncharted Seattle, right? Not if I'm right. Okay, Kurt, I can't hear you though. No?
No, actually Spokane, other side, but hey, that's a common issue, Jeffrey. Don't worry about it.
I knew it was Washington. I was this close. Depending on the scale of the map that you use. Kurt, we always love having you in here. You do tradingscience.com. great presenter. We wouldn't invite him otherwise. I know we're running about 10 minutes late. It's okay if you go a little bit long. You're the last presenter. Nobody's going to interrupt you. And so with that being said, I'm going to turn the time over to you. Welcome.
All right, fantastic. Let me make sure I get my screen recording shown.
Yeah. Let me go ahead and make you the presenter. I have to do that part too.
Yep. There you go. That will do it.
Yeah. I usually say I'll get out of the way, but I need to do that part first. Okay, right. We can see your PowerPoint. It's full screen. We can see your picture. You sound good. Everything looks good from this end.
All right, and make sure I can draw on the screen a little bit. Looks like that's showing up. So like Jeffrey said, my name is Kurt Christensen, and welcome to today's presentation. Welcome to my new old office. You know, I've actually had an office outside my house for, I don't know, the last 15 years, but with all the COVID stuff and all the, you know, super high speed internet in my neighborhood and all that kind of stuff, I actually just moved my office back into my house just this last week. So it's a little bit barren here, but pretty cool to be back home. So today we're going to talk about how to trade stocks and predictably fatten your accounts by laser focusing on one simple setup that has one page of trading rules, all in 15 minutes a day. So I'm glad everyone's here. This is a fantastic opportunity. We're the last presenter of the day, like Jeffrey mentioned. So obviously we have time constraints, but you know, not like in a normal situation. And so ask as many questions as you can. We'll have some spots for questions as well if we don't get them in the stream of the presentation. But my goal for this is that by the end of this, you walk away with something that you could use. Walk away with a trading setup, like we're talking about, this one simple setup that you can use. We're going to cover the actual one page of trading rules today. So we're not holding anything back. We're giving you the secret sauce right up front. So of course, the usual legal stuff our attorneys advise we discuss. Financial markets are risky, investing is risky, past performance does not guarantee future performance. And obviously we should always circle that. So we're well aware of that. So that said, we're going to talk today about the one thing that changes everything. And a lot of times in trading, people think that they have 1,000 different problems when actually it all boils down to they're just missing one thing. And that one thing is just one simple setup and one page of trading rules. Of course, there's thousands of profitable ways to trade the markets and everything from stocks, options, futures, you know, whatever you want, Forex, and the list goes on and on. But today we're just going to talk about one baseline setup and one page of trading rules that you can really use to either get your trading back on track or to get your trading heading in the right direction. And, you know, then in the future, if you want to expand and do other things, fantastic. But you always have this baseline that you can rely on. So I'm going to start out with a real life trade example. This is on a stock you may have heard of. I don't know if you've ever heard of this stock, but it's called Tesla. They make these kind of cool cars that you may have seen around. But Tesla obviously is a huge stock. I think it just hit its, didn't it just hit $1,000 today or yesterday, something like that? But we're going to show you this example trade on Tesla that, you know, is a real trade that we took. And then we'll explain exactly what this trade is and how it all works. So you can see here on Tesla, this is a daily chart, and I'm going to draw in a red line here, and I'm going to draw in a red line there. Okay, so quick pop quiz. What did I just draw? Well, I just drew a triangle, right? You notice that the price kept bouncing back and forth until it formed a narrower and narrower range. The volatility contracted. And then on this candle right here, where you see that teal kind of aqua line, that's where we entered. So let's kind of talk about this trade, why we entered there, what our risk reward was, and the makeup of the trade. So on this Tesla trade, following a mechanical set of rules that we're going to teach you today, so you can take exactly the same kinds of trades as many times as you want, we bought it on 11/17 for $439. The day that we put on the trade, our risk was a grand total of $6.19 per share. However, by the time the trade panned out, we made a profit of $200.20 per share. So that's a risk reward of, we risked $6.19. That's the worst that could have possibly happened. And we turned that into $220 in profit, which is we risked $1 to make 32. So I don't know how many of you follow risk reward ratios or are familiar with this concept, but with a risk reward ratio of 1 to 32, how often do you have to be right Or in other words, how often do you have to have a winning trade to just break even? Go ahead and type that in the questions box if you can do that calculation real quick. How often do you have to be right to break even? If you have a risk-reward ratio, risking $1 on this side, and on this side you make 1, 2, 3, 32, right? What do you have to? How often do you have to be right? Well, the answer is you have to be right 3.1% of the time. So raise your hand if you think that you would have a chance with a proper system and knowing a valid setup pattern of being right more than 3.1% of the time, right? If you're right less than 3.1% of the time, what you should do, tell your friends and family, just tell them, hey, whatever I do, you just do the exact opposite. You'll be right 97% of the time, right? 3.1% of the time is a pretty low hurdle. So just to kind of put this in perspective, this is not my account. This is a colleague in the business that trades this exact same strategy. But to kind of put this in perspective, taking these exact same type of trades, in the last year, this was on some open trades he had. At one point, he had $3.8 million in open profit on a set of trades. Other people have taken $100,000 and turned it into $500,000 in less than a year, or that one was about 2 years. This other colleague in the market, he took $100,000 and turned it into 7 figures, which is obviously $1 million in about a year. So we're going to just kind of put that in perspective of what you can accomplish with this just one simple setup and one set of trading rules. So you can do this. This isn't rocket science. Obviously, it's going to require you to learn how it works and kind of the interaction with the charts. But you're meta stock traders. You guys are already way above obviously the average retail trader, and this is something that is right up your alley. So using this system, you will see results, and we're going to talk about the kind of results that you can expect. We're going to teach you, like we mentioned, we're looking for one simple setup with one page of trading rules. It's plain in one page. We're going to teach you, so we've already talked a little bit about that, and we'll reveal exactly what it is, but we're going to teach you how to hold on to your winners and squeeze as much out of them as you can. How many of you have looked at your trading account statement at the end of the year and sorted it by size of winning trades to size of losing trades? How many of you have ever done that? Right, I have. It's pretty informative. Here's what you're going to find for the average trader that's having some issues or suffering some losses. What they're going to have is there's going to have a huge amount of small winning trades, right? And then they're going to have a few massive losing trades, right? Now, if you look at the account of someone who's a profitable trader, what you're going to see is the exact opposite. You're going to see a few, maybe depending on the year, it could be 5 or 10 massively profitable trades. We're talking 100%, 150%, 200%. But then you're going to see a whole slew of tiny paper cuts. They're going to have lots of losing trades, but they're all going to be, $300, $500, $1,000, depending on the size of the account. So we're going to teach you how to do that, and that's hold on to winners and get big winning trades and not have big losing trades. We're also going to teach you how to cut your losses quickly for tiny paper cuts instead of those stomach churning losses. I don't know about any of you, but those stomach churning losses, as in, either it's a loss that you're holding on to far past when you should, you should stop out and you don't, and you're just, praying and hoping that it bounces. That's not trading, that's gambling. So we're going to teach you how to avoid that. We're going to teach you exactly how to know exactly, almost to the penny, when you get into a trade, exactly what the worst that could possibly happen. We're also going to teach you how to have a risk-return ratio of 1 to 10 as a norm and a minimum of 1 to 5. What that means is every time we risk $1, we want a good chance that we can make $5 out of it. We're going to teach you how to trade the long side of the market. We could spend a whole hour on why trading the long side of the market is advantageous, especially for newer traders. But one of the simple reasons is market has a tendency to go up. And when you buy long side of the market, you have defined finite risk. When you short stocks, you technically have unlimited risk. And the market does have a tendency to rise over time. I'm sure you've seen that. If you've seen any chart of the S&P 500 or the Dow Jones over the last 50 years, you would obviously say it has a tendency to go up and to the right. This can also be traded from any brokerage account in the world, preferably one with 0 commissions. And there's becoming more and more of those in the United States. It's actually very common. And that's expanding to other countries, Canada and Australia and the UK as well. And these charts and scans can be run on Thinkorswim, which is my personal platform that I've used for 30 years, or not 30 years, 20 years, something, or TC1000 or Metastock. We have this all available in Metastock or TradeStation. So skeptical, good. Let's get into the goods. First, I have a simple confession. I used to really struggle with this, and that's discretionary or subjective trading. Can somebody type in the chat if you were on the same page as me and used to really struggle with the discretionary or subjective trading? Some of you may ask, well, what do I mean by discretionary or subjective trading? Well, that's any time that I, Kurt Christensen, have to make the trading decision. I have to choose what stock to get into. I have to choose the timing. I have to choose the position sizing. I have to choose how long to hold it. I have to choose when to get out, right? All of that, that's discretionary or subjective trading. The simple solution for that is to use mechanical or rules-based trading or a trading plan. Those are systems that will completely change your life if you've never traded this way before. The reason for that is because if you're feeling challenged, stressed, or even a little bit fearful about trading, that's what you need to do. You need to trade something mechanical and rules-based because it simplifies it. It takes that responsibility or burden off your shoulders and makes it easier to focus on the things that you can control. And the things you can control are following the system to a T and taking the trades as they come up. So just a little quick background on myself. I'm going to go through this really quick, just so you know who I am, where I'm from, all that kind of stuff. I grew up in Preston, Idaho, which is actually only a couple hours from where Jeffrey's at right now in Salt Lake City. But I didn't grow up with a silver spoon, didn't go to private school or anything like that, didn't go to Harvard. I actually went to BYU in Provo, Utah, and met my wonderful wife and have had a wonderful opportunity to have 3 kids. I need to update this picture. Now, this kid right here, he's actually 6'10". So this picture was a while ago, and he's about 6 feet tall. And he's also about 6 feet tall, but he's a freshman in high school. So just to put that in perspective, I figured out this trading stuff, this whole time, the last 20, 25 years, so you don't have to. Now I would have to say life is pretty decent. I'm not one of those Lambo type of guys or Ferrari or things like that or private jet. But I do take every Friday off. I travel a ton, obviously not in 2020, but I've had the opportunity to take my wife and kids all over the world. My kids have been everywhere from Cuba to Mozambique to Namibia to Nicaragua to Costa Rica to Hawaii, of course. But this is my wife and I on one of our last trips. I was trading in the morning time, which was afternoon in Europe. But this is us in Vienna right before getting on a boat to go down to Slovakia. And this is us me anyway. This is me in a famous spot that appears in a lot of movies. It's in Budapest. Fantastic opportunity to trade while I was on the road, but also enjoy life. So, I snowboard 15 days a year and wakeboard and wake surf about another 15. So to me, that is a definition of a life well lived is 15 days a year on the slopes and at least 15 days a year on the water. I spend most of my time in the summer right here. This is actually Spirit Lake, Idaho, where I have a place, right on the water. So that's what I love doing in the summer. But, besides obviously me, I serve, sometimes I give away 20 hours a week of my time, and I've given away over $500,000 of my own money over the last few years. And, I've taken kids on trips into the mountains, for youth groups and the Boy Scouts of America, all over to places like this. But, kind of to make my cash on a daily basis, I run online businesses. And so I've sold over about $20 million so far. And, I trade in the mornings. I swing trade. Spoken at seminars all over the world. This is me at probably one of the last trading seminars we did before COVID. This was a financial marketing summit at the end of 2018. So it's been a while, but that was in London, UK. I was invited to speak on this exact topic that we're talking about today. Not some Johnny come lately. I'm gonna have to change this, but I actually just moved my office back home, but that was my office just down the road. But more importantly, I like to trade from the road. This is me. That was my trading setup for the day. It's just sitting there on that lounge chair. And this is, on the beach in Costa Rica this past year, just during COVID, we had a chance to go to Costa Rica for a couple of weeks and went down there and didn't miss a beat. It was actually easier to trade from Costa Rica because it's actually on Central Time Zone, and I'm on Pacific Time Zone, and not much of a morning guy. So it was actually easier for me to trade on vacation, being on Central Time Zone than at home. So I live in Spokane, Washington, which is not famous for much of anything besides Gonzaga basketball, I guess, and Bing Crosby, and being 5 hours from Seattle. But It's a wonderful place to live, wonderful place for the outdoors and world famous places like Coeur d'Alene Lake and places like that. So let's get back to business. You know a little bit about me now. So now I want to teach you the 3 steps that I promised you to mastering stock trading. You know, step number 1, I want you to scan for and trade what we call, or what I call, the BMWs and Ferraris, which are momentum stocks. So what's a momentum stock? Well, we'll get to that in a minute. I want you to, step 2, I want you to trade long, looking for one very specific, very learnable, easy to identify setup. Then I want to teach you step number 3, which is to keep your risk-reward ratio absurdly high, let your winners run, and cut your losers quickly. So go ahead and take a second to jot this down. This will also be on the notes that I can give you at the end. We're going to give everyone who attends to the end just a link to our support staff, our support email, and they'll be able to send you a copy of this. But that's what we're all about. That's how simple this is. Step number 1, scan for and trade. So momentum stocks. Step 2, trade this one setup. It's a high tight flag. We're going to show you how to find it, how it's identified. Step number 3, we're going to teach you how to trade mechanically and rules based, so you don't get freaked out. So really, it's next to impossible to screw up stock trading if you follow these 3 steps. So step number 1, let's talk about what momentum investing is and how we trade the BMWs and Ferraris, or the momentum stocks that we're talking about. So by definition, momentum investing involves a strategy to capitalize on the continuance of an existing market trend. So that word right there is crucial. It's a continuance of an existing market trend. Momentum investing holds that trends can persist for some time. It's possible to profit by staying in a trend until it reaches its finale, no matter how long that takes. So in momentum investing, we're not looking to get the exact tops, right, and the exact bottoms of a move. We're trying to wait till something has already made a move, and we're going to get that chunk in the middle. That's what we're talking about in momentum investing. So why would we do that? What are the benefits of that? Well, it has some huge benefits. Number 1, it has the potential for high profits over a short period of time. Right? These stocks are already moving. They're looking for any excuse to continue moving higher, right? Step number 2, you're going to leverage the market's volatility to your advantage. When market volatility goes up, these stocks also the volatility are going to go up even more than the general market because they're already moving. We're also going to leverage the emotional decisions of other investors. You know, many of you have seen some of these, what you would call Wall Street bets, or on Reddit type of stocks. By the time they get to Wall Street bets, and you get all these suckers that are piling into some pump and dump type of stock. Well, we already saw that stock weeks ahead of time, and are already usually in and out before the dumb money kind of comes in. So why is this so important? Well, trading the right stock, once the momentum leaders, tilts the odds slightly in your favor right out of the gate. It also speeds up the process, since the trades will either be losers or winners, a lot more quickly, and allows you more compounding periods on the same quantity of money. So which would you rather trade? A stock that goes up 15% in 2 weeks or 15% in 2 months? It's kind of a no-brainer, right? So can you see why many experts and successful traders view scanning and picking the right stocks as critical to their progress? So here's a huge problem with the way that most people trade. Let's assume you decide to trade a slow stock, something like Ford Motor Company. Can anybody think of a stock that moves slower than Ford Motor Company? I'm sure there are. I mean, some commodity or something like that, some aluminum manufacturer or something like, or utility stock or something like that. But Ford Motor Company moves pretty slow. You risk 3 to 4% of your capital invested in a particular trade. Then if things go well and the trade is a winner, you might make 5 or 10%. Ford doesn't move very fast. You could be in a trade for a couple weeks and make 5 or 10%. But if you'd risk that identical amount of risk, if you'd risk that identical 3 to 4% on a momentum leading stock, something like Riot or Tilray or any of the other stocks that are kind of in the news and are momentum stocks and are already up big, if it ends up being a winning trade, you might make 30 to 40% or occasionally 100% home run on that same money. You could lose out on a fortune simply by trading the wrong stocks. So here's more proof around this concept of momentum trading, or getting in on stocks that are already moving in the market. This is from NASDAQ.com. They say, this is proof that momentum strategies work. This is from UCLA Anderson Business Review. Momentum investing, it works, but why? After a quarter century of sprawling study, it's time to narrow the focus and settle on an explanation. So they know that it works, but they still can't tell you why. Wall Street Journal, one of their 5 investment trends that skyrocketed in 2020. One of them, they said, what's growth stocks, which is kind of a synonym for what we're talking about here with momentum stocks. So how do you find them? How do you find these momentum stocks, these Ferraris and BMWs, rather than the Pintos and the Yugos of the stock market? Here's exactly how you do it. First off, you're going to set up these scans and use something like Thinkorswim or TC2000 or Metastock. It has to be a trading platform that has a pretty robust scanning platform, right? There's a lot of platforms that are simply for charting that aren't good at scanning. It needs to be something that's good at scanning. So here's what you do. What you're going to look for is we're looking for momentum stocks and ETFs over the past 1 month, 3 months, and 6 months that meet one of these criteria. Either their price growth has outpaced 90% of their competitors or has increased 20% in a month. Over 3 months, you're looking for something that also has increased price growth is over 90% more than their competitors. That's a relative measure. Again, stock A versus all the other stocks, or the price of stock A has increased at least 40%. For the 6-month scan, almost the same. Price growth of equal to more than or equal to 90% compared to all stocks, or price has increased over 80% in 6 months. So can you see what you're looking for? You're looking for stocks that have made a substantial move in either 1 month, 3 months, or 6 months. That boils it down, right? You're also going to look for stocks that have a high average daily range. Average daily range is simply a proxy measure for volatility. Volatility, of course, is the measure of, on a daily basis, how much the stock is bouncing around, right? A stock that has low volatility only bounces around a little bit like this, right? Stock that has high volatility bounces around like this, right? And we're looking for stocks that move. So we want stocks that have, on a daily basis, move on average 6%. We're also going to look for stocks that at least have enough volume for us to be interested in the stock. So you can do that either if your platform has a function called daily price volume, which is shares traded times the average price. You should set that at 10 million or more. Or if you don't have that feature, just look for at least 1 million shares traded. What that does is from each of these 3 scans, you're going to get some crossover. The ideal would be to have no more than 30 stocks appear in each scan. If you aren't getting enough, well, you can lower your requirements slightly on the previous pages that we talked about. If you're getting too many, you can tighten up your requirements a little bit and get a little bit fewer. Only start trading lower ADR stocks as your account grows. If you have less than $200,000, don't trade anything less than 5% ADR. Why is that? We'll go back to our example with Ford Motor Company. It's all about time. You want to be in stocks that are going to move. You want to be in stocks that you're either going to get stopped out or it's going to be a winner. You want that to happen in a couple days rather than a couple weeks. So if you have less than $200,000 in your account, don't trade anything less than 5% ADR. Does that make sense to everyone? If anyone has any questions, go ahead and type them in the questions box. Let me make sure, yeah, it's got the chat up. I got the questions up so I can see the questions, or if questions come off of YouTube, I guess we can answer those at the end. But if you have any questions for those of us that are here live on GoToWebinar, go ahead and type them in the chat box. Okay, so we covered step number 1. Is everybody kosher on step number 1? What are we looking for in step number 1? Go ahead and type in the chat. What are we looking for in step number 1? How can you sum it up in one or 2 words? Who's got the answer? Momentum stocks, right? That's what we're looking for. Step number 2, I want you to trade long, which is we're buying for the price to go up, right? We're looking for one very specific, very learnable, easy to identify setup. Here's the criteria for the setup that we're looking for. We want to set up our charts like this. We want to have a daily chart and a 1-hour chart. 1-hour chart is just for the entries. Don't have to pay attention to that so much. We're looking mostly at the daily chart. We want to have a 10 SMA, 20 SMA, and a 50 SMA on both charts. Very simple. What we're looking for is a stock showing huge momentum, right? And we'll know that because it appeared on our scans. It has a big, strong linear move, that has a clean, smooth chart surfing the moving averages as it's going up. Then it has a minor, small pullback. Everybody knows what a pullback is, right? Stock's been going up, and all of a sudden it's not, right? Small, minor pullback, and it goes to the 10, the 20, or the 50 SMA and surfs it. The trading range narrows, right? So it gets down, so it's just bouncing around a little bit over a few weeks or days. And we could also say that the volatility contracts. Some people call this the volatility contraction pattern. There's a famous author that calls it that. You put in some narrow range price candles, the price consolidates and kisses one of those SMAs. Okay, that's what you're looking for. If it's a low cap stock, don't settle for any choppiness. You got to be pretty particular. It should be smooth. If it's a large cap stock, okay, it's fine. It's okay to accept a little bit more bouncing around. Here's exactly some examples of what we're looking for. Here's this exact setup on a very, very elegant tech stock that's going to change the world with a cryptocurrency or something. No, just kidding. It's Tupperware. But this setup appears on all kinds of stocks, regardless of the sector. You notice that had a huge, massive move up from its base here. The base was around $1.50. Moved pretty quickly to $14. We got in at $13.86. Then we got out all the way up here. So we entered here. And so we took that part of the move right here. You can see it here on Lumber Liquidators right there. And again, right there. You can see it on Kirkland, which is the company behind Costco, right there. You can see it on Celsius, which is the beverage company, right there. Is everyone following along with this? You can see it on LEDS, right there. You can see it here on Tilray. I have some red lines drawn on there. That's where we entered a few months ago on Tilray. You can see it on DDS, right there. You can see it here on DDD, right there. And again, right there. And it just goes on. Here you can see it on SIG. It's a live trade that we took. And you can see it here on Virgin Galactic right there. And you can see it here on Wish right there. And of course, in Metastock, we can do the same thing. Mr. Gibby was kind enough to set this up for us in Metastock, and so we can show you this exact same setup in Metastock. Here, I know a ton of you use it, obviously. Here's the same setup on APP. Here's the same setup on, that's the hourly of APP. You can see it here on MRXT. MRTX, sorry. You can see it here on Moderna. See it here on Kodak. And it goes on and on. So we've taught you this step. The easy way to sum it up is we're looking for a high tight flag. We're looking for a high tight flag. The strongest of them find support on the 10-day SMA, stronger ones on the 20-day SMA, and the slower ones on the 50-day SMA. We want to buy at the opening range highs of the 1 hour candle when obvious range is broken. So for it to be a valid trade, we want our entry price minus the low of the day to be less than equal to the average true range over a 14-day period. Okay, so to explain, we got two indicators that are nearly the same name. First one is ATR, average true range, includes gaps, but it's expressed in dollar signs. ADR for average daily range doesn't include gaps, and it's expressed in percentage. So when we talked about it must be at least 6%, that's ADR. When we're talking about dollar signs, let's say if the ATR is $1.50, that's ATR. So here's some more proof about these high tight flags that we're talking about. Investors Business Daily says high tight flag can deliver skyscraper size gains. From Yahoo Finance, high tight flag is a rare pattern that can deliver incredible gains. Step number 3, to boil everything down, we're keeping it simple. We're going to teach you how to keep your risk reward ratio absurdly high. let your winners run, and cut your losers quickly. We had a question come up from Daniel. I think he said, let's see, make sure I got it. Question. He says, are you trading stocks or options? We're trading stocks on these. However, most of these, especially the big, larger cap ones, do have options available. So you could choose to trade options on them as well. We have kind of an advanced trading for options. Excuse me, in our methodology, we recommend people start with stocks, and then they can move on to options once they get the basics down and kind of understand the additional level of complexity that options obviously offers to the situation. Okay, great question. So step number 3, how do we trade this mechanically and keep our risk-reward ratio absurdly high, let our winners run, cut our losers? Well, what we initially do is we set our initial stop as a few ticks or cents below the low of the day on our entry day, and not in a number that ends in 5 or 0. We set our stop and go away. We don't need to watch every tick. We're not day traders. We're in this for the swing trading, right? We want to get our trades on in the morning, and that's it. Either they work out or they don't. That's it. There's no fuss, no hassle, and we want to be in these trades as long as we can until we get stopped out. So then 3 to 5 days after entry, if we're not stopped at our initial stop, we sell 1/3 to 1/2 of the entire position and move the remainder of the position, move the stop for that to break even. The market's super choppy, or the position doesn't look healthy, or the sector looks like it's not continuing up, the other stocks in the sector aren't moving really well, you could sell 50% on day 3. Take some risk off the table, lock in some profits, right? If you're in a great trending market and the positions look A+, and you're super happy and optimistic about that particular position, just sell 33%, let the other 66% ride with a break-even stop, and see if you can turn it into a big winner. But of course, huge advantage is we're taking some of our risk off the table, and banking some of those profits. So you exit the remainder of the position on the first close on a daily chart below a trailing 10 SMA. Okay, that gives you a good chance to suck as much of this trend out of this trend as you can without without worrying about it too much. So the famous quote from Jesse Livermore, one of the greatest swing traders of all time. He says, after spending many years in Wall Street and making and losing millions of dollars, I want to tell you this. It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. So what he means by that is, once you're in a winning position, stick with the position. Stick with the position till it tells you it wants to go down. How would it tell you it wants to go down? Closes below the 10-day simple moving average. So let's talk about this risk to reward ratio. And this is quite simply why swing trading is far easier than day trading. Here's the problem with day trading. Now, I have no particular qualm or beef with day trading. On occasion I do day trade, but it is so much harder than swing trading. And here's why. Look at any day trading system that you can possibly find in. This is the reason. The reason why is a lot of day trading systems will say, okay, we're going to risk $5 for the potential to make $1. Well, if you do that, what does your break-even win rate have to be? It has to be 83%. That's why you see all these day trading services after, oh, we have a 70% win rate or an 80% win rate or a 95% win rate. Win rate does not matter in the slightest. Here's why. When we swing trade, we're down here at the bottom of the chart. Our minimum is down here. We want to risk 1 unit or risk $1 to make 5, or in a good market, and if we get good at this, we want to risk 1 unit on this side to make 10. If we do that, if we risk 1 unit to make 5, we only have to be right 17% of the time. If we risk 1 unit to make 10, we only have to be right 9% of the time. In this system that we're talking about here, we're right about 30 to 40% of the time across the board, in good markets and bad. In some months when we're in a good market, our win rate's like 80%. In other markets like this summer, where everything's been super slow, our win rate is like 25%. But win rate does not matter in the slightest. It's the size of the winning trades versus the size of the losing trades. That's all that matters. So this brings us into this whole concept of expectancy. So how many of you, give me a Y in the chat if you've ever heard of the concept of trading expectancy, or give me an N in the chat if you've never heard of expectancy. I just kind of want to see where we're at, if people know what we're talking about when we talk about expectancy. I mean, we're going to tell you about it. I mean, we're going to teach you about it, but I just want to see where we're at before we get there. Give me a Y for yes, an N for no. Well, we got an N from Daniel. We got a couple Ys, a couple other no's. Okay, so here's what expectancy. Expectancy simply is it mathematically viable? What if we took 1,000 or 10,000 or 1,000,000 of these same trades? What would we make on average? So let's say that, assume, right, we're talking about, we have a win rate around 30 to 40%. And let's be pessimistic and let's use 30%. Our winners, like we've talked about, should be 5 to 10 times the size of our losers. And let's use the worst case scenario. We're not very good at this, and we only find winners that are 5 times as big as the losers. Then we determine how much we want to risk in each trade. And this is crucial. If you do nothing else as a trader, you have to know exactly how much you're risking on every trade you put on before you enter the trade. This will totally change your trading, I guarantee it. So your R is your risk on each trade. Let's assume $100. So in this case, the expectancy would be 30% of the time you make $500, plus 70% of the time you lose $100. And that comes down to $80. You have an expectancy of $80. So what does that mean? That means on average, you risk the possibility of losing $100 on each trade, but over time, all these trades are added together, the winners plus the losers. Every time you take that trade, you make $80. As in, the $100 that you risk, comes back to your pocket, back to your trading account, and you put another $80 into your account. That's the average. So as long as the expected value is positive, even if that expected value was just $1, right? Should you continue to trade it? Absolutely, right? I mean, a $1 may not be worth your time, but you get my point. Anytime the expected value is positive, you should continue trading that system as many times as those opportunities come up. As long as the expected value is positive, right? In this case, it's $80, which is great. And you use proper risk management and don't put too much capital risk on any one particular trade, the account will grow over time. It's just a mathematical fact. So how many times would you want to take that same trade? That same trade has an 80% expectancy. How many times do you want to take that trade? Type it into the chat. 30% of the time, you make $500. 70% of the time, you'll lose $100. How many times are you going to take that trade? Has an expectancy of 80. Right. You would take it. You could screw up everything by not taking trades with ideal risk reward. You should take that trade as many possible times as come up. That is the #1 most common trading failure, is having huge losses and small profits. So let's kind of show you some recent trades using the same set of rules. This was on Zillow, 17% gain, Apps 26% gain, Fiverr 19% gain, Neo, that's the Chinese car manufacturer, 19.9% gain, DNLI 22% gain, Kirk 56% gain, Rig 15% gain. Tupperware, remember our famous Tupperware trade? That was an 80% gain trade. So just as a recap, here's what we've covered so far. We've covered step #1. We've taught you how to trade, scan for and trade the BMWs and Ferraris of the stock market. That's momentum stocks. Step #2, we've taught you to trade long, looking for one very specific, very learnable, easy to identify setup. It's called a high tight flag. Step #3, we've taught you how to keep your risk reward ratio absurdly high. Let winners run, cut your losers quickly. That's trading mechanically. That's exactly where we're at. That's exactly what we promised, and that's exactly what we delivered. So today I was faced with 2 choices, and now really so are you. It's going to be hard, almost impossible to create lasting change and results in your trading from what we talked about today. I've given you all the pieces, but obviously you'd have to put the scans together, have to get some experience, and there's many pitfalls along the way. Today's training is just frankly the tip of the iceberg of the potential and possibilities with this trading methodology. So that was the first choice. We could just part ways, and I've shared a ton of information, and this information alone has made other people millionaires from just what we shared right now. The second option is I could take a more active role in responsibility for success and create an ongoing, growing, and mutual rewarding relationship. I've already put together some shortcuts and support systems and additional insights that go even deeper. So I'd like to introduce to you in the last couple minutes that we have before we're done today is our stock trading science mentorship. The purpose of this is to establish a small core group of people that work on the same methodology together, and so that we can all benefit by sharing ideas back and forth. You find trades that I'm not finding, I find trades that you're not finding. Here's what you'll receive today if you decide to go ahead and join us. We're going to give you an unlimited lifetime membership that never expires. By unlimited and lifetime, we mean there's never any further charge for this membership. You could stay with us as long as the program exists. You're never going to be charged again. There's no annual fee. There's no monthly fee. There's no upcharge. There's no downcharge. It's all a limited lifetime membership. As long as we can continue to have it on the market and the website's up, it's your access. You pay for it one time, and it's all yours. Here's what you receive. We're going to give you the full video training. This is available in our members training area. We've got 6 recorded training sessions that cover the 3 core aspects of the strategy, the things we've already talked about, the scans, the setup and entry rules, the position sizing. And this is worth well over $1,000 just by itself, just the video training modules and videos. We also give you the software. This cost me multiple thousands of dollars to set up. I set up every scan, indicator, and setting you'll need, and completely running on your trading platform. It's available for Thinkorswim, TradeStation, TC2000, Metastock, and coming soon for TradingView. That's at least $1,000 value just to save you that time and hassle. I know if you guys mess around with setting up indicators and setting up charts and studies and all that kind of stuff, it can really suck your time to get it set up exactly how you like it. So this is what I'm going to give you. This is my full layout and workspace on Thinkorswim. We're going to give you the same thing. Looks almost identical on Metastock. We're also going to give you a Slack group. What a Slack group is kind of like a super advanced multi-thread texting platform. It's kind of like ability to, and the software is free. You don't pay anything for Slack either. It's our daily trading chat and notifications of setups. So we're not exactly a signals group. We don't just send you the signals and blindly expect you to follow them. But I do post when I take signals that meet all the rules that we're talking about. I just happen to mention, okay, I'm taking this trade, it meets all the rules, and other members are free to make their own decisions. Of course, other members come up with their own trades. Sometimes, there's trades that I don't take because they don't exactly match the rules, but they're close enough for other members to take, and they go ahead and take those, or depending on the situation, of course. That's a place to ask questions, to interact with our moderators. It's all through Slack, totally free, and that's most every day that the market's open. I'll be on there notifying you of, here's what I'm looking for today. Here's a watch list for this week. Take a look at this. Here's some potential ones for entry. Now, of course, ask questions as well and all that kind of stuff. It makes it super, super convenient because it's all there. It's indexed and it's searchable. If you ever have a question, I wonder, did we ever trade, Tilray? You can type it into the search and it'll show you all the times we mentioned that stock, all in the Slack group. And it's pretty handy. It's just a nice way to interact with the community without having to call in on a webinar, without having to call a specific time and place. You can do it totally at your leisure when it works for you. Middle of the night, you could ask a question. We'll get to it the next time we get on. It's very, very convenient. We also give you our trade journal. This is an updated Google Doc that shows all the moderator trades, as in trade that I or one of the moderators take, according to the system rules, along with the complete results. You can simply make a copy of this document. It cost me well over $500 in programming fees to get this all set up. And you can monitor and keep track of your own trades in there, as well as follow along with the trades that we take. We also have a live monthly customer support webinar. These are awesome. It gives us a chance once a month. We get together in the afternoon after the trading hours are closed. It's an afternoon in Pacific time. And we get on live in a webinar just like this. We use GoToWebinar. It gives you the opportunity to ask as many questions as you like. We stay on as long as you like. And until all questions are answered, we review all the prior month's trades. kind of state of the system, where we're going from here, all that kind of stuff. And it's a ton of fun just to get to meet two people in that kind of, not one-on-one, but in a small group setting. So all of this, the training, the software, the Slack group, the trade journal, the monthly webinars, total value easily over $5,500. If you go to our website right now, you'll see that it's listed at $2,995. That's the price that I sell it for when I have to run paid advertising. That's just the way that works, because I have to put on a bunch of money in ads to get leads in and talk to people and get them on board. So that's what we sell it for, $3,000. Of course, it's all backed by solid evidence, real world results. Of course, recent portfolios. This is in Thinkorswim. These are all trades that I've personally taken. 19% gains, 17% gains, 7% gains, 6% gains. It just goes on and on. 22% gains, 14% gains, right? It just goes on and on. And of course, like we've already mentioned, I'm going to show you one crazy screenshot, not my personal account. It's another colleague in the trading biz that trades the same strategy. And at one point this last year, just on his open trades, he was up $3.8 million unrealized gains. So how many times would you need to do that to have a decent trading career? Now, folks, he's trading exactly the same strategy that I'm teaching you here today, right? So this isn't rocket science. This isn't something I invented. This is a proven evergreen system that we're teaching you and mentoring you with. That's the advantage that we have. We're also going to give you every single closed out trade, winners and losers, since we opened the doors to the strategy in December of 2020. The last time we did an update, we were at 560% net gain, 36% win rate, average win of 26%, average loss of 5%, expectancy of 1.23 R. So that means for every trade that we put on $100 of risk, we made $123 back. That's across every single trade that we took. Winners and losers, of course. So of course, we're going to back this up with an ironclad two-part performance guarantee. Part one is pretty easy. Go through the entire training, participate, start trading live or in demo mode. In demo mode, you're not even risking $1 of real money. In demo mode, it's practice mode on your computer. They call it paper money on Thinkorswim. They call it something different. It's just demo mode. If you don't love it, get a complete refund anytime within 30 days of ordering. Just show us that you tried. Just show us that you went through the training and you took some trades in demo mode or live mode. And if you're not satisfied, we'll give you a complete refund. So I don't think we can be much more fair than that. Part two, learn the system, use it for a full 6 months, take the trades as they come up. If you don't make at least 10x the system investment, I'll personally work with you for free until you do. So when you invest in this program, I'm riding alongside with you. There's never another annual fee, monthly fee, and I want you to make at least 10x your system investment, or I'll work with you one-on-one over my cell phone number until you do. So either way, you love it, make good money, or you hate it and you get your money back. I don't think we can be much more fair than that. So walk with me into the future. You decide to claim the stock trading science mentorship for the one-time fee that we're talking about. This isn't the holy grail, but it does make it so much easier to trade when your losses and emotional turmoil have kind of gone away. You know what a good trade is. Your trading isn't perfect, but it's way more fun and still only takes you about an hour a week. So that is what we call in trading. You've arrived, you've made it, and it feels fantastic. And you can achieve all that simply by purchasing this program and getting on board with this. So I want to treat your bank account kindly today as a special for the Metastock people. This isn't some one-on-one deal or expensive one-time seminar where I could charge you $15,000 to $20,000, or an algorithmic black box software that could cost upward of $5,000 or $10,000 and then stop working after a year. Or unlike the total retail price of $3,000 that I have to sell it for when I advertise on YouTube or Facebook, I can do you one better. And that's quite simply $1,495. If you sign up by midnight within 4 calendar days today, $1,495, one-time fee, nothing more to pay forever. So to claim a spot in the mentorship, here's what you need to do right now. You need to go to either order online at stocktradingScience.com/order, or if you're on the fence, that's okay. I get it. If you're on the fence, and if you just have a couple questions, go to stocktradingScience.com/call, and you can book a 15-minute call with me directly, and we can talk. No BS. We can kind of see where you're at in your trading and your account, where you're at, And you can decide at the end of that call if it's right for you or not. I'm not going to convince anybody of anything. It's not a hard sell, nothing like that at all. Just to kind of see exactly where you're at. If you're in, go to stocktrading.science.com right now /order. You can get immediate access. 5 minutes after your order, you'll have your username and password. You'll be able to get in the membership area. You'll be able to start going through the training, and you'll be able to join us tomorrow morning as we go through our Slack group and we start talking about upcoming trades we've got. So this mentorship offer at the discounted price of $14.95 expires at midnight, 4 calendar days from today, no exceptions. Okay, this is what I want to give you. I want to give you, this simple setup that I've got here, right? I'm going to give you all the hours and years of effort that I put into my trading experience to give you this one simple setup, one simple page of rules that you can follow to make money with swing trading in the market, right? Expectancy is positive. It works over time. And we don't even require a crazy win rate. Over the summer, it's actually been kind of slow and our win rate's low. However, big deal. We're waiting for those big moves in the market, when the market turns a little bit more bullish, and we're going to have another wave of massive trades where we're up 50%, 100%, 200%. So questions and answers. Let's see. I'll take these questions from Daniel here, and then we can turn it back over to Jeffrey. I'm about done here, Jeffrey. I'm just going to ask you questions for a couple minutes, and we should be done. Jeffrey says,
totally fine,
as possible. Daniel says, how do you exit a winning trade? Do you set trailing stops? Yes, we exit the last part of the trade by having a trailing stop. The trailing stop, we put it below, kind of the 10 and 20 SMA on the daily chart. And when it closes below, or when it's going to close below the 10 SMA on the daily chart, we go ahead and exit the position. Great question, Daniel. How much capital do we need to get started? My recommendation is always more the better. I always recommend 5K. You can start with less than that. Of course, you're going to have to take fewer positions. What kind of computer do I need? Now, the great thing is, as long as it can run your trading platform, as long as it can run Metastock or Thinkorswim, whatever you use, that's all you really need for a computer. It doesn't have anything, because we're not day trading. It don't have to have a lightning fast internet connection. In fact, in the summer, I trade off a data connection off my cell phone. I don't even use Wi-Fi in the summer to trade, because you don't need to. I'm looking at a daily chart and an hourly chart. Do I really need Wi-Fi to place that trade? No, I do not. Right? Sometimes, we have a 15, 20-minute window to get in a trade. Wi-Fi doesn't make a bit of difference in that situation. What kind of brokerage account, trading software do you need? We've already kind of covered that. How does the guarantee work? We talked about it. The first part is pretty simple. I just want you to do it. I want you to go through the training. I want you to place a couple demo trades or live trades. If you're not totally satisfied, and only you can, that's up to you to determine. I'm not going to say you're going to have 5 winning trades or anything like that. We can't do that. All we can say is you're satisfied with the way that the method works. Who's the most likely to succeed? Who's the most likely to fail? My students that have had the most success are intermediate level traders that are just kind of sick and tired of trying to reinvent the wheel. They're people who just want, just tell me what to do and I'll do it to the letter. And those people then, after they get this down, then they can branch out. They can try other stuff. How long does it take to learn this and get good at it? I would say it takes a good 2 to 3 months. In that 2 to 3 months, hopefully you put on some winning trades, you put on some losing trades. You've seen some trades, you're like, I can see looking back, that wasn't as good a trade as I thought. You kind of get a little bit more wisdom and experience, but after a couple months, it just starts to repeat. You're putting on trades, you get stopped out on 60 to 70%. The ones that go are huge winners. You hold on to those as long as you can. Your count equity grows gradually but slowly, hopefully, and you're good to go. Why doesn't everyone trade this way? I have no idea. This is so much easier than swing trading or any other trading methodology I've ever seen. This is what I would teach my mother to trade. If my mother actually does trade a little bit, but I'm trying to get her to trade this way rather than any other way. So we've talked about everything we needed to. Make sure that you claim a spot in the mentorship. Again, stocktrading.science.com/order, or book a 15-minute call with Kurt directly, stocktrading.science.com/call. Now, just in the last 1 minute, I just want to show you that this is not just me or just not expert traders that can do this. I showed you some of my colleagues that are pretty dang good traders. But This is people like my buddy Brad. He's up 97% in 4 months. Never traded before.
All right, there you go.
My buddy Devin up 103% 6 months. He traded a little bit, but using this methodology, up 103%. My buddy Greg turned $1,000 into 101,000 in one trade. It's my brother-in-law, actually, 282% on one trade. This is another local buddy, 2K into 65K over 4 years, trading the same methodology. So, it goes on and on. It's not just me. So order online, stocktrading.science.com/order, or book a 15-minute call with me directly, stocktrading.science.com/call. Well, back to you, Jeffrey. Thank you so much for having me. I love the Metastock people, wonderful people as always. Thanks for having me on.
Okay, you bet. Thank you. Good to have you, Kurt. We do have one last question that just came in from Daniel, if you want to take a look at it real quick.
Oh, okay. Yeah, great question, Daniel. Because I use a cell phone to trade on TOS. Can I use your scan and service on my cell, or do you need an Apple computer? I'm an ex-Wall Street seasoned trader. Yeah, the nice thing, you can trade on TOS on your cell phone. There's kind of two paths to take. One path would be set up your home computer, or whatever computer you have that's running the full package of TOS. Have it set up so you can remote into it so you can kind of see everything. That's the most secure, best way to do it. The second way to do it would be initiate positions when you're in front of your desktop or laptop computer. And then, of course, you can monitor them and adjust them and things like that, of course, on your cell phone. I prefer kind of the first one, where I can remote into my computer so I can see the actual scans, all that kind of stuff. You can't get the scans on the TOS mobile platform yet. So that's the only issue. Great question, Daniel. Thanks.
Cool. Thanks, Kurt. I figured we wouldn't let that one go since it was coming in here. Long says, thanks for the presentation. It's really appreciated. So thank you. Appreciate it.
Awesome. Thanks for having me on, Jeffrey.
You bet. Thanks, Kurt. Always good to have you here. Okay, so let's go ahead and there's one other thing I want to show everybody. Really appreciate everybody for coming in here. We've been working pretty hard on this, and we're going to I'm just going to talk a little bit about it. We've put a little bit of time into this. Let me go ahead and share my screen real quick. So as you guys are well aware, we do a lot of these single day events. Every so often, we're going to actually put together like a big conference that we do. And right now, we're doing a couple of them a year. Coming up in November, we're actually kind of putting together a 5-day conference. It's going to have 33 different market professionals. It's going to have 36 hours of instructions. It's actually going to be really, really cool. We're going to run it now we're under development on this site, so it's almost ready. But we've put together just this huge event. It's going to be completely free. We're going to have a lot of prizes. We're going to have a lot of fun, and we're going to tell a lot of dad jokes. So I hope you can make it. We're going to run it from Monday, November 5th to Friday, November 19th. As we get a little bit closer to the event, we'll go ahead and send some details on that. In the meantime, if you want to get pre-registered for it, you can go to metastock.com/conference and click on the conference logo. It'll take you to the page. You can register now. We're not quite done with this site, but I wanted to kind of just show it off. We're getting pretty close with it, and we've got a really, really good 5-day lineup. So I hope you can make it. I do hope you enjoyed the event today. I do want to do one last. Okay, you can see the charts that I'm looking at right now. I do want to do one last thank you to Stocks and Commodities and CMT Association for sponsoring the events today. If you haven't, you have until Thursday, just in case you're watching it live, Thursday the 28th, to get your registration done for metastock.com/trader summit to get a free copy of Stocks and Commodities magazine, as well as any of the free bonuses that were offered today. Go ahead and do that right away. You have an extra day because that's when I'll be pulling all the lists together for everybody. I do also want to remind you of the Summit Action Pack that we've been doing. We're doing specials on everything that we've kind of done today in terms of the speakers and the guests and things like that. If you want to buy everything, you can get a huge discount, more than $3,000 off. That include RMO ATM, the training course, the Victory, the Magic Trader Elite, the Masterclass, Oscar Carboni's Masterclass, the Guy Cohen, learn MetaStock for 3 months. All of that's available. Normally it's like $5,000. You can get it today for just $19.90. So give us a call at metastock.com/summit deal. You can call us at 800-882-3040, and you can find us on at metastock.com/sales chat. I want to say thank you for coming today. I want to thank all of the speakers that we had throughout the day. I hope I appreciate their friendship and their support of MetaStock over the years. For you, I want to say thanks for coming. Stay healthy, stay safe, and I'll see you at our conference in November.